Good morning, everyone. So, how are you all? Good. So, how is your preparation going? Going good? Super. So, welcome to this 2-day marathon for CMA final, exclusively for CMA final. So, this is the first time I am taking actually. I mean, exclusively for CMA final. I have been taking classes for CA students, and I asked CMA students also to just watch that only. But I thought, okay, fine, I need to discuss separately certain things with you, because the level at which CMA final questions are not that difficult compared to which CA final is being tested. I don't mean to say that CA is superior, CMA is inferior, like that. You have 8 papers, they have 5 papers. So, this 8 papers effort is being tested in 5 papers. You understood? That's the reason why they are making the paper very difficult in CA exam. So, you don't have to learn everything as per CA, that is too much for you. So, for that reason only, so I thought, okay, fine, whatever is really required for you, I wanted to just cover in this 2 days. So, what is the agenda for this next 2 days? First, we are going to cover your supplementary study material for December 2025 exam. So, you are writing for December only, na? So, no one is for June. Anyone appearing for June? Okay, fine. This will be equally applicable for June as well, but first we are going to cover the supplementary study material, because of late in CMA exams also they started testing on amendments. So, I have observed the last 2 papers, they started testing on amendments which students will ignore and go for exam. What they do is that they read only study material, and your study material is very old, okay, and that too you have no study material. So, you can do good dumbbells and all like this, weightlifting. For weightlifting it is nice, because I don't know why they have given that many things, because around some 1200, 1400 pages of book, and a student really cannot read, and lot of clutter in the sense, lot of nonsense they have given, and then even mistakes. After going through the study material, I feel like a number of mistakes are there, and that too old law. Then preparing that, if you go for exam, no, so God only should save you. So that's the reason why study material will not work out, but this supplementary definitely it will work out. So because that covers the amendments that I am going to discuss, because mostly these MCQs are there now, your first 30 marks. For that first 30 marks, definitely it will be helpful. Even in descriptive questions also, 1 or 2 questions they will be making on amendments. Customs, we don't have any amendments, to be frank with you, except for 1 or 2 small amendments. Mostly the amendments are in GST only, okay. Then after completion of that, the second aspect what we are going to discuss, I am just giving you what and all we will cover in these 2 days. First, these amendments. Second, mighty 50 questions. So I have given some mighty 50 questions which is there in the website, and you can see in the downloads below here. So I think it's not there. I'll ask my people to upload it. It will be available here, and for you I will try to arrange a handout also. So 50 questions, mighty 50 questions, that also we are going to cover in this particular 2-day marathon itself, okay. After that, because these 50 questions are selected based on your past exam questions, like I have analyzed your past exam questions, based on that I selected some 50 questions, because at CMA final more importance is given for valuation, value of supply under GST, then even customs also valuation, and then input tax credit. Thereafter, even certain topics like this composition scheme, and so even this what is this registration chapter you don't have, so I have not taken any questions from that. This total computation of net GST liability, that questions, so that I have included, okay. So these 50 questions are really sufficient, and if time permits, we will do your MTP that past exam questions, etc. and all. So that's the agenda. Got it? So sufficient, na? This will give you overall picture about this. Meanwhile, in the break time or after class, whatever doubts that you have, you can ask me. Definitely, I will be able to help you. And this particular class which I am going to take, will be recorded, and it is already there in the live in YouTube. So even if suppose if you want to listen to it again, it is always there in my YouTube channel. You can again, like maybe before exam, if you want to quickly revise something, etc. and all, you can do that. Done. So can we start? Yes. So I'm just taking your this only, no? Study materials, where they will give supplementary, separately it is there, okay. Paper 19. So I didn't give anything because it was decent, and you can make note. Some summary points alone I will tell, that you can make note for your reference purpose. Yes. So this is your supplementary for your material, CMA study material, paper 19. For they have given it for June 2025 exam, and this will be equally be applicable for December as well. June exam as well as December exam, it will be equally be applicable. And you can see here, the first one is related to supply. Supply, you know, na? So supply, what is supply? The taxable event, that is an event on happening of which you need to pay GST, is known as supply. Like indirect tax is a event based taxation. On a particular event, we need to pay tax. Import, we need to pay customs duty. Export, we need to pay customs duty. Like that, supply is one event on which we need to pay GST. Income tax also same. So if you see, you know, like whenever there is a transfer of capital asset, so then there is a capital gain. On that capital gain, we need to pay income tax. So like that, usually taxation will always be connected to certain events. So the moment the event is triggered, we need to pay the tax. Like that, what is the event in GST? Supply. So this supply is given in section 7 of CGST Act. In that supply, supply includes, supply excludes, like that we have two categories. Supply includes, so they have given some 4 clauses, 7(1)(a), AA, B, C, like that. Includes and excludes, there is something. Now related to that, one issue is there, for that they have given a clarification. What is that issue? Let's try to understand the facts first, okay. I purchased a car, and I am taking that car, and usually when I purchase a car, insurance I will get for the car, and I am taking that car, and I am going, and some accident has taken place. Even if it is not my mistake also, definitely accidents may happen, because right now, you know, in the roads when we are driving, we don't have anything in control. One lorry will come, hit and go. So therefore accident happened. Now when accident happened, what will I do? I'll take the car for the garage or a workshop or a service center. I will give it over there. Now you tell me, who will bear the cost of it? Insurance company will bear the cost of it, correct? Now, there are two options for the insurance company. First, they will ascertain the value, that is whatever is the car is completely damaged. There is something called as IDV, insurance depreciable value. So they ascertain one value. Say for example, the value of that car they have ascertained as 10 lakhs. Now if they give me entire 10 lakhs, the remaining parts of the car will be there, na? That will go to insurance company. Is it clear? So I am giving my car, leaving my car, for which I am getting some money from the insurance company. How much I got from the insurance company? 10 lakhs I got from the insurance company. What is the treatment of this 10 lakhs in my hands? Is it supply or not a supply? First of all, this cannot be treated as consideration. This insurance claim cannot be treated as consideration. It is like a actionable claim. So therefore, it is not a supply. Clear appa? So whenever I give the leftover parts of the car to the insurance company, they have given me 10 lakhs. Insurance claim, it is called as insurance claim. Insurance claim, remember, is not a consideration, it is in the nature of actionable claim. So therefore, it is not treated as supply. Okay, this part clearer from my side. Now what insurance company will do with the leftover parts? Car damaged, but still it will fetch some value na. That is called as salvage value. Okay, va? This particular salvage value they will be getting by selling this scrap. So damaged car, parts, etc. and all, when they sell, they may receive. Say they receive 2 lakhs. What is the treatment of the 2 lakhs in the hands of the insurance company? Now who wants the parts, damaged parts? Insurance company. Now they are selling, when they are selling they receive some money. So that money which they have received will become supply under section 7(1)(a) and they need to pay GST on that. Got it? Clear? This is scenario number 1. Scenario number 2. Now the insurance company will say, boss, we cannot take the damaged parts of the car and sell it. We don't need that headache. Value is 10 lakhs. This car depreciable value is 10 lakhs. 2 lakhs we will reduce. We will give you 8 lakhs. The damaged car you only take. You got it? So all these will be agreed between the insured and the insurance company in the beginning itself, at the time when we sign, because whenever insurance we take na, so we will scroll everything, read all terms and conditions and we will sign, correct? We will not read because they will give some 100-page information. Who will sit and read? But all these things are agreed between the insurance company and insured in the beginning of the contract itself. So therefore insurance company has given how much to me now? 8 lakhs. Again that 8 lakhs is not a supply in my hands. Clear? Now insurance company wants this salvage or insured wants the salvage? Insured wants the salvage because I got 8 lakhs only na, 10 lakhs I did not get. So this salvage I will sell. You got it? I will sell. Will it become supply in my hands? Depends. Depends. Don't tell no, depends. How? We have one point called as 7(1)(a) supply, which says any activity for consideration in the course or furtherance of business. Now what is the activity? Salvage I am selling for a consideration. Is it in the course or furtherance of business? Definitely no, if it is my personal car, correct? If it is my personal car, it is not a supply. What if it is my business car? For example, I am in travels business, or that car I have purchased in the name of the company, etc. and all, then it's a business asset na. Are you getting? So it will come under in the course or furtherance of business and that will become supply under 7(1)(a). Is it clear? So that point only they have given. First we will read it and then we can summarize it and we will make note. Okay. See here. Clarification on taxability of salvage or wreck value earmarked in the claim assessment of the damaged cost to the motor vehicle. So wreck and salvage value in motor insurance claim, what is the taxability? Usually what happens, insurance companies provide service of insuring the vehicles for damages, etc. and all. It is a responsibility for the insurance company to either get the vehicle repaired or compensate the insured person as per the terms of insurance contract, correct? Now what is the clarification? No GST liability for insurance companies. When there is no GST liability for insurance companies? Correct. If the insurance company deducts the salvage value from the claim amount, the salvage owned by insured. As a salvage is owned by insured, in such case there is no supply of salvage by insurance company and hence no GST liability on the insurance company for the salvage value. Already I told you, because what they are doing in our example, 10 lakhs minus 2 lakhs, 8 lakhs they are giving. So therefore whenever we sell, that is insured sell, insurance company is not required to pay any GST on that. GST liability for insurance companies. When will there be GST liability for insurance companies? If the insurance company settles the claim for the full IDV. IDV means what? Insurance depreciable value or declared value without deducting the salvage value. The salvage becomes a property of the insurance company. The previous example, they paid me 10 lakhs, then that salvage belongs to the insurance company. In such cases, insurance company is liable to discharge GST on disposal or sale of the salvage. That's what they have given an example. Insurance company ABC, insured is Mr. Kumar, vehicle value is 5 lakhs, assessed salvage value 50,000, damage claim is 3 lakhs. even though 5 lakhs is there, but the damage claim is only 3 lakhs. So ABC Insurance Limited settles the claim by deducting the salvage value of 50,000 from the claim amount. So what they are doing, 3 lakh minus 50,000. How much they gave? 2,50,000. Now who owns the salvage? Insurance company ABC or Kumara? Kumar. So now the salvage remains with Mr. Kumar, who may dispose it. And no GST liability on ABC Insurance Limited for the salvage, since the salvage remains with Mr. Kumar and no supply of salvage occurs by the insurance company. But in this circular they missed out one point. What is the GST liability on Mr. Kumar? That's what I added. Based on law, I connected and I told you Mr. Kumar is required to pay GST on that, provided it is his in the course or furtherance of his business. Okay, then otherwise he is not required to pay any GST. Next, example 2, salvage retained by insurance company. Say insurance company XYZ, Miss Priya, declared value 8 lakhs, salvage value 80,000, total damage, complete loss of vehicle, and XYZ Insurance pays Priya full value. Full value means now who wants the salvage? Insurance company. Very good. The salvage is retained by XYZ Insurance, which is later sold for 90,000. The sale of salvage by XYZ Insurance is considered as supply, and insurance company is required to pay GST. So assuming 18% GST on this 90,000, they need to pay 18%. So that is 16,200. Now my question to you. The insurance company is selling this salvage to one person and they are collecting 90,000. On that 90,000 they are paying GST also. Am I right? Now you tell me, that GST, can the buyer take ITC? Yes. This point may be connected in exam. Got it? So this 16,200 can be taken as input tax credit by the buyer? Yes, provided this particular salvage is used in the course or furtherance of business of the buyer. Because input tax credit, we have one very important condition. So the purchased goods or services should be used in the course or furtherance of business, then only they can take ITC. So due to that reason, this 16,200, the buyer can take ITC provided they are using it in their business, otherwise they cannot take ITC. Got it? Next. So this is the summary that they have given. No GST liability when salvage is deducted from the claim amount, and GST liability. Now we will try to make note of this. Okay. So like a chart form you try to write down. Yes. So first we will see two scenarios. Okay. So insurance claim received. Insurance claim received by insured. So two combinations or two scenarios. What is the first scenario? Insurance claim received by insured. Insured means the one who is taking insurance contract from the insurance company. Okay. So insurance claim received by the insured. So without deducting salvage value, after deducting salvage value, suppose if it is without deducting salvage value, what is the treatment? Like who owns the salvage? Without deducting salvage value, so salvage owned by, very good, salvage owned by insurance company. Now suppose after deducting salvage value, who owns the salvage now? Insured. Salvage owned by insured. Okay. Now first case, if the salvage is owned by insurance company, what is the treatment on sale of this salvage? Salvage is owned by insurance company. When they sell it, should they pay GST? Yes. Sale of salvage hyphen treated as supply treated as supply to insurance company, under section 71A and GST payable. Suppose if salvage is owned by insured, they will be also selling the salvage, na? Sale of salvage. Now we will divide it into two. If it is a personal car or personal vehicle, if it is business vehicle. If it is personal vehicle, what is the treatment? Not a supply, correct? Not a supply and no GST to insured. Again, if it is a business vehicle, supply under section 71A and GST payable by insured or insurance company, GST payable by insured. In circular they gave that GST not payable by insurance company. Not payable by insurance company means who will pay? Insured may pay, okay. So GST payable by insured. Got the clarity here? So just this chart you remember, that is sufficient for this amendment, okay. Based on that, whatever extra points etc. and all, if it is asked in question, you write accordingly. Got it? Then can I proceed to the next one? So hope everyone finished making note of this. Yes. So the next circular is related to taxability of transaction of providing a loan by a overseas affiliate to its Indian affiliate or by a person to a related person. So here we need to understand something from the exemptions. Exemptions in GST is also a very important chapter, okay, because you cannot imagine CMA final question paper without exemptions in GST, okay. If you need exemption in GST, you should learn exemptions in GST, clear? So that is very much required, and don't skip that chapter and go. So there is one point in that exemption, that is, if there is any loan, advance or deposit for which the consideration is represented by way of interest or discount, that is exempted. So interest or discount on loans, advances, deposits is exempted. For example, I am giving you a loan for which you are giving me, repaying the loan along with the interest, that interest is exempted. Or if I give you advance, you give me interest, that interest is exempted. Or if I deposit, either fixed deposit, term deposit, saving deposit, I get an interest from the bank, that interest received by me is exempted. So discount and interest both are same only. Suppose if it is upfront, it is called as discount. If it is at the end, it will be called as interest. For example, what money lender will do? If you ask for 10,000 rupees to a money lender, that money lender will deduct 1,000 rupees and will give you only 9,000. But when you repay, you need to pay 10,000. So that 1,000 rupees is called as discount. Usually in case of factoring also, we come across this concept of discount. So what they will do is that first itself they will cut and they will give you the amount, and thereafter you need to repay the full amount. So the same interest, if it is at the end, for example, if you take housing loan or vehicle loan or personal loan, what you will do? If you ask for 10,000, they will give you 10,000, but you need to repay 11,000. So if the interest in the timeline comes at the end, it is called as interest. If it comes in the beginning itself, then it is called as discount. But the treatment of both will be same. Even discounting of bill of exchange, like that also one concept is there. So what will happen in case of discounting of bill of exchange? So they will be like taking a bill to the bank and they will give the bill to the bank. So bank will deduct the interest and will repay. That's how they call it as discount. Okay. So interest or discount, the treatment is same. What is the treatment? Interest on loans, advances or deposits is exempted. Correct? Now you are a holding company. I am a subsidiary company. Now I am taking loan from you. When I take a loan from you and I pay interest to you, taxable or exempted? You are in India, I am also in India. Carefully listen. See, I am just giving you the facts and I am explaining you, because there is no point in reading all these things. So first you need to understand the scenario. When you understand the scenario, you will understand why the provision has come, etc. and all, for that reason. Okay. So first, so what happens here is that I I'm a subsidiary company, you are a holding company, I take loan from you. When I take a loan from you, I pay the interest to you. That interest which you have received, you are also in India, I am also in India, taxable or exempted? Exempted. Why it is exempted? Just now I told you, interest on loans, advances, deposits is exempted. Clear? Whereas now you are outside India, you are holding company. Where are you? Outside India. I am subsidiary company. Where am I located? In India. Now also I take a loan from you. When I take a loan from you, I pay you the interest. Is it taxable or exempted? We don't have the exemption in this place. Why we don't have exemption in this place? That exemption what they have given for interest on loans, advances, deposits is only for a person in India, not for a person outside India. For a person outside India, it will automatically become import of services. You are outside India, I am in India, means it is import of services. In case of import of services, we have only one exemption, import of other than OIDR services. Other than OIDR, what is OIDR? Online information database access and retrieval services, that is online services is known as OIDR services. Other than OIDR services imported by a non-taxable recipient is only exempted, but here I am a company, I will not come under non-taxable recipient. Who will come under non-taxable recipient? Individual, trust, government. Only three people will come. Who will come? Individual, trust, government. So I am other than non-taxable recipient, I am a company. So therefore this is import of service and I need to pay GST. Now lot of companies in India which are taking loan from their holding company went to finance minister and made a complaint. Madam, if we borrow in India, we don't have to pay GST on interest, but when we borrow from our holding company outside India, why should we pay interest? For that reason this circular came, and they are telling, if at all there is a Indian subsidiary company which takes loan from the foreign holding company, so they will be paying only interest. That interest is not a supply. Is it clear here? Understood? So tell me, who are all the parties? Who is giving loan? Holding company. Where is the holding company located? Outside India. Who is taking the loan? Subsidiary company. Where is the subsidiary company located? In India. What is the consideration that they are giving? Interest. Supplier, not a supplier? Not a supply. Through this circular. Through this circular they are telling it is not a supply. So GST payable or not payable? Not payable. Why they have given this circular? Because if they take loan in India, that interest is exempted. Are you getting this? So just because they take loan from outside India, they don't have to pay GST. That's why they are telling, instead of exempted, they are telling not a supply. Okay. Now, what about other charges? When you take loan, you will pay some other charges, now documentation charges, processing fees, etc. What is the treatment of that in India if you take a loan? In India, if you take a loan, you pay interest, that is exempted. What about other charges? Documentation fees, processing fees, etc. That will be taxable. That will be taxable, correct? Same way, when there is a Indian subsidiary company which takes loan from a foreign holding company, and if they pay interest, it is not a supply, but if they pay any other charges, administrative charges, documentation charges or processing fees, etc., that will become supply. Got it? Understood? Now say this. Interest or discount charged on loan amounts is exempt from GST. When no consideration is charged for processing, administering or facilitating loan, processing fees which are generally non-refundable cover the administrative cost. For related entities, credit assessment may not be necessary and the administrative cost may be absent, distinguishing these services from those provided by banks or independent lenders. Even between unrelated parties, administrative charges might be waived based on the relationship. Therefore, no service or supply exists between related persons for processing, administering or facilitating loans, and no GST payable. However, when a fee is charged, okay, it qualifies as consideration for the supply of service and is subject to GST. So they have given first scenario, no fee charged for loan processing. So who gave the loan? ABC Global, located USA. And who took the loan? ABC India Private Limited. ABC Global Limited provides a loan of 50 lakhs to ABC India Private Limited. Interest is 5%. Processing fee, no processing fee, administration or facilitation fee. What is the GST implication? So on this 2,50,000 GST payable or not payable? Not payable. Okay. So it is exempt as per GST law. Since no processing fee is involved, there is no supply, hence GST is not applicable. Suppose if there is some fee charged, interest anyhow will not be there, correct? So actually in this circular they gave it as exempted, but really you have to write it as not a supply, because exemptions will not be applicable to a person outside India. Exemptions are applicable to a person in India. That's a mistake. Actually in this they have given it as a mistake, but when we write the summary we will rectify that. What about this processing fee 50,000? Chargeable to GST. Clear? So kindly make note of this. This is first amendment, what we have written so far. Now we are writing second point. So loan taken by whom? Loan taken by Indian subsidiary company from foreign holding company. Loan taken by Indian subsidiary company from foreign holding company. We will divide it into two. Consideration is only interest. Consideration is interest. Consideration is interest only. Consideration is processing fee. Processing fee or administration fee, any name, okay, administration fee, etc. Now when the consideration is interest, what is your answer? Not a supply. Not a supply. So you don't have to bother about this, leave it. Suppose if the consideration is processing fee, administration fee, etc., is it supply? Yes. Supply under section 7(1)(b). Why 7(1)(b)? 7(1)(b) refers to import of services for a consideration, whether or not in the course or furtherance of business, there it will come, supply under 7(1)(b). And whether Indian subsidiary company and holding company are related? Yes, they are related. When they are related, we need to determine the value as per rules. Got it? Usually we take transaction value. Transaction value means price involved in the transaction. For example, I am selling a pen to you for 50 rupees. That 50 rupees is the transaction value. But if the transaction is between related parties, we will not take transaction value, means the price involved in the transaction. Rather, we determine the value as per rules. As per rules, we need to take open market value, like how in income tax we use fair market value. Here it will be open market value that we will take. Is it clear? So therefore in this case value will be determined as per rule 28. Value as per rule 28. Rule 28 of what? CGST rules. Value as per rule 28 in brackets related party transaction. Related party transaction. So got the clarity? And in case of related party transactions, rule 28 very important rule, because at final level definitely they will touch upon this rule 28. So usually whenever there is a transaction between related parties, we need to first take open market value. What is open market value? On that particular day, the price between two unrelated parties will be taken as the open market value, which is like in income tax CUP, comparable uncontrolled price method, like that. In transfer pricing one method is there, like that. Got it? So we need to take that as open market value. But on that day, so practically that day we may not get the value. So then we will be going for LKQ, like, kind and quality. Like, kind and quality means similar, any nearest similar value will be taken. That is also not available. First OMV, if not LKQ, if not cost plus 10%. Cost, the cost of providing the service. We should ascertain what is the cost of providing the service. The data will be given in the question itself, plus 10%. Okay, that should be taken. that data also not there, then we will go with the residual value. Residual value means some value scientifically arrived by the taxpayer that we will take. That is called as residual value. So what are the 4 priorities? First one, rule 28. Whenever rule 28 comes, then we need to apply all these things. What are those 4? Number 1, OMV, open market value. If that fails, like, kind and quality. If that also fails, cost plus 10%. If cost plus 10% also gone, then residual value. Is that clear? Next, we have an alternative also. What is that alternative? That is, we will take 90% of the resale price. So I am selling to you, you are selling to an unrelated buyer. You are my related pa, I am selling to you. You are selling to an unrelated buyer. So that sale price into 90% will be taken as my value. Logic is what? You will be adding 10% profit. That is the logic. For example, I am selling to you for 100, but you are related. So this 100 will not be taken as value. You are selling to your unrelated buyer at 200. Now 200 into 90% is what? 180. That will be taken as my value, and my consideration on that I will pay GST. Is it clear? This is known as 90% of resale price. This option is also there for related parties. Either we can go for OMV, LKQ and cost plus 10%, etc., or we can go with residual value. Okay. Then option. What is that option? 90% of resale price. Between each invoice we can decide this. Got it? Next. So I am just connecting all concepts. Got it? So that it will be useful for you. Amendment means amendment alone you don't have to learn. You have to learn along with the connected concepts also. Got it? Yes. Is this exclusive for CMA final or merge with CA final? I am not merging here. I am doing it separately for CMA final only. Okay. That is why I am showing your material only, I am explaining. Okay. Then next. This is not there for CA students and all. This is only for you, it is given, because there are some concepts which are not at all there for CA final, which is there for CMA final, like goods related provisions. Goods related provisions they don't have. So this provision they have given. So exclusively for CMA only. See this, Institute of Cost Accountants of India. Okay. Next, see this. So some time back you might have heard of this, that rice, there is GST on rice, but a lot of people fought against it. How can you levy GST on rice? Rice is something which is essential, etc. and all. Then government has come out with a notification. That is this notification. If it is a packed rice means 1 kilo, 2 kilos, 5 kilos, like that, they do packing and they sell. On that packed rice, whether it is branded or unbranded, whatever it may be, because brand and all doesn't make any sense on rice. Will you buy the rice by seeing the brand? No. We buy the rice by seeing the seller. Yes. Because, you know, at my house also my wife will ask me to buy rice only from one particular place. Because, you know, like this raw rice, this ponni raw rice, and it will be good only if he is selling. So brand, he will sell different brands. That I know, he know, but my wife don't know. So she will ask me to go and buy from there only, I will buy from there only. Are you getting this? So therefore brand doesn't make, there are a number of brands, Stag brand, Yes brand, like that different brands are there. So that's why they made, whether it is branded or unbranded. If it is a packed rice, there is GST on that. Okay sir, up to what kg? 25 kg. Up to 25 kg bags, say this. So notification 3 of 2024 has clarified that supply of agricultural farm produce in package of commodities containing quantity of more than 25 kg or 25 liter shall not be considered as supply made with the scope of expression pre-packaged or labeled. So what does it mean? When there will be GST pa? GST will be only on up to beyond 25, greater than 25, greater than or equals to or greater than 25, greater than 25 only, not considered as pre-packaged or labeled, then it is exempted. Got it? Greater than. So that's how almost all rice merchants now start selling 26 kg bags. Because on 26 kg bags there is no GST. You got it? Greater than 25, 25 and half and all they cannot make now. So 26 kgs like that they are selling. If you go to D-Mart also, previously they used to pack in 1 kilo packets and they used to keep it there and we used to take. But now what they have done, you know, one big container they have kept. They are only asking you take a cover, pour the rice and how much ever you want you buy. That will come under pre-packaged. No, it is exempted. Is it clear? But in supermarkets, you go to Panamudir or etc. and all supermarkets, they sell 1 kg rice, 5 kg rice bags. Whether GST is applicable on that? Yes. Then, so they have given this. Measures Fresh Harvest Supplies, a supplier of agricultural farm produce, deals in wheat and mustard oil. The company wants to determine whether GST applies on certain supplies of their products after the notification. And is this notification only for rice or all other agricultural products? All agricultural products. I said example rice. I said example rice, but it is equally applicable for all agricultural products. Example, wheat, WHEAT, WEED. Okay, next. That is agricultural product. Wheat is also agricultural product only, but you know, not supposed to be sold. Got it? Next, mustard seeds, coriander seeds. Okay, all these will be coming under agricultural produce. All. Okay. Now they are selling wheat, 50 kg bags. Is it considered as pre-packaged and labeled? Yes. Yes or no? 50 kg bags. As per notification, agricultural produce supplied in package more than 25 kg do not fall under the category of pre-packaged and labeled. So for GST applicability, so will there be GST impact or there won't be any GST impact? So no GST is applicable on this supply. Is it clear? It is exempted. Then, so they have given one chart. It is package 25 kg or 25 liter, greater than that, yes, then no GST. If it is no, then pre-packaged and labeled GST will be applicable. Is it clear? So you just remember, is it applicable for all? Only for agricultural produce. Agricultural produce. What is agricultural produce means? Because clearly it is given agricultural farm produce. What is agricultural farm produce? Anything out of agriculture, the primary produce on which no processing is done, or some processing as is usually done by the cultivator. For everything it will be same, but here there is a confusion. Actually rice is not an agricultural produce. Rice is not an agricultural produce, only paddy is agricultural produce. But according to this notification, they are not restricting it only to agricultural produce, all products out of agriculture. You remember like that, all products out of agriculture. So write down third point. Sale of products arising out of agriculture. Arising out of agriculture. Sale of products arising out of agriculture. Divided into two. Sale of products arising out of agriculture divided into two. Greater than 25 kg or greater than 25 liters. Usually some goods and all will be sold like liters. Oils, this groundnut oil, etc. So what these farmers will do, they take the groundnut and they crush it, they do organic way of doing it, and they get then mustard oil, all these things. So that is greater than 25 liters. GST applicable or GST not applicable? GST not applicable. Suppose if it is less than or equals to 25 kg or less than or equals to 25 liters, GST applicable or not applicable? GST is applicable. Okay. Next. So this is one amendment, very good amendment. Let me give you the background of this. This amendment they have done in the Schedule 3. What is Schedule 3 of CGST Act? Exclusion from supply. There are some activities which are not treated as supply. What are those activities which are not treated as supply? Before this amendment, up to this amendment, so there is one mnemonic which you need to remember, spalled slope. Okay, that is one mnemonic which you need to remember. If you want, you can make note of that. Spalled slope. I think I have given one book note for you. It is there. You can see that. You can see there. Spalled slope. Page number, boss. Yes. One chart you might see like this. One chart is there, no? You can see this. So these are the activities which are excluded from supply. Yes, for sovereign functions. What is sovereign functions means? Panchayat, municipality, okay, under Article 243G or 243W of the Constitution will come under sovereign functions. Then P for post. Post refers to government post, constitutional post, nominated post. Can you give me example of government post? MP, MLA, that is. Constitutional post will be governor, then Supreme Court Chief Justice, that they will be coming. And nominated post will be appointed, like RBI governor, SEBI chairman. These are like some nominated post will be there now. Some government companies will, nominee directors will be appointed. They are all coming under nominated post. So whatever money that they are earning, not a supply. A for actionable claims other than HC block. So what is actionable claims means? Like bill of exchange, promissory note, these are all actionable claim. HC block refers to horse racing, casinos, B for betting, L for lottery, O for online money gaming, and G for gambling. So this HC block will come under supply or is excluded from supply? Coming under supply. That will come under supply. Okay. So HC block, H for horse racing, C for casinos, B for betting, L for lottery, O for online money gaming, and G for gambling. Then L, legal fees collected by court or tribunal. So court or tribunal will be collecting some fees. So like filing fees, court filing fees, that is also not a supply. Then land sale. Land is immovable property na. So on sale of land there is no supply. Even sale of building also there is no supply. But remember, when the building should be sold? After completion certificate. If the building is sold before completion certificate, that will not be coming under exclusion. That is covered under supply. Building is sold after completion certificate, means everything is complete and then they are selling the building. Then E, employee to employer in the course of employment. There is an employee who is providing service to employer, he is getting a salary, that is not a supply. Then death related, funeral, burial, then crematorium, mortuary, all post death activities, on that no GST. Then sale in high seas. What is high seas? Before import. Any sale that happens during the transit from outside India to India is known as high sea sale. On high sea sale also there is no GST. Then why there is no GST on high sea sale? Because example, I am importing and you are subsequent buyer. When I import, I transfer the document of title to you. You are going to clear from the customs. When you are going to clear from the customs, means you are only going to pay the customs duty. So I am relieved from payment of GST. Then liquor license by state government. In some states will be giving the license to sell liquor. Tamil Nadu, state government only will sell liquor. But in some other states, so wherein even Pondicherry you take, Goa you take, wherein they will give license to sell the liquor. So license fee received. On sale of liquor anyhow there is no GST. Why? Liquor is non-taxable supply. There is no GST on liquor, and that is any alcoholic liquor for human consumption. Then petroleum products. What are the 5 petroleum products on which there is no GST? Crude oil, petrol, diesel, aviation turbine fuel, and natural gas. Okay. Then, so but this is not liquor. This is liquor license to sell liquor by state government. No GST on that. It is not a supply. outside the country movement of goods. What is outside the country movement of goods? Goods originates outside India and terminates outside India. Example, I am a seller, you are my buyer. I have a branch in Australia, you have a branch in Germany. I am selling goods from my branch in Australia to your branch in Germany. Whether the goods are entering into India? No. So why there will be GST on that? So it is not a supply. Then warehouse goods under customs sold. So first I imported the goods, I kept the goods in the warehouse. Thereafter I transfer the warehouse receipt to you. Now you are only going to file the ex-bond bill of entry and clear the goods from there. Are you understanding this? So why should I pay GST? I don't have to pay any GST on this transaction because anyhow you pay the customs duty including GST on that. That is this warehouse goods under customs sold. These are the list of activities which were given in the past excluded from supply. Now to this list they have added now 1 point. So that is what 2 points they have added. Now already this list is there. Now 2 more points they have added. First point I am explaining to you. Listen. First listen to the background of this. Usually there is something called as co-insurance. Co-insurance means what? 2 or 3 or 4 insurers together will give the insurance contract to the insured. That is called as co-insurance. Example, you take Chennai airport. Chennai airport, how many crores it could be? How many crores? One Pakistan, one flight comes, one missile comes, and if they put in Chennai airport, how much loss? Some 600, 700 crores? Easily, correct? So they take a insurance for 1000 crores. One insurance company cannot give the insurance for 1000 crores. Am I right? Say 4 insurance companies together will give the insurance. Means if something happens, all these 4 insurance companies will take the risk equally. 250, 250, 250. 1000 crores versus 250 crores. The pain is less. So therefore, 3 or 4 or 5 insurance companies together will provide the insurance contract. This is called as co-insurance. But who will receive money? Out of these 4 co-insurance, one person will become a lead insurer. Is it clear? One person will become lead insurer. Say insurance company A, B, C, D, A is the lead insurer. All 4 is co-insurers. A is the lead insurer. Now, from the insured, the lead insurer will receive the insurance premium. Thereafter, he will share with other insurance companies. Got it? Now, whatever money that the lead insurer has received, he paid the GST. Again, he will share that with B, C, D. On that, whether B, C, D is again required to pay any GST, no, it is not a supply. Clear? You got it? So, lead insurer sharing insurance premium with co-insurers is not chargeable to any GST. It is excluded from supply. Previously, sir, previously it was chargeable to GST. Now it is excluded from supply. Is it clear? So say this. Paragraph 9, activity of apportionment of co-insurance premium by lead insurer to co-insurer for the insurance service jointly supplied by lead insurer and the co-insurer to the insured in co-insurance agreements, subject to the condition that the lead insurer pays the central tax, state tax, union territory tax and integrated tax on the entire amount of premium paid by the insured. So here New India Assurance bears responsibility for managing all tax obligations on the total premium. So consider a co-insurance policy for large commercial property valued 10 million. Now New India Assurance 40%, United India Assurance 30%, Oriental Insurance 30%. Now who is the lead insurer? New India. So New India only will pay GST on entire 10 million, that is 1.8 million, and thereafter they will receive some share. Now who will receive the share? United India Assurance and Oriental Insurance. Are they required to pay any GST? No. So they receive their share without any additional tax burden. Is it clear? So what is that we need to write? Just in 2 lines we will complete this. So write down point number 4, 4th amendment. Actually there is a difference between CA final amendments and CMA final amendments, because your cutoff date, their cutoff date, slight difference is there. You are writing in June 2025 na? Your cutoff date for amendments is November 30th. November 30th. But they are writing exams in May. So their cutoff date will be October 31st. So 1 month amendments usually, so those students who appear for CMA final will read CA final amendments and go for the exam. This 1 month they will miss. Actually this amendment came on November 1st. This amendment came on November 1st. Got it? So therefore it will be applicable for your exams in June itself, not for December. Are you getting this? Next. So we will make it like a chart form. So I told you there are insurance companies. Insurance companies. So how many insurance companies? 4 insurance companies. A Limited, B Limited, C Limited and D Limited. And there is only one insured. Okay, there is one insured. Now, these insurance companies together will provide co-insurance services. Co-insurance service. So they form as a consortium and they will be providing the insurance services. Now, who is the lead insurer? A Limited is the lead insurer. Lead insurer. So therefore, insured will pay money to A Limited, correct? Insured will pay money to A Limited. Say insurance premium of 10 lakhs is paid to A Limited because A Limited is the lead insurer. And thereafter, A Limited will transfer the money to B Limited, C Limited and D Limited. Share of insurance premium. So what is the treatment of this share of insurance premium? Supplier, not a supplier? Not a supply. What about A Limited? Pay GST on this 10 lakhs. GST payable by A Limited. Can the insured take ITC of this GST? Yes. If it is in the course or furtherance of business, they will take, otherwise they will not take. Who? That insured. Okay. So only relief is what? B Limited, C Limited and D Limited, who is getting the insurance money from lead insurer, they don't have to pay any GST. That is a simple treatment here. Clear? Then another amendment. So this is also added in schedule 3, exclusion from supply. So this is referring to ceding commission. So what is the reinsurance? So far we saw co-insurance. Now reinsurance. What is reinsurance means? You are the insurance company. First you gave the insurance contract to an insured. Now your risk is 100 crores. What is the meaning of risk 100 crores? Means if anything happens, you have to pay 100 crores out of your pocket. So you want to mitigate the risk. When you want to mitigate the risk, you will take the reinsurance with another insurance company. You are insurance company A pa. I am insurance company B. You take reinsurance from another insurance company, and whatever premium that you receive, you share that premium with me. Is it clear? Some amount you will share with me. Now, I am getting some business. Yes or no? I am getting some business through you. Correct? Am I getting some business through you? If I am getting business through any agent, I have to pay commission to him. Yes or no? If I get this business through some other person, I have to pay commission. Na? I got the business through you, so I have to give commission to you. Is it clear? Now, you have received 10 lakhs insurance premium. Out of that, you are sharing with me 5 lakhs. Out of this 5 lakhs, I have to give you 1 lakh as commission. So you are netting off and you are giving me 4 lakhs. Is it clear? First you have to give me 5 lakhs. Out of that 5 lakhs, I have to give you 1 lakh, which means net amount what I will be having is only 4 lakhs. So instead of giving 5 lakhs to me, you gave me only 4 lakhs. Is it clear? Now, what is the treatment in this case? Paragraph number 10, services by insurer to reinsurer. So, you are getting 1 lakh commission. So, insurer to reinsurer, for which ceding commission or reinsurance commission is deducted from the reinsurance premium. What is the reinsurance premium in our example? 5 lakhs. What is the commission? 1 lakh. So, how much you gave me? 4 lakhs. Okay. Subject to the condition that central tax, state tax and union territory tax and integrated tax is paid by the reinsurer on the gross reinsurer's premium payable by insurer to the reinsurer. So, I should pay GST on 4 lakhs or 5 lakhs? Super, pa. Very good. I should pay GST on 5 lakhs gross amount. Now, you got 1 lakh. On that, are you required to pay any GST? No. Why you are not required to pay any GST on that 1 lakh? Already I am paying GST on 5 lakhs. Previously, you were required to pay GST on that 1 lakh unnecessarily. Now, they have given it as not a supply. Are you getting this? So, is paid by the reinsurer on the gross insurance premium payable by the insurer to the reinsurer inclusive of the said ceding commission or the reinsurance commission. Got it? Next. So, they have given some example here. An insurance company, insurer A, enters into reinsurance agreement with reinsurer B. I told you already, you are insurance company A, I am insurance company B. Insurer A cedes 50% of its insurance risk portfolio worth 2 crore to reinsurer B. Reinsurer B pays a ceding commission of 10 lakhs to insurer A as consideration for transferring the risk. The ceding commission of 10 lakhs paid by reinsurer B to reinsurer A is treated as not a supply. Got it? Then, so one more example, HDFC Ergo General Insurance underwrites the insurance policy for 50 crore for a large commercial complex. Swiss Re, a global reinsurer, agrees to reinsure 50% of the risk under a proportional treaty agreement. Details of the agreement. Now, actually they have given lot of good examples and all. Na? It's not CMA Institute, it is ChatGPT. All this is from ChatGPT. So, CMA Institute is not having that much of talent in making like this. So, thanks to ChatGPT, because all this is in ChatGPT only. Okay. And simple, if you type this, no, same thing will come in ChatGPT. Seriously, it is taken because this RE is not there in India. RE like that we will not use. Foreign countries only will use. Million also we will not use. We will use lakhs, thousands. So, these examples and all purely ChatGPT has created. Okay. Fine, it's okay. At least they are putting that effort na, for doing this. So, Swiss Re, a global reinsurer, agrees to reinsure 50% of the risk under a proportional treaty agreement. You understood the mistake what they have done. First of all, the exemption is applicable only for Indian insurance company. Why they have brought in global? When they do copy little bit, brain we should use. That is the disadvantage of ChatGPT. ChatGPT makes mistakes. Okay, you cannot copy paste that. You have to use your brain. Risk transferred 50% of 50 crores, 25 crores. HDFC Ergo pays gross premium of 1 crore. Swiss Re agrees to pay ceding commission of 15 lakhs. So, the ceding commission of 15 lakhs is not taxable, but the reinsurer should pay GST on 1 crore minus 15 lakhs or only on 1 crore? Full 1 crore gross amount. Okay. Then, that is with respect to that, you can write down point number 5. So, this also I am writing in the form of a chart. Okay. Insurance company A, insurance company A, insurance company B, and insured. So, this insurance company A is called as insurer and insurance company B is called as reinsurer. So, what is the sharing ratio? 50%, 50%. Okay. Now, insured has given insurance premium 10 lakhs to insurance company A, and insurance company A will share of premium that is 5 lakhs, and insurance company B will give the commission to insurance company A, commission 1 lakh, commission 1 lakh. So this is the story. Now insurance company B pay GST on what? Pay GST on 5 lakhs. What about insurance company A? Pay GST on 10 lakhs. First they got 10 lakhs, first they got 10 lakhs na, on that they will pay GST. Again they are sharing 5 lakhs with insurance company B na, on that they will pay GST. So double taxation is there na sir? No double taxation, because insurance company B will raise invoice to insurance company A, which they will take as ITC and set off against GST payable on 10 lakhs. Means effectively they also will pay GST on, okay, pay GST on 10 lakhs minus ITC on 5 lakhs. Is it clear, pa? What about this 1 lakh, commission 1 lakh? Not a supply, excluded from supply. Clear? So there is insurance company A, which is insurer, will receive 10 lakhs from the insured. That 10 lakhs they will pay GST, that is their gross liability. Again they share 5 lakhs with insurance company B. Insurance company B will pay GST on 5 lakhs, which they will take as ITC. Who will take as ITC? Insurance company A will take as ITC. So net they will pay 5 lakhs only. And this commission 1 lakh they are giving, that 1 lakh is not a supply. Okay. Next. Can I proceed? Another one you see. So no refund of tax paid or ITC reversed. No refund shall be made of all the tax paid or input tax credit reversed which would not have been so paid or reversed had section 118 been in force at all material times. So they have brought in one section. Actually this section is of Finance Act, that is not CGST Act section. What is it about? Now when this activity is not treated as, here you see, not a supplier, then they will get ITC on 5 lakhs, ITC on 4 lakhs. That is a question. See, 1 lakh not a supply, means literally their inward supply is only 4 lakhs. Yeah, they are paying to insurance company B 5 lakhs or 4 lakhs. Insurance company A is paying to insurance company B 5 lakhs or 4 lakhs. 4 lakhs. They are not paying 5 lakhs, they are paying only 4 lakhs. But can they take ITC on 5 lakhs? Yes. No issue, they can take the ITC on 5 lakhs. Because we have one point in input tax credit. If you are not making payment to supplier within 180 days from the date of invoice, so much of the amount that you have not paid you need to reverse. Like that one point is there in input tax credit, you know that? Won't that be applicable here? I have an invoice for 5 lakhs given by insurance company B to insurance company A, but the insurance company A has given only 4 lakhs na, then proportionately 4 lakhs worth of credit only they should take, or they can enjoy 5 lakhs. They can enjoy 5 lakhs of credit, no issue. That is why they have given that amendment also. That's what I have written, ITC on 5 lakhs right there, even though they paid 4 lakhs. Even though they paid 4 lakhs. Even though they paid 4 lakhs. Okay. Next. So this 50%, This 50% is just an example. It can be 40%, it can be 30%, it can be 20% also as per the question. Okay. For example, I have taken 50-50 just for easy numbering, understanding purpose. So this you understood. ITC reversal point and all is not there on this commission. Okay. So just ignore this. Yes. So this is the amendments related to supply. Okay. Now we are moving on to the next area, that is levy and collection. In this levy and collection, there is a clarification relating to ESOPs. What is ESOP means? Employee stock option schemes. So what happens in case of ESOP? So you are my employee, I need to retain you. So when I need to retain you, I will give you ESOP, wherein every year along with salary I will also allot some options, employee stock options for you. You have to work for 5 years, then only you will be able to redeem those options. After 5 years, whatever options that I have allotted to you, when you redeem it, you will get the equity shares. Now after 5 years, you are becoming the equity shareholder of the company in which you started your career, so that the employees will be staying in that company for a longer duration. That's the reason why they give this ESOPs. Is it clear? Now, even though I am giving you ESOP, what is underlying? I am giving you option, but redeeming that option, what you will get? What will you get? Equity shares. Correct? Equity shares is goods or services, neither goods nor services, because shares are securities. Securities are neither goods nor services. So GST not payable on that. Correct? Now, to allot the ESOP to you, I take the ESOP from my holding company. Is it clear? I am a subsidiary company and you are my employees. I need to allot the employee stock options, for which I will take the ESOPs from my holding company. When I take from my holding company, I pay money to the holding company na. Whether any GST is payable on that? No. It is not a supply. Why it is not a supply? Because options will come under securities, derivatives. Derivatives will come under securities. What are derivatives? Futures, options, swaps will come under derivatives. So derivatives are treated as securities as per Security Contract Regulation Act, on which there is no GST. Is it clear here? This is similar to that loan taken from the overseas company. Okay. So subsidiary company taken loan from holding company, they paid only interest, not a supply. Correct? Same way here, instead of taking loan, what we are taking? ESOPs, for which we pay only the cost. That is not a supply. If we pay some extra charges, some administrative charges or some extra charges, will it become supply? Yes. So say this. So CBIC clarification, providing critical clarification relating to taxability of ESOPs, ESPPs, RSU, provided by companies to their employees through their overseas holding company. Nature: ESOPs are issued to incentivize employees as a part of their compensation package. Mechanics of transaction: the domestic subsidiary provides employees the option of ESOP as compensation. What employees can do? Either purchase the shares or hold options until they vest. The foreign holding company issues the ESOP to employees, transfer the shares directly to the employees. The domestic subsidiary reimburses the cost of shares to the foreign holding company on what basis? Cost to cost basis. What is the GST applicability? Securities are neither goods nor services, so it will not attract any GST. And company is giving ESOP to employees na. Whether any GST is applicable on that? No, because I told you employee to employer in the course of employment. Why are you getting that ESOP from me? As a part of your salary. Correct? As a part of your salary. So salary is not a supply. That's what they have given. Services by employee to employer in the course of employment, not subject to GST. Reimbursement of cost. When the domestic subsidiary reimburses the foreign holding company on cost to cost basis, not treated as import of service, GST not applicable. If they pay additional fee, or commission, that will become supply of service chargeable to GST on reverse charge basis. What is reverse charge means? Generally, who will pay GST to government? Supplier. But in case of reverse charge, who will pay GST to government? Recipient. Recipient will pay GST to government, that is known as reverse charge basis. Okay. So now, what is it you need to remember? Literally this chart, whatever we discussed, loan taken by Indian subsidiary company from foreign holding company, same type of chart we are redrawing. Okay. So point number 6. ESOPs allotted by foreign holding company to employees of Indian subsidiary company. ESOP is allotted by foreign holding company to employees of Indian subsidiary company. Now, this particular point we will divide into two. Indian subsidiary company, paid only the cost of shares to foreign holding company. Now, what is the treatment of this? If they paid only the cost of shares, treated as supplier, not treated as supplier, not treated as supply, not treated as supply. Then Indian subsidiary company, paid administrative fee for ESOPs to foreign holding company. Then Indian subsidiary company paid administrative fee for ESOPs to foreign holding company. Then what is the treatment of this? Supply under 7(1)(b), import of services, because person is outside India, supplier is outside India, recipient is in India, so it's an import of service, supply under section 7(1)(b). And whenever it is supply under section 7(1)(b), so GST payable under RCM, GST payable under RCM. How to determine the value? Rule 28, value under rule 28. Clear? So you remember this as well as that loan point, similar. Okay, both are in the same lines. Next, so they have given some examples. So foreign holding company XYZ Incorporation located in USA, domestic subsidiary company XYZ India Private Limited, employee Mr. A, XYZ grants to Mr. A 1000 shares under ESOP plan as a part of his compensation package. Mr. A exercises the option after 2 years. The market value of the shares at the time of exercise is 200. So XYZ India Limited reimburses, so 1 lakh. Why 1 lakh? How many shares? 1000 shares. And what is the price at which it is granted? 100 rupees. So 1000 into 100, 1 lakh on cost to cost basis. What is the GST on this 1 lakh? No GST. Correct? No GST is applicable on the transfer of shares. Suppose if they give only this 1 lakh, what if they pay some additional charges of 10,000 rupees along with this 1 lakh? Then that 10,000 rupees will be chargeable to GST under RCM. Clear? So then next one, next point. So they have, what are the goods which are excluded from supply, non-taxable supply, excluded from the levy of GST? Alcoholic liquor for human consumption and then petroleum products. In this alcoholic liquor for human consumption, they added one more point, that is denatured extra neutral alcohol and rectified spirits. These two are used in manufacture of alcohol. We have a lot of beverage industries, distilleries. What they do? They make alcohol. Alcohol is manufactured, na? We'll get from sky. Someone should manufacture alcohol, and that too Tamil Nadu is known for that. Both DMK as well as ADMK, both parties have lot of distilleries. That's the reason why all locals are only available in Tamil Nadu. You understood? Because they manufacture and they sell. And what is the raw material required for manufacture? Denatured extra neutral alcohol, DENA, okay. Then rectified spirits. These two are required for manufacturing alcohol. Are you getting this? Now, on this, whether GST applicable or not before this amendment? Yes, GST was applicable. Now I am making alcohol. On alcohol, no GST, but on my raw material there is GST. What is the point in that? I cannot take ITC. Why I cannot take ITC? Alcohol, no GST, when means I am not a registered person. When I am selling alcohol, there is no GST. When a person is making non-taxable supply, he is not required to register, correct or not? So, whatever GST I paid on my purchase of raw material, I cannot take ITC. For that reason, they are telling your raw material also now not subject to any GST. They are keeping it under non-taxable supplies. Okay. So, along with alcoholic liquor, what is the extra two you need to remember? Undenatured extra neutral alcohol or rectified spirit. What we will do using this? We will use it for manufacture of alcohol. Is it clear? So write down next amendment. Point number 7, non-taxable supplies. What are regarded as non-taxable supplies under GST? Non-taxable supplies under GST. This undenatured extra neutral alcohol only recently somewhere in Tamil Nadu they made this, and because they have not properly boiled it etc and all, they consumed it and they dead. Recently some news, Kallakurchi, correct. Okay, this and all you remember. What is section 9 of CGST Act? That you will not remember. Okay, so this that you would have heard of this news, na? Exactly what they did is that they purchased a raw material. Raw material was cheaper, liquor is costlier, raw material is cheaper. They thought we will buy the raw material and we will only make the cooking so that we can drink like that, people thought. So, but you have to properly do that. If you are not doing it properly, definitely people will die if they consume it. That's what they have done. That is the raw material which I am talking about. Okay. So, what are the non-taxable supplies under GST? First, alcoholic liquor for human consumption. What and all will come in this alcoholic liquor for human consumption? As if you are teetotalers, you are looking at me. Beer, rum, whiskey, brandy, everything will come. Cough syrup, sir, that also contains alcohol, na? Correct. But that alcohol will be coming under medicinal preparations, that is not part of alcoholic liquor for human consumption. Even paint, varnish also contain alcohol, but that is not for human consumption. That's why that will be subject to GST. Is it clear? Purely alcoholic liquor for human consumption, any percentage of alcohol. It can be 2%, it can be 4%, it can be 10%, any percentage of alcohol that contains, which is used for human consumption, will be excluded from GST. Means there won't be any GST on that. But is it covered under supply? Yes. I said it as non-taxable supply. Non-taxable supplies will be also treated as supply, means while counting aggregate turnover, whether we need to add this? Yes, don't forget. Because we have some questions on aggregate turnover computation, non-taxable supplies also will be added in aggregate turnover. Then what is next? they have brought and denatured extra neutral alcohol, undenatured extra neutral alcohol. Next, rectified spirits, undenatured extra neutral alcohol and rectified spirits, and as usual petroleum products. Okay, what are the petroleum products? Crude oil, petrol, which diesel? High speed, light diesel oil, high speed diesel. Then aviation turbine fuel, and then natural gas. Natural gas, your CNG, not LPG. On LPG there is GST. Okay, on LPG there is GST. The CNG, usually autos and all will be using a CNG, that there is no GST on that. So these two are newly added, this undenatured extra neutral alcohol and rectified spirits. So this they have added in both CGST Act as well as IGST Act. So it is common. Section 9 of CGST Act and Section 5 of IGST Act both speaks about levy. When will there be levy of GST? That is FCMA, RCMA, who will pay GST? All those things are given over there. Then next one, in many circulars they use the word as is, where is basis. What is the meaning of that? As is, where is basis. For example, now there is no GST on co-insurer receiving the share from the lead insurer, correct? But this point is applicable as is, where is basis. What about the past? What about the past? It was taxable. Now, just because you have brought this amendment, can I say that at the time I paid GST, give me the refund? No, they cannot. You understood or not? Same way, by mistake, if you have paid any GST on a transaction, and if they are telling that there is no GST on the transaction, but you have already paid the GST, that is gone. It is like gift you have given to the government. You understood? You give, thank you. What I can say? Thank you, thanks for paying. Simple. Same way, interest will be waived off. Interest, penalty and all will be waived off by government from time to time. But sir, I paid. Return filing late fee I paid. Thereafter government is telling late fee for delay in filing return is waived off. If you have not filed return, you file now without late fee, like that they are telling. But already I paid. Thank you. Gift. Okay. Don't expect a refund from the government. So all these provisions are applicable on as is, where is basis. Okay. Confusion among trade and field officers regarding the scope of as is or as is, where is basis in GST circulars addressing rates and classification of goods or services. So GST Council has given a circular. So what is the regularization? Applies to case of genuine doubts or diverse interpretation. Example, two competing rates in notifications. Payments made at lower or nil rates are accepted as full compliance. No refund of GST paid at higher rates. That is, there are two rates for the same transaction. I mean same product or same service, two rates are there. Because of some mistake, I paid the GST at the lower rate. Usually I need to follow whichever provision is beneficial to me. But some other person paid the higher rate. Will he get the refund? No. So he paid a higher rate. That doesn't mean that he should get a refund. See there. No refund for GST paid at higher rates. Is it clear? Next. In GST, as is, where is means tax paid at a lower or nil rate is treated as full discharge of liability based on taxpayer returns. Past payments at lower rates are regularized without penalty promoting fairness in case of genuine misinterpretation of GST law. Now they are giving a clarification telling that you have to pay this rate, etc. But in the past I don't know, so I paid the lower rate. Now in that case, so should I pay any penalty, etc.? No need to pay any penalty. Okay, same way, those who paid the higher rates, will they get any refund, etc.? They will not get any refund. You understood now this concept? Super. Then, so this ensures uniformity and clarity for taxpayers. So write down this point, point number 8. As is, varies basis, as is, comma, varies basis, as is, comma, varies basis. What is the meaning of that? Tax paid at lower rate or not paid, tax paid at lower rate or not paid before applicability of a circular, before applicability of a circular, tax paid at lower rate or not paid before applicability of a circular, comma, is regularized and additional tax or interest or penalty should not be collected. Is it clear? Having said this, this is beneficial side. Negative side, if a person has paid, if a person has paid more tax before applicability of a circular, before applicability of a circular, he shall not get refund of excess tax paid. It is like penalty for over compliance. Who asked you to do over action? Okay. So that's how they have given this. Simple rate confusion will be there, whether 12% or 18%, and some people will pay at 12%, some people will pay at 18%. Then they will give a circular stating that the applicable rate is from today we are changing it to 15%, like that. Now when they are telling 15%, those who already paid 12%, can we recover extra 3% from them? No. Those who paid 18%, can we give refund of 3% to them? No. So balance. Okay. We do bad also, we do good also, and we balance that. Okay. Then that is this. Say this. In a situation where certain taxpayers have paid 5% GST on supply of X, while some have paid 12%, the GST Council recommends reducing the rate to 5% prospectively and regularizing the passed on as is varies basis. This means for the period prior to 1/12/2023, the 5% GST paid by the taxpayers will be treated as full tax paid, and they would not be required to pay any differential duty of 7%, because this rate has been prospective only now, but retrospective effect will be given to it. Is it clear? But from which date 5%? 1/12 only 5%. Before this date there was a confusion about 5 and 12. Already those who paid 5% enough, they don't have to pay any differential 7%. Okay. For those taxpayers who paid 12%, there will not be any refund. Okay. So that is this. Then next illustration. In a situation where certain taxpayers paid 5% on GST on the supply of X, while some have paid nil duty due to genuine doubt that there was an exemption entry. GST Council recommends classifying the applicable rate as 5% and to regularize the past in as is various basis in view of the prevailing genuine doubts which is notified on 112. This means for the period prior to 112, those who did not pay GST, can we recover GST from them? No. Non-payment of GST and declaring such transactions are exempted will be treated as full discharge of tax liability, and they would not be required to pay differential 5%. And for those who already paid 5% etc. and all, there will not be any refund. Okay, so that only they have repeatedly given multiple examples. So with this we have completed that chapter also. Just you need to remember this paragraph, that is sufficient for this. Okay, next, reverse charge mechanism. In RCM they have brought in list of goods which are covered under RCM. Are you aware of list of goods which are covered under RCM? What are the list of goods covered under RCM? You can see that in your book. Can you find this page number? You see there. So first you can see raw cashew nuts. Can you find raw cashew nuts in the chart? This is a different chart what you have. Raw cashew nuts, then tendu leaves, tobacco leaves and raw cotton. Can you see that? 4 products. What are the 4 products? Raw cashew nuts, tendu leaves, tobacco leaves, raw cotton. Who supplied it? By an agriculturist. Supplier should be agriculturist. Recipient should be registered person. It is covered under RCM. What are the 4 goods pa? See, there is a table. I am making the table simplification for you to remember. Okay, what are the 4 goods? Raw cashew nuts. Next, tendu leaves. Next, tobacco leaves. Next, raw cotton. All these 4, what is common? Supplier should be agriculturist. And who should be the recipient? Registered person. It's there, no? In the table it is there. Okay, fine. Then next one. Can you see essential oils other than those of citrus fruit? Okay. And who should be the supplier? Supplier should be unregistered person. And who should be the recipient? Registered person. Then also it will be covered under RCM. To that list they have added one point, that is metal scrap. They have added one new point, that is metal scrap. Metal scrap sold by whom to whom? See here, supply of metal scrap by whom? Unregistered person. To whom? Registered person. Is covered under RCM. Got it? So therefore first you need to write this. So what are the list of goods covered under RCM? This chart you please make note. This chart you please make note. Goods notified under section 9 subsection 3. This is next amendment. What is this amendment number? 9. Write down in your notebook. Amendment number 9. List of goods under RCM. List of goods. List of goods under RCM. Whenever you are writing about RCM, you need to give the reference section 9 subsection 3 of which act? CGST Act. Read with. There is one notification number you need to remember. Read with notification number 4 of 2017. List of goods under RCM, section 9 subsection 3 of CGST Act, read with notification 4 of 2017. So how you need to remember this? First you need to remember it goods wise, okay. First, what are the goods? I told you. Raw cashew nuts, not cashew nuts. Raw cashew nuts. What is raw cashew nuts means? Not peeled or shelled, before peeling, shelling, like only after peeling it, shelling it, inside only we have cashew nut, okay. But I am not talking about that. I am talking about raw cashew nut, which is sold by the agriculturist, that stage, okay. Raw cashew nuts. Next, raw cotton. Then tendu leaves. Tendu leaves. Tendu leaves is used for BD. They take the leaf, they put the tobacco and they roll it. That's how the BD they will make. Then tobacco. Tobacco leaves. This tobacco leaves also same. They take the tobacco leaves, dry it, crush it and put it into the cigarettes and they sell. That is this tobacco leaves. So raw cashew nuts, raw cotton, tendu leaves, tobacco leaves. Sold by whom? By agriculturist. To whom? To a registered person. To a registered person. By agriculturist to a registered person. Okay. Next one pa. Essential oils other than those of citrus fruit. Essential oils other than citrus fruit. Other than citrus fruit. So this essential oils other than citrus fruit means peppermint oil, eucalyptus oil, etc. and all will come under essential oils other than citrus fruit, because these essential oils are used for the purpose of smoking. Like you would have seen this hookah and all, you know, hookah, then vape, etc. So they pour the liquid and the vaporizing will happen and they smoke it, okay. For that purpose they use other than those of citrus fruit, okay. Essential oils other than citrus fruit. Next, latest amendment, metal scrap. Sir, any metal, sir. It can be, you know, like iron, steel or zinc or aluminum, any metal scrap, any metal scrap. By whom to whom? By an unregistered person. By an unregistered person to a registered person. By an unregistered person to a registered person. So this is a new amendment, this metal scrap point. What if metal scrap is sold by registered person to registered person? Not covered under RCM, it is FCM. FCM means who will pay GST? Supplier will pay GST. Only if unregistered person is selling to registered person, the recipient has to pay GST under RCM, okay. So that is what they have added newly. Then what are other goods? So you can see here lottery ticket. Lottery ticket sold by government to lottery distributor. So you can write here, I will write lottery tickets. Lottery tickets. Who will sell the lottery tickets? Government. Always government only will sell lottery tickets? Not necessary. In some states, government only will sell lottery tickets. In some states, private people also will sell the lottery tickets. Kerala, government will sell the lottery. But in other states like Assam, etc. and all, private people will sell the lottery tickets. Government will just give the license. Now in this case, when normal person is selling the lottery tickets, it will not come under RCM. Only government selling it to whom? Lottery distributor or agent, okay. So lottery tickets by whom? By government. Which government? By state government to lottery distributor or agent. Lottery distributor or agent. Next one, used vehicles, used or seized vehicles, then are scrap, etc. Used or seized vehicles or scrap, etc. by government to registered person. Usually government will seize some vehicles, seize some goods. What they will do with that seized vehicles and goods? They will sell by way of auction. So that also comes under RCM. By government. See, when I say government, it can be central government or state government. By government to a registered person. By government to a registered person. Then there is something called as PSLC, Priority Sector Lending Certificate. PSLC, Priority Sector Lending Certificate. So there is one query to one friend. Sir, is cotton not an agricultural produce? Basically, raw cotton is agricultural produce only, but cotton which is processed, raw cotton means you would have seen one seed will be there, one big seed will be there, to that cotton will be attached. They pluck the cotton, they process it, convert it into a roll form and they sell it. That is processed. I am talking about raw cotton. Raw cotton means agricultural stage. Okay. Won't that be coming under exemption, sir? Won't that be exempted? No, that is not exempted. Not all agricultural produce is exempted. Only certain food grains, etc. and all is only coming under the exemption. But we have some taxable agricultural produce also. This teakwood is there, teakwood, that is taxable. Rubber, which is an agricultural produce, taxable. Like this, these are also taxable. But only thing, agriculturist will not pay. Who will pay? The one who is buying will pay. What if the one who is buying is unregistered? Agriculturist, I am agriculturist, I am selling the raw cashew nut to you. You are unregistered person. Will RCM be attracted? No. No RCM. Then FCM. But agriculturist is exempted from registration. So they don't have to pay any GST. Is it clear or not? Remember, agriculturist is always exempted from registration. They are not at all required to register and pay GST. This for your information. So priority sector lending certificates means usually one bank, when they need some money, that is every bank will have a priority sector lending obligation. For example, I have collected 100 crores from people. Out of that 100 crores, 30 crores I should give as loan to priority sector. What is priority sector? Agriculture, then MSME, then housing loan, education loan. All these will come under priority sector loans. I have to give priority sector loans at least 30 crores. What if I am not able to give 30 crores out of 100 crores as priority sector loan? My banking license will be cancelled. For that reason, you are another bank. You have to give 30%, but you gave more than 30%, means you have overachieved. So I will buy the priority sector lending certificate from you, which means as good as I have given the priority sector loan. Is it clear? So one bank will sell the priority sector lending certificate to another bank, on which GST will be payable under RCM. Got it? So priority sector lending certificate by one bank to another bank. By one bank to another bank. Okay. So you can see here we covered this, lottery tickets used. Then one more point is there, silk yarn by silk manufacturer to a registered person. So one last point, somewhere you write down, silk yarn. Silk yarn. Silk yarn means, you know, na, from the silkworm cocoons we extract the silk thread, that is called as silk yarn. Sold by whom to whom? By silk manufacturer to a registered person. So these are the list of goods which are covered under RCM. Actually one point only amendment, that is this metal scrap, but I have explained you the entire thing so that in case if you get any question you will be able to apply this. Can I proceed? Now see this. So we completed this point. Metal scrap, supply of metal scrap by an unregistered person to a registered person will be covered under RCM, and they brought in even TDS also on metal scrap. So this TDS, not income tax TDS, GST TDS at the rate of 2%, provided the metal scrap is sold by a registered person. Carefully listen. Metal scrap sold by registered person to registered person, then only TDS will come. FCM or RCM? FCM, and TDS also will be applicable. So now you need to prepare one table. So this is connecting point to this, that's why I am asking you to write here itself. Point number 10, supply of metal scrap, by URP to RP, by URP to URP, by RP to URP, by RP to RP. You understood? What is it? URP is unregistered person, RP is registered person. Now you need to know what is the charge and TDS. Now URP to RP, who will pay GST? FCM or RCM? Metal scrap, unregistered person to registered person, FCM or RCM? RCM. TDS not applicable. Why not applicable? For applicability of TDS, remember the supplier should be registered, then only TDS will be applicable, otherwise TDS will not be applicable. Second case, charge, no GST. Why no GST? Between two unregistered persons, if there is any transaction, there is no GST. So as there is no GST, the question of TDS will not arise. Then by registered person to unregistered person, FCM or RCM? FCM. TDS not applicable. Why TDS not applicable? Recipient should be registered, then only TDS will be applicable. Then by registered person to registered person, charge FCM or RCM? Registered to registered, FCM, and TDS, yes, applicable at the rate of 2%. Okay. So we'll take a break for some time, then we will continue with the discussion. Okay. So around some 10 amendments we have covered related to this, and along with that the connecting topics also I have discussed. So we will continue with the remaining amendments after 15 minutes. Yes, enough now, 15 minutes break. Yes, thank you. And is this flow okay? Increase speed, decrease speed, you are understanding? Super, thank you. Okay, we'll start. So actually, if you see the index of this book, whatever I have provided to you, this is mapped to your CMA study material. So all these chapters, like whatever I have given, is connected to your CMA study material. There are few chapters which you don't have. In case if you have any CA book, etc. and all, ensure that you are not reading those topics because you don't have that. So this basic concepts apply, levy under CGST, IGST, exemptions, time of supply, place of supply, input tax credit composition scheme, all these things are normal. Payment process, returns. Registration chapter is not there. Tax invoice, debit notes and credit notes also not there for CMA final. Registration chapter not there. Tax invoice, debit notes and credit notes, like that one concept, because that already tested at CMA intermediate level. Due to that reason, they are not giving at CMA final level. Okay. Then, but this accounts and records, e-way bill, refunds, assessment, search and seizure, demand and recovery, appeals, advance ruling, anti-profiteering, that much only there. But other topics and all you don't have. Like in CA book, if you have ethics, like that one chapter is there, that and all you don't have for CMA final. Then in customs, actually basic concepts and all they have removed at CMA final level. So taxable event under customs, classification of goods under customs, types of customs duty, this already they tested at intermediate level. That's why at final level it starts with exemption under customs, valuation, procedures, baggage, warehousing, refunds, and these two are extra topics, duty drawback and SEZ, and foreign trade policy normal, whatever you have. So topics which are not applicable for CMA final, if you ask me, not applicable for CMA final. So registration is not applicable, registration under GST. Then tax invoice, in the tax invoice you will also come across e-invoice, dynamic QR code, then debit notes, credit notes, etc. that is also not there. Then next, this ethics related provisions also it's not there. Then in customs, taxable event under customs, then classification of goods and types of customs duty. So these topics are not applicable for CMA final. By chance, if you are reading any CA final book, ensure that these topics you are not covering, not required. If you read also, it is waste of time. And what is exclusive for CMA final? So CMA final, certain two chapters which is not there in CA but they have added is these two chapters, duty drawback and SEZ provisions, these two only. And from these two SEZ provisions, rarely one MCQ they will ask. And duty drawback, yes, chance is there they can make one question. Okay. So this are the topics that you have, because one student asked me like what are the topics which are there, that's why I discussed this. Voice not coming up to everyone, same issue are online live, those who are attending, there is no issue from my side, maybe you check. So now let's continue with the further amendments. And one student is asking, sir, are you going to cover only this? This itself, if I cover too much here, see the number of pages, 138 pages is there, pa. So far we covered only 14 pages. You understood? That many amendments are there. This itself, if I cover, na, who knows, maybe 30 to 40 marks will come from this itself. Because I am not touching the amendment only. I am touching the amendment and the related concept. Okay. So that's why. Now let's see this renting of immovable property. There is an amendment related to renting of immovable property. We have RCM provisions and even exemptions also applicable. So in one chart, we will make note of exemptions and RCM, everything. Okay, directly you can write down. There is nothing to explain there. While writing itself, I will explain. So write down in your notebook. You just turn the page and write down, because it's a very big chart. A very big chart will come. So please write down accordingly. This is 11th one. 11th concept. What we are trying to understand is the exemptions and RCM related to renting of immobile property. Okay, so write down, first give a heading, renting of immovable property. Renting of immovable property. This renting of immovable property divided into two: residential property and commercial property. Broadly it is divided into two. Turn the page and write. Very big chart it will be, so don't complain. Okay, so renting of immobile property, residential property, and then commercial property. So first we need to understand what are the exemptions. Remaining cases it will be taxable. Okay, so what is the exemption for renting of residential property? We have 3 exemptions. Previously 2 exemptions. Now we have 3 exemptions. In these 3 cases, renting of residential property is exempted. Okay, so how to determine, sir, whether it is a residential property or a commercial property? For exam purpose, it will be given in the question itself. In reality, we need to see the type of construction. Type of construction. In the type of construction, they will mention whether it is a residential construction or commercial construction. Every construction we get a plan approval now from local authority. In that plan approval, we can identify whether it is a residential property or a commercial property. But in exam, it will be mostly given. House means definitely it is a residential property only. Now, residential property, what are the 3 exemptions? So point number 1. So residential property for residential purpose, to an unregistered person, any unregistered person, he can, like that person can be individual, or that person can be firm, or that person can be company, any unregistered person. But it is for what purpose you should be giving? It should be given for residential purpose. Sir, what is the meaning of residential purpose? Temporary stay will not come under residential purpose. The intention to stay should be permanent, then only it will be called as residential purpose. For example, you take a house on rent, temporary, 30 days, 15 days, like that, no. The intention to stay there is permanent, so it's a residential purpose. Suppose if you take hostel you stay, permanent intention or temporary intention to stay? Temporary, that will come under commercial purpose. Same way, hotels we stay, temporary purpose or permanent purpose? Temporary, that will come under commercial. Is it clear? Hostel, hotel accommodations will come under commercial purpose. Normal house which we take on rent, that only will come under residential purpose. Why will a company take house, sir? For their employees to stay. For their employees to stay, they take a guest house. So that will come under residential purpose only, but given to whom? Given to a unregistered person. Okay, then only it will be exempted. What if it is given to a registered person? Not covered under exemption, first point. But we have another exemption which says if the residential property is given for residential purpose to a registered individual for their family stay. But when it comes to registered, they are giving exemption only to an individual for their family stay. For example, I am a registered individual. I take a house on rent for my family stay. Whether this particular transaction is taxable or exempted? Exempted. What if I take this house on rent for my employee stay? Will it be taxable or exempted? Taxable. For that individual family stay only, it will be exempted. Are you getting this? So next point, for residential purpose, to a registered individual. This is important part. Only for individual they are giving this. To a registered individual, that too for their family stay. Sir, what if he has multiple families, sir? Oh, how many families it may be, that many exemptions he will get, okay. But family, it should be family, legally family, got it. Nowadays, many things are happening. So, all those things will not be called as family, that is something else, okay. Next, third exemption, this is newly added point. So, usually hostels and all will be there, now hostels, hotels and all, for them also they have brought in one exemption, but minimum there should be a 90 days stay. So, means you take a hostel, accommodation, 90 days minimum pa, not maximum 90, minimum 90. And how much should be the value? Less than or equals to 20,000 rupees per month, then the hostel fees or accommodation charges will be exempted. Is it clear? Usually, you know, you are, all of you are from Chennai? Yes, but lot of people might come from outside Chennai and stay in hostel. Anyone staying in hostel here? Super, very good. So, when you are staying in hostel, how much, sir, you will pay per month? Less than or equals to 20,000 only, na? Definitely it will not cross. If it is crossing, better take 1 BHK house on rent and you can stay in that, correct. So, definitely it is less than or equals to 20,000. But you have to stay for a continuous period of 90 days, more than 90 days. Is it clear? More than 90 days, greater than or equal to 90 days. Then only the exemption will be available. What if you stay for 60 days, but monthly charges is less than or equals to 20,000, taxable or exempted? Taxable. Two conditions should be satisfied. What is the first condition? Minimum stay of 90 days, subject to maximum 20,000 rupees per month per person. Why per month per person? Usually hostels and all will be on a sharing basis. If you see hostel fees is say 8,000 rupees for one person, 3 sharing, 8,000 into 3, 24,000, which is more than 20,000, correct? Then the exemption is available or not available? Available. We should not see for the room, we should see for the person. Is it clear? So, accommodation services for a minimum period of 90 days, subject to maximum 20,000 per person per month. So, these are the 3 exemptions that we have. First one, for residential purpose to an unregistered person. Next one, for residential purpose to a registered individual for their family stay. Third one, accommodation service for a minimum period of 90 days subject to maximum 20,000 rupees per person per month. In these 3 cases, it will be exempted. In these 3 cases, it is exempted. All other cases will be taxable. All other cases will be taxable. Now, we need to understand who will pay GST. It is taxable, but who will pay GST? Now, say this, RP to RP, RP to RP means registered person to registered person, RP to URP, then URP to RP, then URP to URP. Now, tell me, RP to RP, who will pay? RCM. In case of residential property, if the recipient is registered, it will be covered under RCM. Clear pa? In case of residential property, first exemption you need to check. After checking the exemption, then you need to check the charge. See, if it is not exempted, it will be taxable. Then what is the condition for RCM? In case of renting of residential property, renting of residential property to a registered person will always be RCM. Remember RRR, a movie came, no, RRR, remember that. Residential property, residential purpose to a registered person is RCM, RRRR, okay, 4 R's you remember. residential property, residential purpose to a registered person will be coming under RCM. Is it clear? Then, so whenever it is residential property, it will always be RCM if the recipient is registered. If the recipient is unregistered, then FCM. Sir, when recipient is unregistered, you said that it is exempted. No, sir. That is if it is for residential purpose. What if it is for commercial purpose? Then it will be taxable, correct? Can you give me example of residential property for commercial purpose? Doctor will take a property, house on rent and convert into clinic. Advocate take a house on rent and convert into his office. Correct? Cost accountants, practicing cost accountants also take a house on rent and convert into their practicing firm. Correct? So all these are example of residential property used for commercial purpose. Okay? So that will be taxable. That's what. See, when you see everything together now, you will get confused. First, check exemption. If it is exempted, write exempted. If it is not exempted, you need to write taxable. Then it is taxable. Who will pay GST? That differs. Okay. Then URP to RP, recipient unregistered. So, recipient is registered. So, RCM. URP to URP, no GST. Why there is no GST? Just now I told you that between two unregistered persons, if there is any transaction, there is no GST on that. Got the clarity related to residential property? You will not forget now. Now, for commercial property, we have only one exemption. This accommodation services is there na? That is common for both residential property and commercial property. For commercial property also same exemption is there. What is that? Accommodation services. Accommodation services for a minimum period of 90 days. Minimum period of 90 days. How, sir? Sometimes the employees will be sent on office trip, office visit. They will be deputed to one office or the branch which is in another state temporarily for some 4 months, 6 months like that. At that time what company will do? Company will take a hotel on rent for continuous 6 months and this employee will be asked to stay in that hotel. So hotel means commercial property, yeah. But that is also given for a continuous period of 90 days where daily charge is 800 rupees. 800 into 30. 800 into 30. How much? 20? What is your answer? Taxable, because per month it exceeds 20,000. Suppose if they charge only 500 rupees per day. So how much? 30 into 5, 15,000. It does not exceed 20,000, then it will be exempted. Is it clear? So the same point what we have seen for hostel is also applicable for hotel. Okay. So for a minimum period of 90 days, subject to maximum 20,000 per person per month. Per person per month. This is exempted. This is exempted. And other cases, it will be taxable. It will be taxable. Now again you need to check the same way. What is that? Registered person to registered person, then registered person to unregistered person, then unregistered person to registered person, unregistered person to unregistered person. In this one you can easily say, which one? Last, no GST. Why no GST? Unregistered to unregistered. What about the first case? Now there is an amendment. For commercial property, remember, if supplier is other than registered, that is supplier is unregistered and recipient is registered, then only it will be RCM. Is it clear? For residential property, what is the condition for RCM? Recipient should be registered. That's it. For commercial property, what is the condition? Two conditions. Supplier should be unregistered and recipient should be registered. So only in this place it will be RCM. In other places it will be FCM. Understood the difference? So you can see here there is a difference. Okay. So tell me, what is the condition for RCM, residential property? Only one condition. What is the one condition? Recipient should be registered. For commercial property, what are the conditions? Supplier should be unregistered and recipient should be registered. Then only it will be RCM, otherwise it will be FCM. Got it? So definitely there is a possibility that they may play with this in MCQ, because in MCQ it will be confusing, you may not be able to answer it, they will play there. So they will tell which of the following transactions is covered under reverse charge mechanism, A, B, C, D. There we will just definitely get confused. Okay. Can I proceed? So this is about renting of immovable property, one chart that you need to remember that covers exemptions as well as RCM. Now I will show you all these amendments, how it is connected. So this point already we discussed. TDS 2% will be imposed on supply of metal scrap in B2B transaction. What is the meaning of B2B transaction? Registered person to registered person. Okay, that is sale to a registered person. Then GST payable under RCM on renting of any property, that is immovable property other than residential property from unregistered supplier. With effect from 10th October, GST under RCM shall be payable if the supply of renting of any immovable property other than residential dwelling. Other than residential dwelling means property. Dwelling means property. Other than residential property means which property? Commercial property. From an unregistered person by any registered person. So for commercial property, what is the condition for RCM? Supplier should be unregistered. Recipient should be registered. It may be noted that if supplier is having a turnover above the threshold limit of 20 lakhs, he would be required to register and pay taxes. Entry has been inserted to provide GST under RCM. So entry 5AA provides for GST under RCM to be paid on renting of residential dwelling by a registered person, supplier being any person. So for residential property, what is the condition? Supplier can be any person, but recipient should be registered. Okay. So that is this. They have given type of property, residential property. Supplier registered or unregistered? Don't see. For residential property, don't see supplier. Whom you should see? Recipient. If the recipient is registered, it will be RCM. Clear up? We have written that. Next. Commercial property. Supplier unregistered. Recipient is, then only it will be RCM. What if supplier is registered? FCM only. That's what I have also given. If the supplier is registered, definitely it will be FCM. If supplier is unregistered and the recipient is registered, then only it will be RCM. Understood this? Next. So composition scheme, there is only one amendment, that is GSTR 4. Every person who is opting for composition scheme, who will opt for composition scheme? There are two composition schemes. 10.1 like that one composition scheme is there, 10.2a composition scheme is there. 10.1 composition scheme is for manufacturer, trader and supply of food service provider, only food. Whereas 10.2a is applicable for manufacturer, trader, any service provider. Okay. Both the people who are under composition scheme are required to file an annual return. What is the form for annual return? GSTR 4. GSTR 9 is the regular annual return for a normal taxpayer. For those who are under composition scheme, it will be GSTR 4. What is the time limit for GSTR 4? Earlier time limit was 30th April of the succeeding financial year. Now they modified it to 30th June. Okay. For financial year 24-25 onwards, that is only applicable for you. Okay. So for financial year 24-25 onwards, the due date of composition taxpayer to file GSTR 4 is extended to June 30th, following the end of the financial year. So that also you write down. Point number 12. Annual return for composition scheme. Annual return for composition scheme. Annual return for composition scheme. What is annual return for composition scheme? GSTR 4. And what is the due date? Due date is June 30th of next financial year. For example, financial year 24-25, what is the due date? 24-25, 30th June 2025. 25-26, 30th June 2026. Earlier was 30th April. So in some books that you have, it may be 30th April, but it is amended to June 30th, 30th June, okay. Then previously there was two sections, 73-74. Now these two sections are merged into one section, that is 74A. What is this 73-74? First you should be knowing. Whenever there is non-payment of tax, non-payment of tax means you are required to pay tax, but you have not paid tax. Short payment of tax, short payment of tax means you are required to pay tax, but you paid less. Then wrong availment of ITC, wrong availment of ITC means you are not supposed to take the credit, but you took the credit. Example, there are some inward supplies which are treated as blocked credits, but you will take ITC. For example, you purchased goods used for personal consumption, you should not take ITC, but you will take ITC. Lot of people who purchase mobile, washing machine, fridge for their home, they will give GSTIN of their business or their friend's business, etc. and all, and they will take the credit, but it is used for personal purpose, so that is also an offence. That is wrong availment of ITC. Wrong utilization of ITC. Wrong utilization of ITC means you took the credit, but you should not adjust, but you have adjusted. Is it clear? Means you should have reversed. You have not reversed, you adjusted with your liability. So that is wrong utilization of ITC. Fifth one, erroneous refund. Erroneous refund means you are not supposed to get the refund, but you got the refund. What are the 5 offences, pa? Non-payment of GST, short payment of GST, wrong availment of ITC, wrong utilization of ITC, erroneous refund. Previously, if it is on account of fraud, fraud means what? Intention to commit. You have intention to commit, guilty mind. Then section 74, like that one section was applicable for recovery of tax and levy of penalty. If it is other than fraud, means error. You know the difference between fraud and error. What is the difference between fraud and error? Intention. You have intention to commit the mistake, it is fraud. You don't have intention to commit, by mistake it happened, then it will be error. If it is unintentional, then it will be 73. Now these two sections are merged into one single section, that is 74A, which is applicable for your exam. Section 74A will be applicable for your exam. Got it? And the provisions related to 74A you should be knowing, which will come at a later point of time. I just gave you the clarity now, and all those provisions I have given because that is applicable. As I told you, this is applicable from 1/11/2024. This attempt, why I took this marathon, why am I discussing these amendments, is mainly because of this reason. Because approximately 15 amendments were applicable from 1/11, which none of the CMA final student will read and go, because almost in India every CMA final student will depend on CA final lectures only. Because CA final only competition is high, every faculty will put the amendments, everything in YouTube. CMA and all rarely you will find, okay. So because competition is not there, now we will start. Automatically everyone will also put, okay. See, someone should start somewhere. So in 2020 I started that. Until that point of time in English YouTube no one was putting anything. 2019 I started my YouTube channel. I started putting lot of content for CA. Now everyone is putting. So I feel proud. Good. Something good has happened. Now I started So in the next 1 year you see how many people will put in YouTube. Good. Benefit is to the students. So someone you should start. Why I started this attempt? Mainly because of this reason, that from 1/11 many amendments came. So this amendment is also from 1/11. Are you getting this? And 74A is applicable for your exam. So you get all questions based on 74A, the new section, okay. Then exemptions under GST. So when 74A comes, again I will discuss that, don't worry. Clarification on GST regularization for supply of pulses and cereals made to or by agencies engaged by government. Generally ration shops, they do distribution of pulses. Have you seen that? In ration shop dals and all will be distributed. What government will do for distribution in the ration shops? They purchase it from the manufacturers. Okay, for them this circular will be applicable. So scope of applicability, goods covered. What are the goods covered? Pulses and cereals, only these two. Packed in unit containers, bearing a registered brand name or any brand name, on which an actionable claim or enforceable right exists in court of law, and these supplies are attracted at 5% GST. So what are the goods that we are talking about? Cereals and pulses, sold in unit containers. Unit containers means packets, and with brand name or any brand name, either registered brand name or any brand name. Udayam, you know, Udayam Tur Dal, registered brand name, got it? That brand name is registered, Udayam, like that, registered. And some local brand name will be there, KPN stores, like that. That is not a registered brand name, but even then brand name is there. Normal packet, transparent cover, in that 1 kilo we are putting, will it come under this 5%? No. Normal cereals and pulses, again that is the reason why in DMart they will never sell with any brand name. Dal also they will put in a container and you pour it and you put the sticker and you pay accordingly, got it? Sticker means, again don't think label, sticker means price sticker. So any brand name or registered brand name. The regularization applies for the period 1/7 to 17/7 for supplies made to or by any agency engaged by union government, state government or union territory under government approved program or scheme, free of cost or at subsidized rates. Okay, and that is from 1/7/2017, beginning of GST law till this date they are regularizing. What is the meaning of regularizing? We discussed here, regularizing as is varies basis. What does it mean? If some people have not paid GST 5%, are they required to pay? No. If some people have paid more GST, then will they get refund? That's it. So that is this. All disputes or issues regarding GST liability for the specified period will be regularized. If GST was paid during this period, no refund will be provided. If GST was not charged, no further demand will be raised. Okay. Now, what is the condition for regularization? Certification requirement. To avail the benefits of regularization, the supplier must furnish a certificate from the officer of deputy secretary rank or higher, and the certificate should confirm that supplies were made under government approved program or scheme and the goods were distributed to eligible beneficiaries, that is ration shop. The certificate must be submitted within 180 days from the date of the circular. What is the date of this circular? 15th July 2024. From there within 180 days. Reversal of ITC. ITC is not allowed on inputs. If they have already availed the ITC, it must be reversed within 180 days from the date of this circular. Is it clear? And what is the objective? Mainly to regularize this. Now, first, who is the supplier? Not government. Any agency notified by government. Who is the recipient? Government. Government means central government, state government, local authority or union territory. Okay, what is the product that is supplied? Pulses or cereals. What is the rate of GST? 5%. What type of goods it is? Like branded or unbranded? Branded. Registered brand or any brand? Any brand. Loose form or packed? Packed. Remember, packed and branded. Cereals and pulses, packed and branded. What is the rate of GST? 5%. And so before this date, what is the effective date from which this is applicable? 17 July. 17 July is the effective date of applicability. Circular date is 15, but effective date is 17 July. What about before 17 July? If you have not paid, no need to pay. If you have overpaid, no refund. And you need to submit a certification. Certificate you should get from whom? Deputy secretary rank or higher. Okay. And what is the time limit within which it should be submitted? 180 days. These are the key points you need to remember. Okay, Papa? Next. This regularization aims to resolve interpretational issues and provide complaints relief to suppliers and agencies involved in government approved schemes. They have given one example to understand, but already we understood this. Okay, we will just make note of this concept. Just write this chart so that you will understand everything in this chart itself. Point number 13. Supplier is government notified agencies. Government notified agencies. And who is the recipient? The recipient is government. When I say government, either central government or state government or union territory or local authority. And what is the product that is supplied? Pulses and cereals packed plus branded. Any brand, correct? I did not say registered brand, any brand. Any brand, branded any. What is the rate of GST? GST at the rate of 5% with effect from, this effect from date you should remember here, 17th July 2022. Now, before this date, before 17/7/2022, GST not paid. Payable or not payable? Not payable, provided certificate from Deputy Secretary filed within 180 days from this circular. Simply you remember this, from this circular. Suppose if GST paid in excess, no refund. Again, this amendment is also not there for CA final. Okay. You don't know what is there, what is not there. You go to the exam, you see the question paper, something new is there. You feel like, I read and went, but nothing is there. Whatever I have read is not there. Everything is new. So at that time you feel like paper is difficult. Actually, paper is not difficult. Paper is same. You did not cover and go for the exam. So that's why many times I will be telling, first just check what is the syllabus. See, there is a complete difference between the way CMA exams is asked versus CA exams is asked. Because I have done both. So that's why I am telling you, CMA exam is like this. Everything you should read. You don't have to go deep. Everything you should read, at least like a summary, and you should go for exam. But CA exam is like deep. So like this, vertical. You have to learn everything in detail and go deep. Selected topics, but you need to go very deep. But CMA is not like that. CMA is like this, horizontal. Fully you should cover and go. So that's why if you want to be successful, know what are all the portions which are there. At least in a summary form you try to understand and go for the exam. Okay. Next, can I proceed? So this is the example which they have given. All these points we have covered. Now look into the next exemption, like next amendment in the exemption. Services provided by Ministry of Railways, Indian Railways to individuals. What are exempted? Previously, for railways, we have one exemption for railways, transportation of passengers by railways other than AC or first class is exempted. Okay. So, what is other than AC means? Sleeper class, general ticket, reserved, that and all will be coming under exemption. First class always taxable, let it be AC or non-AC. AC, any class will be taxable. First class AC, 2-tier AC, 3-tier AC or AC chair car, everything will be taxable. Other than first class or AC will be exempted. Then another exemption for railways is metro, mono and tramway is exempted. If you translate, if metro, Chennai metro, there is no GST on that, it is exempted. Monorail means bullet train, and tramway means on the road itself they lay down the track. Aerial tramway means to the uphill, okay, that tram is also exempted. Example, in Palani temple there is a tramway, na? So to the temple from the ground, that tram is exempted. Any tramway will be exempted. Okay. Next, what about goods transported by Indian Railways? All these are before amendment. Before this amendment, I am telling. So if there are some specified goods transported by Indian Railways, that is exempted. There are 6 specified goods. What are those 6 specified goods? Agricultural produce, food grains, including flours, pulses, milk and salt. Then next, organic manure. Organic manure means using cow dung and all, they make the manure, instead of fertilizers they use that. Then relief material for natural or man-made disasters, newspapers and magazines, defense and military equipment. These are the 6 notified goods transported by Indian Railways, it will be exempted. These were the 3 exemptions which we have before the amendment for Indian Railways. Now they have added some more, that is platform tickets. Usually when you go to drop a person or pick up a person in the railway station, you need to take a platform ticket, you know that? Not taking platform ticket, you have to pay a fine of 1000 rupees. So fine you have to pay. So that's why take platform tickets and go. Okay. And that platform ticket previously was taxable, now it is exempted. Then clock room charges. Have you heard of this clock room? What is clock room means? Not waiting, keep the things. You will keep the things, luggage, etc. and all. For that also you pay some charges, exempted. Waiting hall. Waiting hall charges also previously it was taxable, now it is exempted. Then battery operated cars, these buggies, small vehicles, they will pick from the entrance and drop to the platform. People, you know, who are unable to walk, old people, etc. and all, they will transport, and for that if they collect any charges, that is also exempted. So what are the 4 platform tickets, waiting rooms, clock room, battery operated car services. But this is provided to only individuals. Of course, these are given to individuals only, correct? That is exempted. Then next exemption for railways is one zone or division providing services to another zone or division. Usually railways are divided based on zones. Like you know, our Southern Railways is one zone, South Central Railways is one zone, Eastern Railways is one zone, like that. Then again in that division will be there. We say junction, na? So Basin Bridge Junction and Perambur Junction, Jolarpet Junction, like that junctions and all will be coming under divisions. Between one division to another division, one zone to another zone, or one zone to another division, if there is any services between them, that is also exempted. Read the point. Services provided by one zone or division under Ministry of Railways to another zone or division under Ministry of Railways is exempted. Then next one is related to special purpose vehicles. So what is this special purpose vehicles? Say for example, in railway station there is a requirement of an escalator, and that escalator is constructed by one company. So one company has constructed the escalator, and Indian Railways will allow the people to use that escalator, for which Indian Railways has to pay some charges to that company. This charges which is received by that company will be exempted. Okay, Papa, can you remember this example? There is a company, what that company is doing? Constructing a escalator. Where? In railway station. So they create a infrastructure, okay, and that infrastructure is used by Indian Railways, for which Indian Railways is required to pay some money. And is it forever they need to pay? No, for a period, that is called as concession period. And what will happen after concession period? The entire escalator belongs to Indian Railways. Is it clear? Simple BOT model: build, operate, transfer. Road and all, many companies, construction companies will lay down road, and they will recover the money in the form of toll charges. What will happen after that? They have to leave the road to Government of India. Got it? Same model. So first a company called as SPV, Special Purpose Vehicle. Services provided by Special Purpose Vehicle. To whom they are providing services? Ministry of Railways. What they are doing? By way of allowing Ministry of Railways to use the infrastructure built and owned by them. Built and owned by whom? Railways or SPV? SPV, Special Purpose Vehicle. For what period? During the concession period, against consideration is exempted. Is it clear? Understood the first point? Now, continuing to this. Now, this particular escalator, who should maintain? Now, say for example, let's step into the shoes. You are the SPV. You own the escalator. I am Indian Railways. I am paying you some charges. Now, this escalator maintenance, who should do? SPV or Indian Railways? Who owns it? SPV. Who should maintain? Correct? You should maintain. But I am maintaining. Why I am maintaining? Because I have lot of engineering with me. I have foreman, engineering, repair people, everyone I have. Indian Railways has every kind of person, correct or not? Even though it is your infrastructure, I am maintaining it. You should maintain, I am maintaining. As I am maintaining, I will collect some charges from you. Your obligation, I am incurring, means I will collect some money from you. From whom? SPV. That is also exempted. Continue. Service of maintenance supplied by, who supplied? Ministry of Railways. To whom the maintenance service is provided? SPVs. In relation to the said infrastructure built and owned by SPVs during the concession period. There are two exemptions here. Okay. So that is with respect to this. Kindly make note. Exemptions with respect to services by Indian Railways. Point number 14. Exemptions with respect to services by Indian Railways. All these things you have read before? No. Okay, fine. So I am explaining which is useful for you. Give some reaction, otherwise I don't have to waste my time. I can proceed to next. Okay, because appearing from your face, you feel like you have not learned anything of this sort. You are listening for the first time. That's why I made it little slow. Okay. So exemption with respect to services by Indian Railways. What is the first exemption that we have discussed? Transportation of passengers. Transportation of passengers in other than AC or first class. Transportation of passengers in other than AC or first class. Next one, transportation of passengers in metro, mono or tramway. Then transportation of specified goods. What are those specified goods? Agricultural produce, or food grains In food grains, all cereals, pulses, rice, everything will come. Okay, food grains including flours. Flours means powder, gram flour, maida, atta, etc. Okay, including flours, comma, pulses, milk and salt. Only milk, not milk products. Only milk transportation is exempted. Then organic manure, newspapers and magazines, relief materials, defense and military equipment, These were old. Now what they have added is services to individuals. What is that services to individuals? Platform tickets, then waiting room charges, clock room charges, then battery operated vehicle charges. Next one is what? One zone or division to another zone or division. Next one small chart you make note. There is special purpose vehicle, SPV, means one company. Okay, special purpose vehicle, one company. Indian Railways. Now this special purpose vehicle will be providing infrastructure, right to use infrastructure, infra for a concession period. And what is the consideration that Indian Railways will give? Some consideration they pay for doing this. This is exempted. Okay. Next one, next chart. Same, here slide change. What is that? Indian Railways and next SPV. So Indian Railways is providing the services. What services they provide? Maintenance services. Special purpose vehicle, SPV. Indian Railways is providing services to special purpose vehicle. What services they provide? Maintenance services. Again, for a concession period, and some consideration is paid by SPV to Indian Railways. That consideration is also exempted. So as there are many amendments related to Indian Railways, there is a possibility of making a question. So one question they will make for 8 marks. What they will do is that they will give list of transactions and amounts they will give, and they will ask compute the value of taxable supply. Whichever is taxable, you take it into the outer column. Whichever is exempted, you just write it as exempted. and total you do, you will get one answer, that is the value of taxable supply. Actually, for CMA final exams, you don't have to give too much of explanations. You don't have to give, because you can write just taxable, exempted. For CA exams and all, we have to give a lot of justification, but CMA exams not required, because after seeing your suggested answers only I am telling you this, okay. So even if you see suggested answer na, for a 8 marks question, just one computation they will give, and with that they will conclude. So but ensure that you are not making mistakes in that, definitely you will get the marks, okay. Just one line you can give, this is exempted because service provided by SPV to Indian Railways, or maintenance service exempted, just one line, crisp if you write, that is sufficient, okay. Can I proceed? So there is one query to one student, sir, accommodation service in residential purpose, employee stay will not come in 90 days exemption. No, that will not come in 90 days exemption, that may come in residential purpose to a unregistered person. Residential purpose to a registered person will be taxable. What if it is to a registered person, continuous period of 90 days, but less than or equals to 20,000 per month, then they can claim exemption? Yes, that is common, that accommodation service is common for everyone, but minimum 90 days point we need to check. Even for employee accommodation or any accommodation, that is common, okay. Next, so that only they have given in detail, platform tickets, retiring rooms, clock room, battery operated car services, all these are exempted. Then one zone or division to another zone or division, whatever we discussed, just in detail they have given. Next, this special purpose vehicle, so SPVs to Indian Railways and maintenance service by Indian Railways to SPVs, this also we have discussed. Now, the next area is GST applicability on statutory collections by RERA. RERA, Real Estate Regulatory Authority. Basically, government authority, remember, services provided by government authority to any person is exempted, okay. What is that you need to remember? Services provided by government authority to any person is exempted. What is a government authority? That definition you should know. Government authority means any body, board or authority established under an act of parliament or state legislature for the purpose of carrying out the functions under the constitution is known as government authority. For what purpose they should have been established? To carry out functions under the constitution, then it will be called as a government authority. If it is established for the purpose of promoting trade or commerce, then it is not called as government authority, then it will be called as government entity. Clear? There is a difference between government authority and government entity. PSU will come under government entity, because PSUs are for the purpose of trade or commerce, that will not come under government authority. But RERA will come under government authority, because they are established to carry out the functions under constitution. What is the function under constitution here? Regulating the real estate. Regulating the real estate is the function under constitution. For that purpose they have established. So RERA is a government authority. So any money collected by RERA will be taxable or exempted? Exempted. Why it is exempted? Because just now I told you, services provided by, any service provided by government authority to any person is exempted. Got the clarity? Then, sir, what if it is not established under an act of parliament or state legislature? Then in that case, it may be a body in which government has invested greater than or equals to 90%, that will also come under government authority, okay. So you first write down in your notebook what is a government authority, then we will write the exemptions etc. related to this. So write down point number 15. Point number 15, services provided by government authority. Services provided by government authority. First we need to understand what is the meaning of government authority. First, any body or board or authority established under an act of parliament, under an act of parliament or state legislature. Any body, board, authority established under an act of parliament or state legislature. Sir, ICMAI is also established under an act of parliament, correct? So for ICMAI we have an act, na? What is that? Institute of Cost and Management Accountants Act. Management is not there, only cost accountants. Institute of Cost Accountants Act 1959. It was Cost and Works Accountant. They have made the amendment to remove the word works, and it is an act. Under the act of parliament they created. So then ICMAI is also coming under government authority, sir? No, because it is not for carrying out the functions under constitution. So that's why it will not come under government authority. Will it come under government entity, sir? Yes. Then sir, whether exemption is available? No. For government entity, we need to see it's an educational body. Educational body means any services provided by them to students, faculty and staff is only exempted. Because for education services we have one point. Any service provided by an educational institution to its students, faculty, staff is exempted. That's why your coaching fees to CMA Institute, no GST. Your registration fees to CMA Institute, no GST. Your exam fees to CMA Institute, no GST. The moment you qualify, you need to pay membership fees. You need to pay COP, Certificate of Practice fees. Will it be chargeable to GST? Yes. Yes, it will be chargeable to GST. So, therefore, only to students, faculty and staff. Sir, members, won't they become staff? No, members will not become staff. Some people, have you been to SIRC of CMA Institute? So, lot of people will be sitting over there. Like a government office, they will give feeling, correct? Whenever you speak also, they will not reply, etc. They are called as staff, okay? And faculty, some faculty members also will be recruited by them, okay? And they will also be coming under exemption if they provide services to them. But members, it is not exempted. Like that separately we need to see, it's not coming under government authority. Then sir, we have this CMDA, Chennai Metro Development Authority. Have you heard of this? Which will give approval. Whenever you buy any land, they will tell CMD approval is there or not, you check like that. For which they, for giving approval, they collect some charges. Is it a government authority? Yes. Then CMWSSB, Chennai Metro Water Supply and Sewerage Board. One board is there, which will do the metro water supply, which will clean the drainages, etc. and all. Will it also come under government authority? Yes. They will also come under government authority. Are you understanding this? That's why all those people collecting money will be exempted. Okay. So, services provided by government authority means any body, board or authority established in an act of parliament or state legislature. Then, any body or board or authority in which government invested greater than or equals to 90% in equity. Invested greater than or equals to 90% in equity, that is also. But all these for what purpose? For carrying out functions under constitution. And here you write down services provided by government authority is exempted. Any service to any person. So now we saw who is government authority. Now tell me whether RERA will come under government authority. Yes, I gave you some examples. CMDA, next CMWSSB, then RERA, Real Estate Regulatory Authority. One amendment only, RERA, but that is connected to many other things. That's why I have explained that. Can I proceed? So they have given RERA collecting statutory charges such as registration fees from real estate developers, agents, as well as penalty for non-compliance. There been a confusion whether these collections attract GST. First they gave RERA. RERA is established as a statutory body to regulate the real estate sector and ensure compliance with Act. There is an Act of Parliament, RERA Act. It falls under entry 1 and entry 2 of 12th schedule. So to carry out the functions under Constitution. So as per notification, it comes under government authority. So they have given government authority, an authority established by government to carry out functions related to Constitution. RERA qualifies as government authority. And what is the exemption? Any service provided by government authority will be exempted. Accordingly, services provided by RERA is also covered under the exemption. Clear, Appa? Next, they have given some scenarios, but all these already we discussed. Registration fees exempt, even one time like penalty for non-compliance, anything that is also exempt, and even renewal of real estate registration, that is also exempt. So no need to see anything. RERA, any money collected, fully it will be exempted. Is it clear, Pa? By whatever name called, they collect the money, that will be exempted. Next, accommodation services already we discussed. What is that? Minimum how many days? 90 days. But here there is one small twist. Continuous period of 90 days. Continuous period of 90 days means, for example, sir, I stay in the same hostel. Carefully listen. I stay in the same hostel. First I came, 2 months for attending one coaching I stayed, I left. Again, after 2 months I came back for attending some other coaching, same hostel. At a stretch 2 months, gap, then again 2 months. If you see overall 2 plus 2, 4 months, 4 months means more than 90 days. And monthly charges is less than or equals to 20,000. Will I get the exemption? Why? Continuous period. The continuous period of 90 days should be there. Supply of accommodation service having value of supply less than or equals to 20,000 per person per month, provided the accommodation service is supplied for a minimum continuous period of 90 days. Okay. So all these we have seen. Accommodation below 20,000 per month for more than 90 days. So it will be fully exempt. Accommodation above 20,000 per month. Should we check 90 days point? Both the conditions should be satisfied. Any one condition not satisfied, it will be above 20,000. What is your answer? Taxable. Okay. Less than 90 days. Should we check how much is the rent, etc. and all? No. Less than 90 days automatically taxable. Greater than or equals to 90 days. If it is less than 90 days, don't check anything. Again, it will be taxable. That's what. Greater than or equals to 90 days. Whether we will get the exemption? Yes. Less than or equals to 20,000 per month, greater than or equals to 90 days, then only it is exempted. Any one condition not satisfied also, it will become taxable. You got it? Next. So this already they have given, but again they have repeated. Clarification on no supply status for co-insurance premium and reinsurance commission. So some students ask me in the break, sir, what is the difference between co-insurance and reinsurance? Sir, both appears to be same. What is the difference between these two? Basically, in co-insurance, there will be only one contract between the group of insurance companies and the insured. Only one contract will be there. But in reinsurance, there will be two contracts. One between insurer and insured, second between reinsurer and insurer. Two separate contracts will be there. but in co-insurance there will be only one contract. Then in case of co-insurance, the lead insurer will receive the premium and share the premium with the co-insurers, that is not a supply. But in reinsurer, the insurer receive the premium and share with reinsurer, that will attract GST. Understood the difference, Apa? You see your notebook. We discussed the first case, that is fourth point you see. Fourth point you see. In the fourth point, first lead insurer received 10 lakhs. Then that 10 lakhs is shared between B limited, C limited and D limited. So whether it is supply or not a supply? Not a supply, not a supply, okay. And there is no GST. Same way, insurance company A received 10 lakhs, they share 5 lakhs with insurance company B, but that 5 lakh will be chargeable to GST. Understood the difference? Both cases, one person receives share with the other person. But in case of co-insurance, that share will be not a supply. But in case of reinsurance, that will become supply and chargeable to GST. That is the difference between these two. Got the clarity? Mainly why this difference in treatment? Because difference in contracts. Here there is only one contract, means one transaction. So therefore, they are telling that no need to pay. But here there are two separate contracts, means two separate transactions. That's why. Next. So why they gave it this circular? As is varies basis. As is varies basis means with effect from this date it will be applicable. What about the past? In case of past, by mistake if they have paid GST, will they get refund? No. If they have not paid GST, whether we will recover it from them? That's why they gave this. So you can skip all these things. Next. Next one, power not to recover GST not levied or short levied as a result of past general practice. Section 11A. What is this? Section 11 talks about power to grant exemption. As per section 11 of CGST Act, central government on the recommendations of GST Council may exempt a transaction, either goods or services, from payment of GST. This power is there for central government. Means they don't have to go to parliament. Generally, every act says there are some delegated powers given to the central government. What is the difference between parliament and government? Parliament means both ruling as well as opposition, whereas government means we are talking only about ruling party. Now, if they want to give exemption, whether they need to go to the parliament and seek the permission from the parliament and then only they need to give exemption, or they can decide on their own and can give exemption. They can decide on their own and give exemption, because the power to grant exemption is delegated to central government. That's why central government, that is GST Council meeting will happen. In the GST Council meeting, they decide, okay, this transaction is exempted, they will give a notification and it will be exempted. Is it clear or not? And they don't have to seek the approval of the parliament for giving this exemption, because they have got the power. Now, what is the need of 11A then? Listen. Now, say Nirmala Chechi, so sometimes her mind, maybe she has mood swings many times. So what she will do, suddenly she will think of something and she will bring a tax. Normal popcorn 5%. And the popcorn, if you have caramel, it will be 18%. Why like that? That is also popcorn only, na? Why such a disparity? Normal bun, no GST. Jam 5%. Bun with jam 18%. Okay. So people will definitely will not understand what she is doing. So she comes out with this. And whenever she is coming out with this, what people will do? Two things. One, okay, it's my fate, I have to follow. Correct? People in Tamil Nadu will do like that. But other states and all, they eat salt and all, na. We will not eat. We will not protest anything because we have fear. If we protest, then big problem and all will happen like that. So therefore anything, for many years, 60, 70 years, they are looting us. Okay, either DMK or ADMK, that's it. Another person we will not encourage also, okay. And therefore, don't think that I am supporting TVK and all. No, no, they are also the same category only. And fine, so that we can't change ourselves. But in many states, north and all is not like that. They do protest, and when they do protest, again the government cannot go back to parliament for taking the approval. Already Finance Act came, caramel popcorn 18% decided. Now again they cannot go back to reduce it or remove it. Can they decide to roll back? Yes, they themselves decide to roll back. That is this power they have created under 11A. Understood the difference? There is nothing in this, just read it, you will get it. Just remember this example in mind. After section 11 of CGST Act, the following section shall be inserted. Section 11 I have explained for that reason, namely power not to recover GST not levied or short levied as a result of general practice. Notwithstanding anything contained in this act, if government is satisfied that a practice was or is generally prevalent regarding levy of central tax on any supply of goods or services, and such supplies were or liable to central tax in case where according to the said practice central tax was not. In the past, on a transaction there was no GST, suddenly they brought in GST. A higher amount of central tax than what was or is being levied. Popcorn normal rate 5%, now suddenly caramel popcorn 18%, excess rate they have brought. Now the government may, on the recommendations of council by notification official gazette, direct that whole of the central tax payable on such supplies or central tax in excess that is payable on such supplies shall not be required to be paid. You got it? They can waive off. They can waive off. What they can waive off? Previously there was no GST on a transaction, now they brought in GST on a transaction. Previously there was lower rate, now they increase the rate. Whether the central government is having power to waive off the taxes or waive off the GST, yes. Not required to be paid in respect of the supplies on which central tax was not or is not being levied or is being short levied in accordance with the said practice. Okay, already I gave you one example. Another example you see. So retailers in sectors like FMCG and apparel frequently offer promotional schemes such as buy one get one free. GST is often levied only on the price of the paid item, assuming the free item does not constitute supply. That's true. Lot of products, if you see, they will be coming out with these offers. Buy one get one free, buy three get four free. Yes, dress and all they will give. So if you have been to this opposite Loyola College, Van Hussein, like that one showroom is there. Okay, so there always 365 days the offer will be there. Buy 3 get 7 free and like that and all. So what are these offers basically? It is like to push the stock. They come out with these offers. Now whether GST is payable only on the purchased item or all the items? Of course only on the purchased item. For example, buy 3 get 4 free means whether we need to pay GST on 7 or only 3? Only 3. GST is often levied on the price of the paid item. This practice is based on prevalent interpretation in the retail industry that free items are not separately taxable. But they have brought in a point. Okay, according to GST law, the value of the free item should be included in the value of taxable item. This leads to short levy of GST. Now, as per section 11A, can the government roll back this provision? Yes. The government, recognizing this industry-wide practice, may issue a notification stating that GST short levied on free item will not be recovered for the past period. This protects retailers from retrospective demands and avoid disruption in their promotional practices. Got it? So just you write down 2 lines information for this. Point number 16. Section 11A, power to grant exemption based on past general practice. Based on past general practice. Past general practice amendment notification. Past general practice, no GST on a transaction. There is no GST on a transaction. Now what is the amendment? GST levied. GST levied Wide Finance Act 2025. Now, can they give a notification to waive off the GST? Yes. So, notification to waive GST on such transaction. Got it? Mainly considering the past general practice. Same way. GST at the rate of 5%. Now, GST increased to 18%. Notification to waive off 13% excess GST. Okay. Definitely this and all will not be tested in exam. It is there. How can they make a question on this? They cannot make any question on this, just this is there in the amendments, you read it enough. Can I proceed? Next, electricity. Transmission and distribution of electricity is taxable or exempted? Transmission and distribution of electricity is exempted. What is the difference between transmission and distribution? Transmission means from the power generating source. There are different ways in which power can be generated. Now, thermal is there, then hydra is there, and even windmills is there. Different ways they will generate the power. From the power generation to the substations, they will be transmitting the electricity. Again, the substation to the people, household or buildings, they will do the distribution of electricity. Both are exempted, transmission as well as distribution. Previously, there was a confusion. What about the other activities relating to electricity? Like, you have to pay meter rent for electricity meter. Now they are making digital meters. When they make the digital meters, you need to pay the rent, because previously and all, one person used to come and take the reading and calculate and tell. Now no one is coming and taking the reading because it is online. So they are converting everything into digital meters. Previously and all, I remember in my childhood, so in the meter we used to put one magnet so that it will stop. That circle rotating is there, it will stop. So because if we put a magnet, it will stop. So we can use the electricity left, right, center. And electricity bill and all, what, 100 rupees, 200 rupees, like that they used to pay. But now it is 10,000, 20,000 rupees. If you keep magnet or if you keep something else also, it will not stop. It will run like crazily. Got it? So therefore, this digital meters they are installing, and in turn they are collecting it from us only. Meter rent they are collecting. Is there a GST on that meter rent? Was a confusion. Then shifting of meters. Sometimes what will happen, say we are renovating our house, and the meter will be shifted from one location to another location in our house. For that we need to pay some charges. Then capacity increase, single phase. Now we want 3 phase. For that we need to pay extra charges. Are you getting this? So all these charges which are collected by electricity distribution utilities, whether it will be chargeable to GST or not, was a confusion. Now they made an amendment telling all activities provided by the electricity utility providing any activity, that will be fully exempted. All incidental and ancillary activities, see there. Supply of service by providing metering equipment on rent, testing of meters, transformers, capacitors, releasing of electricity connection, shifting of meters or issuing duplicate bills, etc. They did not tell only this. Don't remember only these activities, any activity, because they use the word etc., which are incidental or ancillary to supply of transmission and distribution of electricity provided by electricity transmission and distribution utilities to their consumers are exempted. Previously only transmission and distribution is exempted, now all activities provided by them will be exempted, all these activities, okay. So circular regularizes the payment of GST on service provided by electricity transmission on distribution utility as is various basis. Means what? Suppose if you have already paid GST, I paid, because what happened, I asked them to increase the capacity. My house was having one phase, I asked EB department to increase it to 3 phase last year. At that time they asked me to pay 10,000 rupees. I paid 10,000 rupees plus GST 1,800 rupees. Now this circular says that is exempted, correct? Can I go and ask, give me 1,800 rupees? Poda, like that they will tell. You understood or not? So because as is varies basis, you got it? And suppose if they have not at all paid GST, okay, fine, you don't have to pay any GST. That is this as is varies basis. See, this as is varies basis common in every place, so you don't have to read it repeatedly, okay. Just write down this point number 17. Sir, is the class to discuss only the supplementary material? Yes, only supplementary material in Mighty 50. I cannot take full batch. Bring me papers, no? Stamp paper, I will sign my property and give also. How in 2 days I can cover an entire batch? Practically also not possible. I can cover, provided it is like a complete revision or marathon or something of that sort, that also it will take 4 days minimum. Okay, so don't believe complete entire IDT in 6 hours like that, and a lot of YouTube thumbnails you will see. Don't believe in that. How can we complete in 6 hours, 8 hours, etc. and all? No one can complete. That much portion is there. Say this: services provided by electricity transmission or distribution utility. Services provided by electricity transmission or distribution utility. Any service, any service to consumers, it is now exempted. Any service, okay, not just the electricity, all services incidental or ancillary to electricity. Then next one, see this: research and development services, R&D services against consideration received in the form of grants applied by a government entity or a research association. Are you aware of section 35 of Income Tax Act? Scientific research expenditure is allowed as deduction. In that, in PGBP, there are 2 types of expenditures which is allowed as deduction under section 35 of Income Tax Act. One is, I spend the expenditure on scientific research, or I contribute money to a scientific research association. Is it clear, pa? I am spending the money on scientific research, or I am contributing to a association or a university which is engaged in scientific research. Okay, now carefully listen. There is an association or university to which I have contributed for scientific research. Now you are doing scientific research. I am not doing scientific research. You are doing scientific research and you got the grant from the university or association. That money received by you will be exempted. Is it clear, pa? You are one person, any person. What is the job that you are doing? Scientific research. And you got money in the form of grant. From whom you got? Either government entity, not government authority, government entity, or association or university. Which association or university? Covered under section 35 of Income Tax Act. Is it clear? Scientific research association or scientific research university, association, university, college or institution covered under section 35 of Income Tax Act. So that money received will be exempted, provided that research association, university, college or any other institution notified under 35 subsection 1 clause 2 or 3 is so notified at the time of supply of research and development service. That is simple point. Just write down this. Is this exemption applicable only to company etc. or any person? Any person. Any person engaged in what? Engaged in scientific research. Any person engaged in scientific research. From whom they are receiving grant? Government entity or association or university or college or institution in scientific research. From these two people, whatever grant that is received by this person will be exempted. Okay. Done. Next one. So they have given some examples here. Supplier of service, Department of Biotechnology, a government entity provides research and development service for vaccine development. A pharmaceutical company contracts DBT to conduct research for which they got a grant of 10 crore. What is the treatment of this 10 crore? The treatment of this 10 crore will be exempt from GST. And R&D service supplied by a notified university, even here also that notified university giving a grant of 5 crore to IISc, what is the treatment of that? That is also exempt. Okay. Then next, look into this point number 9. We'll complete these exemptions and then take break, because all these amendments related to exemption, hardly few more exemptions are there, then we'll take a lunch break. Okay. Just concentrate, 10 minutes, not more than that. See, usually colleges, schools, etc. and all will get the affiliation. From whom they will get the affiliation? From the state board, central board, etc. Correct? Can I start a school just like that? I need to get affiliation. Na? For which should I pay affiliation fees? Yes. That affiliation fees will be taxable or exempted. It is taxable. Affiliation fees will be taxable. However, if the school, not college, school, owned or operated by government or government authority or government entity, that school also need to pay affiliation fees to state board or central board. That affiliation fees collected by state board or central board will be exempted. Is it clear? Read there. Service of affiliation provided by whom? Central or state board, CBSE or state board, okay, or council or any other similar body by whatever name called. To whom? School or college? Of course, school. Established, owned or controlled. Established or owned or controlled. Okay. By whom? Central government, state government, union territory, local authority. Can we remember it as one line? Government. Then government authority or government entity is exempt under GST. What if it is a private school? There is a private school which is paying the affiliation fee. Taxable or exempted? Taxable. Okay. So write down point number 19. Central or state education board. Central or state education board they are providing affiliation services. They are providing affiliation services to a school, and that school is established or owned or operated. See, this is important. Not necessary that it should be a government school. A school which is under government control means a school is started by one trust, and that they have given it to the government to control. Is it clear or not? So that school also established, owned or operated by government or government authority or government entity. Example, Neyveli Lignite Corporation. Have you heard of NLC? Neyveli Lignite Corporation is a government entity, not government authority, government entity. And for the workers who are working in that lignite corporation, they have started a school. For the workers' children, they have started a school. NLC has started one school. That school, okay, they have taken affiliation from state board and CBSE, and they pay affiliation fees. Taxable or exempted? Exempted. Why it is exempted? Not necessary government. It can be government entity also. Is it clear? Affiliation service to school, this will be exempted. This affiliation services is exempted. Done? And they have given in detail what is the meaning of affiliation services, etc. and all. What is the treatment of affiliation service by universities to colleges? Taxable or exempted? That is taxable. We don't have any exemption or not exempt under GST. Affiliation service by educational boards to normal schools like private schools, etc. and all. That will be taxable. If it is only government schools or government authority school, it is exempted. Again, it is applicable on as is varies basis. Means for the past period, if they have already paid GST on that, no refund. If they have not paid GST, no need to pay any GST on that. Next, GST on DGCA approved flying training courses. So basically, there is a meaning of educational institution. So any service provided by educational institution to its students, faculty and staff is exempted. What is the meaning of educational institution? There are three meanings of educational institution. Point number one, up to 12th standard or equivalent is educational institution. Up to 12th standard means schools, all schools, any board, okay, state board, CBSE, ICSE, any board, it will be exempted. That's why on school fees there is no GST. Afterwards, education as a part of curriculum for obtaining a qualification recognized by law, graduation, post-graduation, professional course, everything will be exempted. Even vocational education is also exempted. Approved vocational education, ITI or ITC, polytechnic colleges are there na. So these industrial training institutes or polytechnic colleges, that is also exempted. Now a confusion came. This pilot training colleges and all are there. Flight, okay, aviation. They are not coming under educational institution definition because they are not providing any qualification, but they provide the training. They provide the training. Will they also come under education institution for exemption? Usually no, but through this clarification they are telling treat them also as educational institution. So the fees collected by them will be exempted. Okay. Flying training organization approved by Directorate General of Civil Aviation conduct training courses for pilot licenses. The question arose regarding GST applicability on such training courses. DGCA approved flying training courses conducted by FTOs fall under the exemption provided to educational institutions and thus are exempt from GST. Okay. So previously maritime training we have one exemption. Previously we had maritime training. The same exemption now they have given for, so this civil aviation, that is flying training organizations. Okay. So this point you can write here. Point number 20. First, people will do marine engineering, okay, marine engineering. If they want to work in ships, they need to do marine engineering degree, okay. After doing marine engineering degree, they need to get training in maritime okay, maritime institutes or maritime coaching or training institutes. Then only they can work in ships, okay. So anyhow this maritime engineering degree is exempted, correct? Even this training in maritime coaching institute is also exempted, same way. So to become a aeronautical engineering degree, plus training in this flying institutes, then they can work in flights, okay. Now what is the exemption? These two, training in maritime coaching plus training in flying institutes, exempted, like fees collected by them is exempted, fees collected by them is exempted as they fall under educational institutions. What about this college? Fees collected by college is exempted. Anyhow it is exempted because they are already educational institutions. Actually this second point is amendment. The previous one was already there, that for maritime shipping. So now for flying also they have brought in this, okay. That is why I discussed both the points. Okay. Next. So that is about this. Next one, see this, GST on ancillary services by goods transport agencies. So GTAs will provide lot of ancillary services, and what is the treatment of those ancillary services? What GTA will do transportation, but sometimes they also provide the service of loading, unloading, packing, etc. and all. What is the treatment of that? Incidental service such as loading, unloading, packing and temporary warehousing provided by GTA during the transportation of goods have been a matter of dispute, and they gave a clarification that incidental services provided by GTA as part of transportation are to be treated as composite supply. These services will not attract separate GST unless they are invoiced separately and not provided as part of transportation, okay. So we have a concept of composite supply and mixed supply. So composite supply says, like if there are two or more supplies, all are taxable, naturally bundled in the ordinary course of business, we take the rate of principal supply and apply it on the entire transaction. That cannot be applied here because say normal GTA service is exempted. Then so this incidental activities will be taxable. One taxable and one exempted cannot be brought under composite supply. That is why they gave a clarification. But along with this we should also know GTA services. What is the treatment of GTA services? You tell me. So is there any exemption for goods transport agency services? Yes, we have. So goods transport agency means any person engaged in transportation of goods by what mode? Airways or roadways or roadways, and issues a consignment note by whatever name called is known as goods transport agency. Please write down GST on GTA services. Point number 21. GST on GTA services. So basically, who is a goods transport agency? Goods transport agency. Any person engaged in what? Engaged in transportation. Any person engaged in transportation of goods by roadways and issues a consignment note. Very, very important is this and issues a consignment note by whatever name called. So they will be called as goods transport agency. Both the conditions should be satisfied. First, they should be engaged in transportation of goods by roadways and they should be issuing a consignment note. What if they are not issuing a consignment note? They are not called as GTA. When they are not called as GTA, they are just doing transportation of goods by roadways, that is exempted. Is it clear, pa? You understood? Again I am repeating. If they issue consignment note, then only they will be called as GTA. If they are not issuing consignment note, they are not called as GTA. They are normal transporters. For example, porter, etc. and all you see na. So Tata is lorries which they transport. The money collected by them will be exempted. Only if they are issuing a consignment note, they are called as GTA. And for goods transport agency, we have some exemptions. Okay. So what are the exemptions for GTA? First, with respect to notified goods or specified goods. What are the specified goods? Same list here. Same list. What is that same list? Agricultural produce. That 6 points we saw na railways. That same list. Okay. Same list as of railways. Same list as of railways. What is that same list as of railways? Agricultural produce, you can see already you have written agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief materials, defense and military equipment. Same list. Again we have here specified goods. Then recipient is individual. If the recipient is individual or trust or HUF or AJP and are unregistered and not having factory. Okay. So if they are making sale, like if they are transporting specified goods or if they are transporting to a recipient who is an individual or trust or HUF or AJP, artificial juridical person, and are unregistered, they are unregistered, who? Those individual, and not having factory. Then next, if the recipient is registered only for deducting TDS, that is government. Recipient is government registered only for deducting TDS. Government registered only for deducting TDS. These three cases it is exempted. GTA service is exempted. In other cases, GTA service is taxable. Okay. Now, wherever it is taxable, who will pay GST? Actually GTA has two options, either FCM option or RCM option. So option 1 FCM, option 2 RCM, option 2 RCM. So either FCM or RCM. FCM means who will pay GST? GTA. RCM means who will pay GST? Recipient. Suppose if it is RCM, always the GST rate is 5%. If it is FCM, they have again two options, two rates. GST at the rate of 12% with ITC, GST at the rate of 5% without ITC. What is this with ITC? Without ITC means? With ITC means they can take ITC on their inward supplies. For example, you are a goods transport agency. What is your inward supply? You will buy a lorry, or you will buy the goods required, tire, etc., or you will receive the repair service, etc. On that you can take ITC. And the rate at which you need to pay GST on your outward supply, that is freight and all, will be 12%. Whereas if you don't want ITC on your inward supply, the rate will be 5%. Whereas option 2 RCM, always recipient will pay, the rate will be 5%. So this is with respect to each financial year. With respect to each financial year, it should be decided. It's not like invoice wise they need to decide. Means this year FCM means always FCM. This year RCM means always RCM. I mean this year is RCM. Again if they want to go for FCM, next year only they can go for FCM. Is it clear? Now this is about GTA services. Now what is the clarification that is given? Say this. What is the treatment of additional charges collected by GTA? Additional charges by GTA. Additional charges by GTA. What are the additional charges? Loading, unloading charges, packing charges, warehousing charges, etc. What is it they are telling with respect to this additional charges? See here. Incidental services provided by GTA as a part of goods transportation are to be treated as composite supply. Means as a part of GTA service, that is not separately invoiced. Not separately invoiced. Separately invoiced. If it is separately invoiced, GST at the rate of 18%. If it is not separately invoiced, treat as what? GTA services. So what is the rate applicable to GTA services? The 12%, 5% that will be applicable. Suppose if it is separately invoiced, it's a independent transaction. Independent transaction means GST will be payable at the rate of 18%. Understood here? Next. So that is about this. Then, okay. So we'll take a break. Then we will continue with the remaining aspects. So we have covered approximately some 21 amendments so far. Sir, like this, how many amendments are there, sir? Minimum to minimum 50 will be there. Okay. So afternoon also we are going to cover all these things, and as I am connecting with the concepts and explaining, that's the reason why it is taking time. So it will be like a revision of other concepts as well. Okay. So my agenda was like, today I wanted to complete this, and tomorrow I wanted to discuss that mighty 50 questions. That was my agenda. Okay. So I will complete that. If time permits, we will discuss some other extra information which you are asking. Otherwise with this I will do, because this is something which is really relevant for you for this forthcoming exams. Okay. And suppose if you want to learn in detail, sir, I want to learn a particular chapter in detail, etc., what should I do? Already I told you what are the topics which are applicable and not applicable to you, correct? So you go to my YouTube channel. My YouTube channel is THARUN'S Brainery. and in this just click on playlist. In this playlist there is chapter wise revision in IDT, okay, like that one playlist is there. In that playlist I have given all the chapters, different chapters. Some chapters are not there for you, I told you already. Registration, tax invoice not there, those not required you don't have to read. Remaining chapters and all you can cover. So chapter wise I have given. So for example, assessment and audit is there for you also. If you want to know whether this is applicable for you or not, already I gave you one book na. In that book beginning you see the index, you will know whether these chapters are there or not for you. You can cover that particular chapter if you want in detail, if you want to learn each and every chapter, okay. But what I am going to cover is the amendments, which is mainly applicable for you, CMA final, plus I am also going to do the MIT 50 questions, which is mainly applicable for you. Apart from this, any topic if you feel like you are not having confidence, for example offences and penalties or appeals, assessment, input tax credit, like that, you can just go to the playlist and you can see the relevant chapter, like relevant whatever is there, place of supply, everything, and you can watch that. Done? You can do this. Thank you. We'll meet after our break. So can we meet at 2:15? Right now the time is 1:20. So 2:15 we will meet. Okay? Thank you. Okay, we'll continue further. So see this, we completed up to this 10th point. We need to discuss this 11th one, import of services by foreign airline companies. So basically what happens is that there is a foreign airline company which is having an Indian establishment. This Indian establishment of foreign airline company will be importing some services, and that services will be imported without consideration. So this particular activity is now exempted. Okay, so what happens here, say this, you can parallelly make note. This is point number 22. So there is a foreign airline company, and this foreign airline company which is outside India is having establishment in India. Basically this establishment is like their branch office. Okay, whereas the head office is outside India. Now usually branch office will be importing some services, okay, from the head office without any consideration. So from the foreign airline company which is outside India, having a head office outside India and branch office in India, there is some import of services for consideration or without consideration? Without consideration. Import of services without consideration. So this is given as exempted. Is it clear? Previously it was taxable and now it is exempted. Is there any condition, sir? Yes, there is a condition. Indian airline company will have a foreign establishment. Indian airline company will have a foreign establishment. So the foreign country should have given the mutual exemption to the foreign establishment of Indian airline company. For example, if this head office is located somewhere in, say, Singapore, okay, the foreign airline company head office is in Singapore and the branch office is in India. Now the condition is that Singapore government, what is the condition for exemption? Exempted. What is the condition? Simple condition only. Singapore government should have given exemption, reciprocal exemption to branch of Indian airline company in Singapore. You understood here? Got the clarity or not? There is a Singapore airline. Singapore airline is having a branch office in India. That branch office is importing services from the head office for consideration or without consideration? Without consideration. That activity will be exempted. Only one condition. What is that? Indian Airlines will be there now. For example, Indigo Airline. Indigo Airline may have a branch in Singapore. Possible or not? Indigo Airline may have a branch in Singapore. So like how India is giving exemption to Singapore Airlines in India, like that Singapore should have given exemption to Indigo Airlines branch in Singapore. Then only this exemption will be applicable. Is that clear? So make note of this, complete it, now read it. So import of services by foreign airline companies, wide notification, CBIC exempted import of service by an establishment of foreign airline company from a related or any of its establishment outside India when made without consideration. That's what I said, without consideration. Okay, and the GST exemption is applicable provided that Indian establishment of the foreign airline company is required to pay GST at the applicable rates on transportation of goods or passengers. The exemption is only for import of service, not for their service in India. For that branch, see the Singapore branch is there in India na, which will provide services, that will be taxable. Only for import of services the exemption will be applicable. Next, certificate is obtained from Ministry of Civil Aviation. Reciprocal treatment is confirmed. What is reciprocal treatment means? ensuring that Indian airlines are not subject to similar taxes by the foreign country for identical services. You got it? Next. So the GST Council recommended exempting the import of service by foreign airlines from related entities abroad when made without consideration. And this is the example. XYZ Airlines is a foreign airline. Where is it headquartered? In USA. XYZ Airlines has an office in Mumbai, Indian establishment. The Mumbai office receives IT support services from the airlines headquarters in USA to manage its operations. Consideration is not paid. Now the analysis. The imported service are between related parties. Why related parties? Because establishment in India and establishment outside India are treated as related. Okay. And no consideration is involved. XYZ Airlines Indian establishment paid GST on passenger transportation, certification from Ministry of Civil Aviation. Therefore, these IT services are exempt from GST. Understood? Next. Next one is services related to NSDC, National Skill Development Corporation. So like that one organization is there, NSDC. What is the role of this NSDC? NSDC will be providing lot of skill courses. So this NSDC has got lot of sector skill councils. Sector skill councils means related sector. For all banking related skill courses, there is BFSI. For all management and professional skill courses, we have MEPSC. Like that, for one particular sector, they have created one sector skill council, which will design the courses, skill courses. Okay. Now, in each and every sector skill council, there will be three parties: assessment agent, training partners, and training centers. What these training centers will do, will provide the coaching. Then assessment agencies, which will conduct the exam. Awarding bodies will give the certification. Three parties are there. All these three parties are also covered under the exemption. Say this: National Skill Development Corporation, National Council for Vocational Education and Training, awarding body, assessment agency, training body. Got it? If they offer any skill development program, vocational skill development course, or any national skill qualification framework, that will be exempted. So you can make note of this. Point number 23. So who are all the parties that we have seen? National Skill Development Corporation, National Skill Development Corporation, that is NSDC. Then we have National Council for Vocational Education, and Training. National Skill Development Corporation, National Council for Vocational Education and Training. Below this, there are three parties. Who are they? Below this. First, training body. What training body will do? Which will conduct the coaching, training. And next, then we have assessment agency. What is that assessment agency will do? Assessment agency will conduct the exams. And thereafter we have awarding body. What awarding body will do? Awarding body will give the certification. Okay. Now, any course offered by them, any skill course offered by them is exempted. Previously we had only assessment agency and training body, now they have added awarding body also. And previously we had only NSDC, now they have added National Council for Vocational Education and Training. Okay, just this much you need to remember. NSDC, National Council for Vocational Education and Training. Below that there will be a training body or assessment agency or awarding body. Any skill course offered by them is exempted. Next, can I proceed? Next one, construction services. In construction services, there is something called as preferential location charges. What is the treatment of that preferential location charges? Preferential location means what? So generally, when you buy a flat, you wanted a east facing flat, or you want flat in the first floor, or you want a beach view flat, or some roadside road view flat, or hill view flat, like that, and all. People will have lot of options now. Some people will feel like I want a covered car parking because my car itself somewhere like 1 crore, 2 crore, so I need a cover car parking. I cannot keep it in the open area. Lot of requirements. Now these builders also will take it as advantage and will be charging extra money. Normal flat 1 crore. If you want east facing flat, 1.2 crore, 20 lakhs extra. If you want beach view means 50 lakhs extra, like that they will be collecting. This extra money what they collect is known as preferential location charges. What is the treatment of this preferential location charges? Whether it is collected along with the flat. Is it separately collected or along with the flat it is collected? We need to see. If it is collected along with the flat, whatever is the treatment of flat, the same treatment will be applicable for the preferential location charges. If it is collected separately, it's an independent transaction and always taxable at 18%. Is it clear? So read this. PLC, that is not PSLC, that is different. PSLC is Priority Sector Lending Certificate. PLC is preferential location charges, is often collected as a part of consideration for residential or commercial properties, leading to questions about its tax treatment. PLC forms part of composite supply of construction services and attracts the same rate of GST as the construction service itself. What if it is collected separately? Then it is an independent transaction. Okay, so write down 24. Preferential location charges collected as a part of construction of property collected separately. When it is collected separately, always taxable at the rate of 18%. If it is collected as a part of construction of property, we need to check whether so that is entire consideration after completion certificate, entire consideration after completion certificate. What is your answer? Supplier, not a supplier? Not a supply. Already we have seen, if entire consideration is collected after completion certificate, it is excluded from supply, not a supply. Not a supply. Otherwise means what? Consideration collected before completion certificate or part before, part after. Then taxable at what rate? Taxable based on the rate applicable to construction services. In this also we have different rates, that's why. If it is affordable housing, 1.5%. If it is non-affordable housing, 7.5%. If it is commercial property, 18%. Like that, different rates are there. That's why the rate applicable to construction services should be taken. Suppose if entire consideration is after completion certificate, it is not a supply. Okay. Done? Finished? Next one. GST on film distribution services. Basically, these distributors are there. Producer versus distributor, what is the difference? Movies, everyone like movies, na? Producers will be there, distributors will be there. What producers will do? That's what, produce a movie. What is produce a movie means? They invest money in making the movie, correct? And say for example, they invested in making the movie. How will they recover that money? Selling the rights to the distributors. That distributors will in turn sell it to the theatre owners. And theatre owners, some distributors will own the theatres, some distributors will not own theatres, they will just give it to the theatre owners and receive the money from them. That's how. When a movie is flop, you know who is at loss? Distributors. Producers will not be at loss. Producer will get his money by selling it to OTT, because every movie OTT will buy, correct? So by selling it to OTT and by selling it to the distributors, they will recover their money. And suppose if the movie is flop, distributor gone. If the movie becomes super hit, again producer will not earn money, distributor only will earn major money. Is it clear? So what is the treatment of this, distributors? The transaction between distributors and exhibitors. Exhibitors means theatre owners, involving the grant of theatrical rights have caused confusion over the applicable GST rate, and the GST rate will be at 18% to transaction involving theatrical rights between distributors and exhibitors. Okay. So producer giving movie to the distributor, whatever money received by the producer, that is also taxable. Distributor in turn giving it to the theatre owner and receiving money from the theatre owner, that is also taxable. Theatre selling the tickets to the audience and getting money is also taxable. We don't have any exemption in this line. Sir, but entry ticket 500 rupees, 1 point is there as exemption. Whether that is applicable to cinema theatre? No, that is not applicable to cinema theatre. That is for theatrical performance. What is theatrical performance versus cinema theatre? Theatrical performance means stage show, drama, stand-up comedy, that will come under theatrical performance. But cinema theatre is a different story. Cinema theatre, even if the ticket price does not exceed 500 rupees also, it will be taxable. So the entire line is taxable, okay? And all these are taxable at what rate? 18%. For that they just gave a clarification. You can just write down this point number 25. Point number 25, that is producer, movie producer, then movie distributor, then theatre owner, audience. Now movie producer gives the rights, distribution rights to the distributor. Distributor gives the theatrical rights, that is to display the movie to the audience, to the theatre owner. Theatre owner makes the entry ticket to the movie. So all this is taxable. So movie producer giving the rights to movie distributor giving the rights to the theatre owner, and this theatre owner making the entry ticket to the audience, everything is taxable. This is taxable at 18%, this is taxable at 18%, whereas this is also taxable at 18%, whereas this is taxable at 28%. Okay, taxable at 28%. Why, sir? Yes, movie tickets are taxable at 28%. Next time you go to movie, check the rate, you will understand. You will select 120 rupees only seat, 110, 120, 140, like that only seat will be. But by the time you pay na, it will become somewhere like 220 or 240 like that. How all these things? GST and entertainment tax, thereafter internet handling fee, this book my show and all will loot from us. internet handling fee 25 rupees, like that. So all these charges. Next, the next area is time of supply. In this time of supply, there is something called as hybrid annuity model projects. So what is this projects about? Let me give you a little bit of background. You might have seen lot of highways, national highways. Roads and all are amazing, na? Correct? Amazing roads, really. Really, highways are very good roads. But free, no. We have to pay toll charges. And very recently, so our team went to Goa along with me. I also went, but I did not go by car. So I went by flight and they came by car. And from Chennai to Goa, the toll charges was 1,800 rupees. 1,800 rupees we are paying as toll charges for that many highways. Why should we pay 1,800 rupees? Because we are using highways. And who owns these highways? Government. Already they are collecting road tax. Then what is the need of these toll charges? Basically, government is not collecting the toll charges. Government don't have money to lay down the road. With whatever money they have, they constructed statues, buildings, etc. and all, and they don't have money. So that money, and even temple, Jai Shri Ram, so they have spent money, they don't have money. Then how the road can be laid down? For that purpose, they are asking the building contractors to lay down the road. Boss, like L&T, lot of people are there. So even Adani, so lay down the road. You lay down road. Money, sir, you invest. How will they recover? Lot of idiots will be using that road. Recover from them in the form of toll charges. You understood? Now, some people will tell, why should we pay toll charges? Highway, okay. Regular road and all they will put. Example, from Chennai, this Nungambakkam, to say you are going to Annanagar. And if you travel from Nungambakkam to Annanagar, actually midway there is a railway track. That's the reason why 3-4 bridges only will connect Nungambakkam to Annanagar. Have you observed? So this Iga Theatre, that bridge, then subway, that Pachapas subway, Loyola College subway, like that, few areas only. And say for all these subways, they have started collecting toll charges. What will you do? You will pay. Definitely you will not pay. You will tell, Arey, daily I am using this road, or which I will not pay toll charges. Now in that case, what government will do? Government will tell, okay, fine, I will bear. I will pay the charges. That is called as annuity. Got it, pa? Both examples, builder is common. If they collect it from the people, we call it as toll charges. Toll charges are exempted. Is it clear? Toll charges are exempted. But instead of collecting it from the people, if they collect it from government itself, that is called as annuity. That annuity will be taxable or exempted? Taxable. You got it? Understood? This type of contracts are known as hybrid annuity model contracts, where the money is collected from whom? Government. What is the treatment or what is the time of supply? This is taxable, okay. But what is the time of supply? Whether entire amount is paid at lump sum or it will be paid in installments, it will be paid in installments. When it is paid in installments, it will automatically come under continuous supply of service. What is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations is known as a continuous supply of service. Can you give me an example of continuous supply of service apart from construction? Apart from construction, some other example? Huh? EMI. How? EMI for what? No. Anything else? Because housing loan EMI, interest is exempted. Interest on loans, advances, deposit. Some other example? Your postpaid bill, postpaid telephone bill is there, na? That is an example of continuous supply of service. How many months it will take to complete? More than 3 months. Involves monthly payment, correct? Renting of immobile property is also continuous supply of service. Agreement will be for 11 months. Monthly we will pay rent. Are you getting this? So all these are examples of continuous supply of service. Here laying down road and recovering the money from government in the form of installment is also a continuous supply of service. What is the time of supply in case of services? The time of supply will be if the invoice is given within the due date, invoice date or payment date, whichever is earlier. If invoice is not given within the due date, completion date or payment date, whichever is earlier. Up to this you understood? I said only 3 points. Point number 1, what is a HAM contract? Just write down there. Time of supply in case of hybrid annuity model. Time of supply 26. Time of supply in case of hybrid annuity model projects. Okay. So basically we need to understand what is a hybrid annuity model project. Say this, in HAM contract a certain portion of payment linked to construction is payable. So I said, no, it is made through ChatGPT. This image and all will come only from ChatGPT. Normally you cannot make this, okay. So like this blur and all you will see, okay. Seriously because you know AI is taking over, but whether it is AI or non-AI, we should be knowing, okay. For that reason I am telling you this. In HAM contracts, a certain portion of payment linked to construction is payable during the construction, and the remaining payment is received in installments over the concession period as per the payment schedule. Already I told you, correct? However, the revenue authorities have been advancing the view that GST is payable on the percentage of construction completion method. This circular clarified the time of supply provisions. So basically what happens in hybrid annuity model projects? In HAM projects, write down, construction of infrastructure service. Construction of infrastructure service is provided along with maintenance by whom to whom? By builder. By builder to government, for which consideration is payable in installments. You understood this? Next, HAM contract is continuous supply of service. What is continuous supply of service means? Service which takes more than 3 months. Service that takes greater than 3 months to complete and involves periodic payment obligations. Periodic payment obligations. This also you understood. Now, there is one provision, that is, what is the due date of invoice in case of HAM contract? Continuous supply of service. How to determine the due date of invoice? Due date of invoice. What to be taken as the due date of invoice? First, if installments date is ascertainable from contract, if installment date is ascertainable from contract, then we will take date of installment as the due date of invoice. Is it clear, pa? Like they are telling, usually rental agreement and all, when you try write, we will mention every month by 5th the rent has to be paid, like that. Like that, one date will be mentioned in the contract, that date of installment will be taken as the due date of invoice. Suppose if installment is linked to completion of an event, if installment is linked to completion of event, if installment is linked to completion of event, example, they will tell the moment foundation is laid down, you have to pay this much. The moment first floor is completed, you have to pay this much. Percentage completion method, construction contracts. So in that they will tell the milestone events. So you completed flooring work, you have to pay this much. You completed painting work, you have to pay this much, like that. So they will be connecting it to the completion of events. If installment is linked to completion of event, then date of completion of event, is taken as the due date of invoice. In other cases, as and when the installment is received, date on which installment is received. Okay. So this is the due date of invoice. In which case? In case of continuous supply of services. Continuous supply of services. So first I told you what is HAM contract. Then I told you how HAM contract will be treated as continuous supply of service. Then I told you what will be taken as the due date of invoice in case of continuous supply of services, that is HAM contracts. Now, how to determine the time of supply? How to determine time of supply in case of HAM contracts? Simple, pa. Check whether actual date of invoice is within due date of invoice. Actual date of invoice is within due date of invoice. What is actual date of invoice? Means the date on which invoice is issued. What is due date of invoice? Just now we saw what is due date of invoice, depending upon these 3 points. Okay. If the invoice is given within the due date, then what will be taken as the time of supply? If it is yes, then the time of supply is date of invoice, actual date of invoice, or date of payment, whichever is earlier. Suppose if invoice is not given within the due date, if invoice is given within the due date, then we will take the time of supply as actual date of invoice or date of payment, whichever is earlier. Suppose invoice not given within due date, then what will be the time of supply? Time of supply will be date of completion or date of payment, whichever is earlier. Now, sir, what is there in circular, sir? All these are provisions only, na, sir? Yes. Now only the circular comes. That is, what will be considered as the date of completion? Date of completion is not the real date of completion. The date of completion is due date of installment. Whatever is the installment due date, that will be taken as the date of completion. Generally, date of completion is really whenever the event is completed. But for the purpose of this circular, this HAM contract, the date of completion will be taken as the due date of installment. That particular installment, whenever it is payable, that will be taken. This is the circular part. This I could have explained in one line. Date of completion is nothing but the date of installment. But you will not understand anything out of this. For that reason only I have given you the entire background related to this. Okay. So this area is very, very important. Even in recent CA final exam also they have tested this HAM contract model question. So there is a chance, because it is clearly given even in your supplementary study material also, we will discuss this. You have written, making note of this, this much is sufficient. You please concentrate on to what is it given. The following clarifications have been provided. The tax liability on the concessionaire under HAM contract, including on the balance portion linked to construction portion, will arise at the time of issuance of invoice or receipt of payment, whichever is earlier. So what is the time of supply usually? What is the time of supply usually? Invoice date or payment date, whichever is earlier, correct? If the invoice is issued on or before the specified date, suppose if the invoice is not issued within the specified date, date of completion of event will be taken. So that's what I told you. If invoice is given within due date, invoice date or payment date, whichever is earlier. If invoice is not given within due date, completion date or payment date, whichever is earlier. If invoice not issued on or before the specified date or date of completion of event as the specified contract, the tax liability will arise on the date of provision of said service or the date of receipt of payment, whichever is earlier. Installment or annuity payable by NHAI to concessionaire includes the interest component. The interest amount should be included in the value of taxable supply. In every installment there will be interest. That interest also part and parcel of the installment. Is it clear? So for that interest, don't give any separate treatment. That interest also treated as installment only. Got it? For example, XYZ Infra Limited, supplier of service, National Highway Authority of India, recipient of service, project value 1000 crores, HAM model payment terms, construction phase 2 years, 40% of the project cost, that is 400 crores, to be paid in milestone based installment, meaning the due date of payment is linked to completion of specific events. Deferred annuity phase, remaining 60% to be paid as annual installments including interest. The due date of payment as mentioned in the contract is 1st April of every year. So what is the due date of installment? 1st April of every year, and installment will be 50 crores, that is 40 crores principal and 10 crores interest. What is the treatment of this 10 crores? Will be included in the value. Why it will be included in the value? Interest has two treatments in GST. One is interest on loans, advances, deposits, which is exempted. But another one is this, interest on account of delay in receipt of consideration. Usually in EMIs there will be interest, that interest will be included in the value, provided it is not on account of loans, advances, deposits. If it is on account of delay in receipt of consideration. Got it? So our friend said EMI, normal EMI for loan interest will be exempted. Usually creditor will collect in installments, in that installment there will be interest, that interest will be taxable. This is like creditor collecting installments, correct? I build a road, I have to collect the money in installments, that's what I am collecting, so I am also collecting the interest. So it will be included in the value. Application of time of supply as per 13.2 for continuous supply of service. I told you it is a continuous supply of service. If invoice is issued within the specified time, date of invoice or date of receipt, otherwise date of provision of service or date of receipt, whichever is earlier. So phase 1, construction phase, first milestone payment. Milestone completed, 25% of the construction completed on 31st December, invoice raised on 5th January, payment received on 15th January. So is invoice given within the due date? What is the due date? 31st December. When the invoice is issued? 5th January. Within time or beyond time? Due date 31st December. When the invoice should be issued? 31st December. Why 31st December? Say this. If the installment is linked to completion of event, what is the due date of invoice? Date of? So whether this installment is linked to completion of event, when the event got completed. So this 31st December will be taken as the due date of invoice. 5th January will be taken as the actual date of invoice. Tell me whether actual date of invoice is within due date or beyond due date? Beyond due date. So if it is beyond due date, what should be taken as the time of supply? Date of completion or date of payment, whichever is earlier. What will be taken as the date of completion? The date by which the installment is due, that is 31st December, will be taken as the time of supply. Is it clear? Next, second milestone payment, 75% of the construction completed on 1st April. Invoice raised on 31st March. This 1st April is the due date of invoice and 31st March is the actual date of invoice. Now tell me whether the actual date of invoice is within due date. Yes, what should be taken? Actual date of invoice or date of payment, whichever is earlier. So 31st March or 15th May, whichever is earlier, 31st March. Easy, appa. Are you getting this? Next, deferred annuity payment. First annuity payment due 50 crores, 40 crores principal plus 10 crores interest. Service period 1st April to 31st March. Invoice raised on 1st April. Payment received on 10th April. So what is the actual date of invoice? And what is the due date of invoice? Huh? So the time of supply will be, 1 second. Since the invoice was issued on or before the due date of payment. Here the due date of payment is 1st April. It is given in the question. You see here. 1st April of every year. So therefore 1st April of every year means 1st April 2026 will be taken as the due date of invoice. What is the actual date of invoice? 1st April. Due date also 1st April. Means it is within the due date? Yes. So therefore actual date of invoice or date of payment, whichever is earlier, 1st April 2026 will be taken. GST payable on entire 50 crores and due date will be next month 20th. For the tax liability, this month is the time of supply, means next month 20th we need to discharge the liability. Next, for operation and management services, service provided January to March, due date of payment is 10th April 2026. Invoice raised 31st March 2026 for 5 crores. Payment received. So this is due date of payment. Invoice raised on 31st March. So therefore invoice is within the due date or not within the due date? Within the due date. Again whichever is earlier, that is 31st March 2026 will be taken. Now I wanted to change here. What if in this case the invoice is raised on 15th April? If the invoice is raised on 15th April, then what will be taken? 10th April or 10th April or date of payment also 10th April, whichever is earlier, 10th April, because invoice is not issued within the due date. Okay, but here invoice is issued within the due date, so invoice date or payment date, whichever is earlier. That is this part. Actually they could have modified the third transaction at least, because everywhere it is invoice is issued within the due date. But there may be a possibility that invoice is not issued within the due date. Now, all these things you don't have to read. That's why for everything I gave you the summary. So just this summary you remember, that is sufficient. Okay. If you get any type of question also, you will be able to handle that. Then, so this is about HAM. Then one more point is there related to spectrum usage and other similar service under GST. Concentrate. Generally, who owns spectrum? Government. What is spectrum means? 3G, 2G, 4G, 5G, that is called as spectrum. Who owns that spectrum? Government. To whom they will be giving the spectrum? Telecom companies, for which the telecom companies have to pay charges like annual royalty, one-time charges, etc. and all they need to pay. Again, there also there will be installment model. Installment model means it is a continuous supply of service, correct na? But as per this CBIC circular, whatever we discussed so far for continuous supply of service will not be applicable. So they are telling time of supply will be due date by which the payment has to be made or actual day by which the payment is made, whichever is earlier. Is it clear? I have to pay installment to you. What is the date by which I need to pay the installment, or what is the date on which I have actually paid you the installment? Whichever is earlier will be taken as the time of supply. So see this. The circular clarifies the time of supply for GST payment on spectrum allocation service when the telecom operators opt for deferred payment in installment. The spectrum allocation service is provided by Department of Telecommunication. It is treated as continuous supply of services. The circular clarifies that frequency assignment letter issued by Department of Telecommunication, which details the auction result and payment option, is not considered as invoice, but it is only bid acceptance document. Hence, the GST liability arises at the time the installment payments are due or made, whichever is earlier. Easy pa? How we know when the installment is due? They will give a frequency assignment letter. Who will give frequency assignment letter? Department of Telecommunication. For example, I am Department of Telecommunication, you are a telecom company. I will give you a frequency assignment letter. In that frequency assignment letter, I will tell which installment by when you need to pay, like that. If you have made the payment by the date on which you pay is the time of supply. If you have not made the payment by that time, the day on which it is due will become time of supply. Clear? Accrual basis pa, due or receipt, whichever is earlier. Got it? So that will be taken as the GST liability. This is in case of spectrum allocation services. Kindly make note. This is point number 27. Time of supply in case of spectrum allocation services So what should be taken? Payment due or payment made, correct? Payment due or payment made, whichever is earlier. Whichever is earlier. Payment due or payment made, whichever is earlier. Now we will see one example related to this. Service provided, spectrum allocation service by Department of Telecommunication to a telecom operator. Payment mechanism, RCM. Yes, it is RCM only. Why it is RCM? You know, generally government providing services to a business entity is covered under RCM, where the business entity will pay. Department of Telecommunication is a government department. Telecom communication value 500 crores. Payment due date 1st July. Payment made date 25th June. What will be taken as time of supply? That's it. So under section 13(2), the time of supply will be earlier of these two, that is 25th June. Easy, yeah? 25th June means what will be the due date of payment of GST? Next month 20. What is next month 20? 20th July. Deferred payment. First installment, spectrum allocation value 500 crores divided into 5 annual installments of 100 crores each. First installment due date 1st July, payment date 15th July. What will be taken? 1st July will be taken as the time of supply. Okay, and next month 20th will be taken as the GST due date. Then subsequent installment, second installment, due date is 1st July, payment made is 1st June. 1st June will be the time of supply. Easy na pa? So one line over, payment due or payment made, whichever is, that's it. Then, so this is amendment in section 13, that is time of supply in case of services covered under RCM. So for the words by the supplier, the words by the supplier in case where invoice is required to be issued by supplier, or the date of issue of invoice by the recipient, so will be added. Sir, what is this, sir? If you need to understand this, you need to understand one more aspect. Generally, who will give invoice to whom? Supplier to recipient or recipient to supplier? Supplier to recipient. If the transaction is covered under RCM and if the supplier is unregistered, recipient will give invoice to the supplier. Is it clear, pa? What is the time limit by which recipient has to give invoice to the supplier? Within 30 days from the date of receipt of goods or services, the recipient should give invoice to the supplier. Is it clear? Again I am repeating, you just write down this. Time of supply in case of services under RCM, give that heading. Time of supply in case of services under RCM. Time of supply in case of services under RCM. First, what will be considered as the general provision? Generally, who will give invoice to whom? Generally, invoice shall be issued by supplier to recipient. This is general. However, in case of RCM, invoice shall be issued by whom to whom? Recipient. Invoice shall be issued by recipient to supplier if such supplier is unregistered. If such supplier is unregistered. What if supplier is registered, pa? He will only give. Whether it is RCM or FCM, if supplier is registered, he will only give tax invoice. When the supplier is unregistered and the transaction is covered under RCM, then only recipient will give. Got it? What if supplier is unregistered and the transaction is FCM? No GST. And the recipient is also unregistered, supplier also unregistered, so there is no GST. Is it clear? Next. What is the time limit? Time limit for such invoice. Time limit for such invoice is within 30 days from when? From the date of receipt of goods or services by recipient. So whenever recipient has received the goods or services, within 30 days from the date, they have to give the invoice to the supplier. Understood here up to this? Now, what will be taken as the time of supply in case of services covered under RCM? Generally, RCM means liability is on recipient. So the date on which recipient is making payment to supplier or 61st day from the date of invoice given by supplier, whichever is earlier. Again I am repeating, carefully listen. In case of RCM, we need to see the time of supply from whose perspective? Recipient perspective. The date on which recipient is making payment to supplier or 61st day, from which date? Date of invoice. Who give the invoice? Recipient or supplier? Supplier. That is the provision. Got it? What if supplier is not giving invoice? You try to understand. First is independent part. This is separate. Over. The end. Interval block. Over. Now another story I am telling you. Got it? That another story is time of supply. This is over. I will connect it later. Now, what is the time of supply in case of RCM? Time of supply in case of RCM. What is the regular provision? The date on which payment is made to supplier or 61st date from the date of invoice given by supplier, whichever is earlier. What if supplier is not giving invoice? Why the hell supplier will not give invoice? Why? Because he is unregistered. Okay. When he is unregistered, who will give invoice? Recipient will give invoice. In that case, should we count 61st day from the date of invoice given by the recipient or not is a confusion. For that reason, they gave the circular. Is it clear, pa? You understood the confusion? Generally, the date on which payment is made to supplier or 61st day from the date of invoice given by supplier. Supplier invoice kudukala enna sir pandrathu? You got it? For that, recipient will give invoice. Okay, when recipient will give 30 days from the date of receipt of goods or service, again from there should we count 61st day, yes or no? No, they gave a clarification for that. That is this clarification. Okay, say this, in case of supplies in respect of which tax is paid or liable to be paid on reverse charge basis, the time of supply shall be earlier of the following dates, namely the date of payment as entered in the books of accounts of the recipient. I told you, date on which payment is made to supplier, okay, or the date immediately following 61st day from the date of invoice or any other document by whatever name called in lieu thereof by the supplier, in case where the invoice is required to be issued by supplier, or the date of issuance of invoice by recipient in case where the invoice is to be issued by recipient. You understood this? They have added newly. Don't count 61st day from the date of invoice given by the recipient, just take the date on which recipient gives invoice to the supplier. You understood? Understood or not understood? Even if you have not understood, now you will get it. So we will divide into two: time of supply in case of services under RCM. Who gave the invoice? Invoice issued by supplier. Invoice issued by supplier. Invoice issued by recipient. Again, this amendment is from 1st November. 1st November, okay. Invoice issued by recipient. This was not applicable for CA students who wrote in May, okay. So time of supply in case of services under RCM. If invoice is issued by supplier, tell me pa, what is the time of supply? A or B, whichever is earlier. What is A? Date of payment to supplier. Who will give money to whom? Recipient will give money to supplier. So date of payment to supplier. Date of payment to supplier or date of payment by recipient. Both are one only. You understood? The date on which recipient is making payment or the date on which payment is made to supplier, both are same. So date of payment made to supplier. Date on which payment is made to supplier. Or what is another date? B. 61st day from date of invoice. Already we know who gave the invoice. Who gave the invoice? By supplier. Whichever is earlier. Whichever is earlier. Okay. Then here. If invoice is issued by recipient, then A. Same. A no change. B only it will change. Correct? What is A? Date of payment made to supplier or date of invoice. That's it. Don't take 61st day from the date of invoice, etc. Because who is giving invoice here? Recipient. Whichever is earlier. Easy apa? Clear? Definitely if I get chance to set question paper, I will definitely ask all those things in exam. But I am not supposed to set the question paper, so that's why. Otherwise, definitely I will make use of the opportunity. I applied actually. For CMA Institute, I applied. They rejected, stating that, sir, you are already taking lot of classes and we are not giving paper setting to teachers and all. Because if they give paper setting to teachers, I can sell the question paper, no? 10,000 rupees one question paper. Even if 1 lakh also, 1 lakh into 10,000 rupees, I can settle. Napa? Correct or not? So that's why they are not allowing. Say this. You read it again, you will understand it. In case of supplies in respect of which tax is paid or liable to be paid on reverse charge basis, the time of supply shall be earlier of the following dates, namely the date on which payment as entered in the books of recipient, or the date on which payment is debited in his bank account, whichever is earlier, that is the date on which payment is made by recipient. The date immediately following 61st day, 60 days. The date following immediately 60 days means what? 61st day from the date of invoice where invoice is required to be issued by supplier, or the date of issue of invoice by recipient in case where the invoice is to be issued by recipient. Okay, that's it. These are all the points that we have in time of supply amendments. 3 amendments are there in time of supply. One is related to this hybrid annuity model projects, another is that spectrum allocation service, another is RCM. Out of these 3, definitely they will be asking one for sure, trust me. Okay. Next, we are moving on to place of supply provisions. In place of supply, there is one newly added section 10(1) CA, but it was added already last attempt itself. But what is the clarification related to this? First, try to understand. There are 3 sections which we need to know now: 10(1) A, 10(1) C, 10(1) CA. 10(1) A will come into picture when supply involves movement of goods. When supply involves movement of goods, what will be taken as the time of supply? Place of supply. The ending point of goods will be taken as the place of supply. You can see this information in the book which I have shared with you. Page number 92. Page number 92. Say this: place of supply in case of goods. Domestic transactions is given under section 10. In the 10(1) A, supply involves movement of goods. What is the meaning of supply involves movement of goods? Under the contract of supply, I carry the goods from one location to another location. For example, you are in Hyderabad and I am in Chennai. You call me and place an order with me that you need to purchase some 100 bags of a particular product, and I will take these 100 bags in a lorry and I will send the lorry to your place. This is called as supply involving movement of goods. Alternatively, you can travel from Hyderabad to Chennai, purchase 100 bags from me, and you only can carry the 100 bags to your place. That is supply not involving movement of goods. What is the difference in both the cases? In the first case, under the contract of supply, I am transporting the goods from one location to another location. But in this case, I am not transporting the goods from one location to another location. The recipient is only transporting, means the sale is concluded in my place. That is, supply does not involve movement of goods. You got it? When supply involves movement of goods, what will be taken as the place of supply? Check there the provision. If it is a B2B transaction, that is sale to a registered person, what will be taken as place of supply? Location, that is location where the goods are terminated, that is ending point of the goods. In our example, what is the ending point of the goods? Hyderabad. I am sending the goods to Hyderabad now. Hyderabad will be taken as the place of supply. Suppose if supply does not involve movement of goods, means you are coming to Chennai, purchasing the goods and taking the goods from here, what will be taken as the place of supply? Check there. Supply does not involve movement of goods. 10(1) C. Location of goods, where the goods are located in Chennai, that will be taken as the, at the time of sale the goods are in Chennai only na yaar. You are coming to Chennai and you are buying and going, so location of goods will be taken as the place of supply. Is it clear? But these 2 points are applicable if the sale is to a registered person. What if the sale is made to an unregistered person? In both the cases, common, that is 10(1) CA. In both the cases, if the sale is made to an unregistered person, that is a common provision. What should be taken? Location of recipient in the records of supplier. If that is not available, then location of supplier. Location of recipient in the records of supplier, otherwise location of supplier in both the cases. Is it clear? Now, listen carefully. I have one vehicle. In that vehicle, I am selling the ice creams, ice cream cone, stick, etc. and all, and this vehicle I will be driving to different places and I will be selling. Supply involves movement of goods, or supply does not involve movement of goods, sir? Does not involve movement of goods, because wherever I am, at that place only you will come and buy the ice cream and go, correct? Yes or no? So supply does not involve movement of goods. Sale to registered person or sale to unregistered person? Unregistered person. Whether I have your details, when you come and buy the ice cream, will I ask, you are from which place, how are you, where are you, etc. and all? No. How I will know your location? So what will be taken as a place of supply? Clear pa? Location of recipient in the records of supplier, otherwise location of supplier. Is it clear? Suppose if you are placing a order from me online, I have a website, in that website you placed an order and I need to deliver the goods to you, correct? Flipkart, Amazon, many cases, lot of websites you place the order. Online shopping is the order of the day today, because gone are the days where people will go to the shop and purchase, and that too thanks to quick commerce, Blinkit, Zepto, etc. and all. So everyone sitting at home only they are ordering, and seriously I don't know which product is available in which type of shop. Okay, so recently one of my relative was asking me these earplugs, they are making some air travel, in flight and all the ear gets blocked, for that they carry this earplug, they will put the earplug etc. and they will go, so that the air will not go inside the ear and they will not get the ear pain. Okay, these earplugs he asked me to buy, I don't know where it is available, and I went to Blinkit, it is available over there, I ordered, in 5 minutes it got delivered. So see, I really don't know which shop to go and buy also. I am making the purchase in online. B2C or B2B? B2C. Location of recipient in the records of supplier, available or not available? Available, sir, because delivery address I will give na. So location of recipient is available in the records of supplier, so what will be taken as a place of supply? Location of recipient. Is it clear? Now here comes the another possibility, that is, I am from Chennai, I went to Kerala, and in Kerala I wanted to buy a product and I want the product to be delivered in Kerala. Are you understanding this? I am from Chennai, I went to and I wanted to order a product and the product to be delivered to Kerala. Same person, same person. Can we order? Any delivery address we can give? B2B or B2C? B2C. Location of recipient in the records of supplier. Now two address is there. What are the two address? Chennai address, Kerala address. What should be taken as the place of supply in that case? The provision says, if the location of recipient is available in the records of supplier, then we will take location of recipient, correct? If it is not available, location of supplier, available here, but how many addresses available? Two addresses available, Chennai and Kerala. Chennai is the billing address, Kerala is the delivery address, which should be taken, for which they gave a clarification, delivery address. You said billing address, no, that's what. In indirect tax, usually whatever provision you think, that will be wrong. Another provision only will be there. So delivery address will be taken as the place of supply. Is it clear? Say this, that is bill to ship to transactions. What our friend said is correct, not here. There is another section called as 10(1)(b). 10(1)(b), you can see there, 10(1)(b), bill to ship to transaction, like that one point is there. In that case, it will be taken as the billing address. Sir, what is the difference between the example what you said versus bill to ship to transactions? The confusion will come. Bill to ship to transaction means completely different person, then it is called as bill to ship to transaction. Example, you are ordering a product not to be delivered to you, to some other person, then it will be bill to ship to transaction. Is it clear? You are placing an order not to be delivered to you. Say you wanted the product to be delivered to your love. in another place. Napa. Rather than ordering to your place, the product will be delivered to you. Free shipping. Again you need to courier it to another person. Correct? Unnecessarily courier charges. Instead, directly place the order. Even gift wrapping option is also available, so that directly they deliver the product also over there, and they will not give bill, nothing, just the pack will be delivered, so no one will know who ordered, who delivered, etc. and all. Only when you call you will tell, I only delivered that product to you. So in their girl's home also no problem will happen. You understood? So bill, that is bill to ship to. Why bill to ship to? Different address, different person, not just the address, even person is different. But in my example, same person but different address. In that case it will be delivery address. But in bill to ship to transaction, what will be taken as a place of supply? Billing address will be taken as a place of supply. Are you understanding this? So that is this part. With effect from 1st October 2023, insertion of new clause 10(1) CA, the place of supply of goods made to an unregistered person, notwithstanding anything contrary contained in 10(1) E or 10(1) C, the location as per the address of the said person recorded in invoice. If that is not available, then location of supplier. So whether full details of address should be there? No, just the state information is sufficient. In the invoice, we don't have to give entire address, just the state is sufficient. See here. For the purpose of this clause, recording of the name of state of the said person in the invoice shall be deemed to be recording of the address of the said person. CBIC circular, why this circular? Clarification has been issued to address and resolve the ambiguity regarding place of supply in case where the billing and delivery address supplied to unregistered person differ, particularly in e-commerce transaction. When the goods are supplied to unregistered person, the billing address differs from the delivery address. The place of supply is the location as per, not billing address, as per delivery address recorded in the invoice. Also, supplier should record the delivery address as the recipient's address on the invoice when billing and delivery address differs. Is it clear? So write down this information. Point number 29. Place of supply in case of sale of goods to an unregistered person. Place of supply in case of sale of goods to an unregistered person. Divide into two. Location of recipient available in the records of supplier. Location of recipient is available in the records of supplier. Location of recipient is not available in the records of supplier. If the location of recipient is not available in the records of supplier, what will be the place of supply? No, not available. Location of recipient is not available. What will be taken? Location of supplier. That ice cream example I told you, na, that one. Okay, location of supplier. Suppose if location of recipient is available in the records of supplier, again we will divide it into two. Same billing and delivery address, same billing and delivery address, different billing and delivery address. Same billing and delivery address, different billing and delivery address. Suppose if it is same billing and delivery address, then what will be the place of supply? Any address. Both are same only, na? Both are same only. So address of recipient. Suppose if it is different billing and delivery address. Delivery address. In case of same address, there is no confusion. But if it is different only, we need to take delivery address. Don't get confused between this and bill to ship to transaction. For bill to ship to transaction, no need to check anything. Always for bill to ship to transaction, it will be billing address. Remember, B, 10(1)B, bill to ship to, B for billing address. Is it clear? Bill to ship to billing address. Always that will be taken as a place of supply. Don't see B to B, B to C, etc. and all. Always billing address will be taken. And what is the difference between that and this? Bill to ship to means different person. Different person will be there, not the same person. But here it is same person but different address. Okay. Next. Finish making note of this. So look into one example they have given. Buyer unregistered person Miss Priya from Mumbai, Maharashtra, billing address. Her friend's address in Bengaluru, Karnataka, delivery address. Seller XYZ Commerce Private Limited, registered in Chennai. Actually this example, this is what I said. This example is so confusing that ChatGPT has not created a correct example because it appears like a bill to ship to transaction. Correct? Huh? Instead, it should have given Miss Priya's residential address in Bengaluru, Karnataka. You got it? Or her hostel in some other place like that. You got it? So as it is given as her friend's address, the confusion will start whether it is a bill to ship to transaction or others. Sir, in exam if we get like this, what should we do? You write both the answers. You write both the answers. What is that both the answers? Assuming the circular, same person but different address, place of supply will be delivery address. What is the delivery address? Bengaluru, Karnataka. Next, however, it can also be considered as a bill to ship to transaction. If that be the case, then the place of supply will be billing address, that is Mumbai, Maharashtra. Because the paper setter may also copy from ChatGPT and answer, we don't know what will come in the suggested answer. Whenever questions are like this, my advice is write both the answers. Anyhow, answer sheet will be there, time also will be available, you can write, because I have not seen one student complaining to me that, sir, 3 hours is not sufficient for CMA final IDT paper. They say like 2 hours the answers are over, sir, we don't know what to do for 1 hour. Because we don't have that many questions, the questions are limited and there are theory questions also. If you see CMA final paper, 2 theory questions they are giving, okay, and due to that reason time will not take that much, you will complete. But wherever this kind of possibilities are like this, please write both the answers. Main answer, alternatively, like that another answer, okay, and definitely they have to evaluate and they need to give the marks. They will give the marks. I have observed that. Even in many suggested answers it is like that. First they will give an answer, alternatively if the student considers this way, this is the answer, like the 2 different answers they have given in suggested answer, mainly for this SFM paper. SFM paper and all they have given 2 answers for the same question, okay. That's why you write that, okay. Actually here according to me it should be a bill to ship to transaction because different person, her friend address means different address, different person, okay. But they consider it as normal only, so delivery address is taken. So XYZ e-commerce is registered in Tamil Nadu, since supplier location and place of supply is Karnataka, it will become interstate supply and chargeable to IGST. Next. So another circular, clarification in respect of advertising services provided to foreign clients. So what is this advertising services to foreign clients means? Let's try to understand this with an example. Apple is there, Apple mobiles and all, Apple products. So they wanted to promote their products in India because China, no one will buy Apple phone because they create pineapple phone, you understood? They can copy anything they can make. And where the largest consumers they have in India, actually their largest consumer base is in India. That's the reason why they wanted to shift their manufacturing operations from China to India, because in China people are not buying. Reason, China is a restricted environment. Netflix will not work, Instagram will not work, that is all Facebook, WhatsApp, Meta products will not work, Netflix will not work. Then what is the use of mobile? Only to call. But they have their own apps. They have their own apps. That's the reason why smartphone industry of this Samsung, Apple and all is not great in China. In India it is great. And that's why Apple put lot of money in India for promotion. Now when they need to do promotion, they need one person to do the marketing activities. You are that person. What you need to do? You need to design the ad and put the ad in multiple channels, because you know what is the better time at which more people will be watching TV. Correct? It differs na, during night time, the serial time and the news time, etc. and all, because your targeted audience, youth already you covered. Now who you need to cover? Old people. Youth anyhow they go for iPhone, but old people also you need to cover them into iPhone. If you don't have an iPhone, you don't have an iPhone. You understood? Like that and all. Because a status class it is. So how you need to promote it during that time? Now, Apple don't know all those things. So you act as a person to design the advertisement, to display the advertisement in the TV channels, and you will pay how much ever the TV channel is asking, and you will raise the bill to Apple and recover your money. You understood? How many parties are there? 3 parties. Who are those 3 parties? Foreign company, Indian media, okay, and you, advertising agency. You got it? Whether you are treated as an intermediary or not treated as an intermediary, because you are providing services to the foreign company, okay, are you treated as an intermediary? Okay sir, if I am treated as intermediary, so what? If you are treated as an intermediary, as per section 13 of IGST Act, for intermediary services, place of supply will be taken as a location of supplier. So for which CBSE circular is telling that you are not called as a intermediary. Why you are not called as an intermediary? Intermediary means those who connect the seller and buyer, those who connect the supplier and recipient. It is a one-time activity, but in this case it is not a one-time activity, it is a recurring activity. You understood or not? Usually commission agents are called as intermediary. For what they will do? They will connect the seller and the buyer, and they come out of the transaction and they receive the commission. So you will not come into that category, because you are only designing the advertisement and you are only identifying where it should be telecasted. So you are doing it on a principle to principle basis. Is it clear? So are you called as intermediary or not called as intermediary? Not called as intermediary. Okay. So say this. Is advertising company an intermediary? What is your answer? No. So the advertising company is not intermediary, because it provides the entire scope of service on its own account. Agreements are executed on principle to principle basis. The media owners does not have direct agreement with the foreign client. So therefore it will not come. Then what is it? It will be treated as per general provisions. As per general provision, what will be taken as the place of supply? Location of recipient in the records of supplier, otherwise location of supplier. Place of supply determined under section 13(2) as the location of recipient, which is outside India. Therefore this service qualifies as export of services. What are the 5 conditions for export of services? When a service is called as export of services, total 5 conditions should be satisfied. What are those 5 conditions? Where the supplier should be? Export of services, like that I am telling. Export of service, where the supplier should be? India. Where the recipient should be? Where the place of supply should be? How the consideration should be? Convertible foreign exchange. And wherever permitted by RBI, it can be in Indian rupees. Then last condition, supplier and recipient are not two establishments of the same person. So you can see the meaning of export of services, which I have given. I'll just show you the page number. Take page number 49. Page number 49. So what is the meaning of export of services? And those who are watching online, if you want this book, you can place the order. Don't ask me to share the PDF and all. I will not share. Waste of time. Don't ask me. I will not do that because it's a book. For them I have given because they have paid. So I said I will give. So if you want, you please buy this book. And not much hardly 300 rupees only. You can call our office and you can buy this. See this. What is the meaning of export of service? Total 5 conditions should be satisfied. What are the 5 conditions? Supplier should be in India. Recipient should be outside India. Place of supply should be outside India. Payment for such service has been received in convertible foreign exchange except as notified by RBI. Means in case if it is permitted by RBI, it can be in Indian rupees. Supplier and recipient are not two establishments of the same person. Means what? Head office in India, branch office outside India, or branch office outside India, head office in India will not be treated as export of services because they both are two establishments of the same person. Sir, what if it is holding company, subsidiary company? They are treated as different persons. It's okay. It will become export of service. Head office, branch office belongs to the same company. It will not become export of service. Suppose if it is holding company, subsidiary company, then why? Because subsidiary company is not the same person, subsidiary company is a different person. And what if the branch outside India is incorporated as per the law of that country? Then also it will be treated as a different person. Example, if you want to start a business in UAE, Middle East. In Middle East there are some regulations. So the king, Middle East is king only, you know that? The king has to approve your business. The moment they approve your business, then you will get the status, legal status there. So you set up a branch in UAE, you got a separate incorporation there. Now the head office and branch office will not belong to the same person because that will become a different person. Read this note. Supply from a company incorporated in India to its establishment outside India which are incorporated under the law outside India would qualify as export of services. What are the cases where it is permitted by RBI that the consideration can be in Indian rupees? Two cases it is permitted by RBI. One is services to Nepal and Bhutan. You can see below that table itself. Services to Nepal and Bhutan consideration can be in Indian rupees. Then next point, if the money is credited in the rupee ostro account. So usually Indian government will maintain a rupee ostro account outside India with a foreign bank. In that foreign bank, if the money is credited in foreign currency, but that foreign bank has remitted the money to India in Indian rupees, it's okay. Still it is treated as consideration received in convertible foreign exchange. Payment credited in special rupee ostro account maintained by bank outside India. You understood the meaning of export of services? Clear? Now, once again, can you tell me what is the meaning of export of service? Come on. Supplier should be in India. Recipient should be, and place of supply should be, consideration should be in convertible foreign exchange. And wherever permitted by RBI, it can be in Indian rupees. Supplier and recipient are not two establishments of the same person. Is it clear? Now, coming back to this example, you are the advertising agency. You are the advertising agency. Carefully listen. You are the advertising agency. To whom you are providing services? Apple. Where Apple is located? What is the location of supplier? Location of supplier. You are the supplier. What is the location of supplier? India. What is the location of recipient? Apple. Outside India. What is the place of supply? General provisions. Location of recipient. What is the location of recipient? Outside India. And the consideration is in convertible foreign exchange. You and Apple are not two establishments of the same person. So it will qualify for export of services. Is it clear? Then, having discussed export of services, we will also learn what is the meaning of import of services. Without seeing that, you tell me what is the meaning of import of services. Try. Where the supplier will be? Super. Where the recipient will be? What should be the place of supply? That's it. Consideration irrelevant. Of course, the consideration will be in Indian rupees only. Na? It will go from India. So just three conditions. What are the three conditions? Supplier should be, recipient should be, place of supply also should be India. You can see here, supplier of service located outside India, recipient of service located in India, place of supply will be in India. Then it will become import of services. Then what is the meaning of import of goods? Logically you tell. You are bringing goods from where to where? That's it. That is the meaning of import of goods. Okay, see there. Bringing goods into India from a place outside India. What is the meaning of export of goods? Taking goods from India to a place outside India. Is foreign exchange necessary? No. Only for services, export of services, that condition is there. But for export of goods, just if you take the goods from India to outside India, that is the meaning of export. Okay. Now, you understood now this circular? Kindly make note of this. Point number 30. So there is a foreign company which is located outside India, and there is an advertising agency and that advertising agency is located in India, and media house that is also located in India. So this media house provided the broadcasting services to advertising agency, for which advertising agency paid 10 lakhs as consideration. Okay. Now how to determine the place of supply in this case for this service? For this service, how to determine the place of supply? Both are in India, na? When both are in India, place of supply will be under section 12. There are two sections for place of supply. If service provider and service recipient in India, then section 12. If service provider or recipient in India and the other outside India, then it will be section 13. So here place of supply will be under section 12. General provisions. As per general provisions, what will be taken as the place of supply? If it is B2B, then location of recipient. If it is B2C, location of recipient in the records of supplier. Otherwise, location of supplier. Location of supplier. Clear? Whereas here, what happens? This advertising agency is providing services, advertisement services, and they recover 50 lakhs including 10 lakhs paid. Because they paid 10 lakhs na, to media house, including that they will recover. What is the place of supply in this case? Section 12 or section 13? Section 13. Again, it will be general provisions. But in place of supply under section 13 general provisions, we don't have B2B, B2C classification. Just 2 points. That is location of recipient in the records of supplier, otherwise location of supplier, Won't it be treated as intermediary service? No, not an intermediary, not an intermediary service, not an intermediary service. And because the place of supply is location of recipient, will it qualify for export of service? Yes, qualifies as export of services. Done? Next, say this. So what we have discussed about this circular advertising services. So quickly we will complete this example. A foreign client hires an Indian advertising company for comprehensive advertising agreement. The advertising company provides end-to-end services including media planning, content creation, media space procurement and campaign monitoring. The foreign client pays the advertising company in foreign exchange. So we discussed that it is not an intermediary service. So general provisions, and it will also become export of service. Who is the recipient of service? The foreign client is the recipient of service, and the foreign client is liable to pay for the service. And can these services be considered as performance based services? No, it is also not performance based services because they are not doing any performance to the individuals. Is it clear? So it is, there is no physical presence of the goods or individuals required, so it will not come under performance based services. So it will come under general provisions only. And won't it come under any agent services, etc. and all? No, again it will not come under intermediary services, normal general provisions only. And is advertising company intermediary? No. And recipient, it is not even performance based services, and they gave the example related to that. Already we discussed all these points. It's like beating around the bush, same point again and again and again they have given, just to increase the number of pages. This is what CMA Institute for you. Okay, actually CMA Institute study material and all can be converted into 25% to 30% itself, because lot of things they would have given here itself. See, this much information in one chart we learnt na, that they have given it for 4 pages. Okay, so one more point also you need to add, it is not an intermediary service, also it is not a performance based service. Okay, it is not a performance based service. What if it is a performance based service? We have a different provision. For performance based service we have a different provision. You need to definitely complete this place of supply chapter as well. Okay, there are some chapters which at any cost you should be covering. Okay, you can mark those chapters also in the index. These are like very important. Without covering this, don't go for exam. Exemptions under GST, then input tax credits, value of supply, place of supply. Next, even this levy and collection under CGST. Then here valuation under customs, warehousing, even exemptions, these 3 chapters. So here 5 chapters and here 3 chapters. These 8 chapters are the core chapters. Okay, without reading this in detail, I mean like without learning this, don't go for exam. At least this you please learn and go for exam. Okay, so place of supply is also a very important chapter for that reason. So this is what we have discussed so far, that advertising services, how it will be. Then we'll take a break for some 15 minutes and we will continue with the remaining amendments. We'll meet at 4:15. Okay, we'll start. So too much we are discussing now, full theory only from the morning. So that's why just deviate. We will do some problem solving, mighty 50 questions, and remaining portion we can discuss tomorrow also. Okay. So this PDF is available in my website. They have uploaded it. You can check. So those who are watching online, it is there in my website under downloads. If you scroll down below, you can see CMA final mighty 50 for June 25 exam, like that. Just download that for your reference, and for you, our team will arrange the handout tomorrow. Okay, maybe today evening or tomorrow morning they will arrange. Meanwhile, you can just look into the screen and you can happily listen to these questions. So first one, and wherever you have doubt with respect to the concept, you ask me, I will explain. Okay. So question number 1, Jaskaran, a registered supplier of Delhi. These 50 questions covers everything across all the chapters. Okay, except duty drawback and SCZ. That I have not given because it's not that important and all, but remaining things and all I have fully covered. Jaskaran, registered supplier of Delhi, has made the following supplies in the month of January 2021. Supply of 20,000 packages at rupees 30 each to Shukija gift shop in Punjab. Each package consists of 2 chocolates, 2 fruit juice bottles and a packet of toy balloons, 6 lakhs. And below they have given the rates. Chocolate rate is 9%, 9% and 18%. Fruit juice bottle rate is 6%, 6% and 12%, and toy balloons is 2.5, 2.5 and 5%. You tell me whether it is naturally bundled or not naturally bundled. First, there is a concept of composite supply. There is a concept of composite supply and mixed supply. This question is based on that. You can open your book and see there. So I have given one chart for composite supply and mixed supply. Just follow that chart so that any question related to composite supply can be answered based on this. This chart is in page number 28. This chart is in page number 28. Page 28. You can see there 2 or more supplies in a single transaction. Yes. Okay. Then only we will apply composite supply, mixed supply. For composite supply, 3 conditions should be satisfied. What are the 3 conditions? All the supplies should be taxable and naturally bundled in the ordinary course of business. Naturally bundled means one cannot be supplied without the another. And the principal supply is identifiable. Means principal supply means that is a predominant element in the transaction. If these 3 conditions are satisfied, then it will be coming under composite supply. If it is composite supply, we will take the rate of principal supply and apply it on the entire transaction. If any one condition is not satisfied, then it will not be coming under composite supply. Then we need to check for mixed supply. All the 3 conditions should be satisfied, then only composite supply. What are the 3 conditions? All are taxable, naturally bundled in the ordinary course of business, principal supply is identifiable, then only it is composite supply. If any one condition not satisfied, it is not a composite supply. But to become mixed supply, only one condition is there, that this should be single price. If it becomes single price, then it will be coming under mixed supply. If it is composite supply, what I told you, amongst the given supplies, you identify which one is a principal supply and you take that rate and apply it on the entire transaction. But when it is mixed supply, we will take the highest rate and apply it on the entire transaction. What if it is neither composite supply nor mixed supply? Then it will be coming under individual supplies. When it is individual supplies, we will take the respective rate for the respective supply and you determine the tax liability. Is it clear? Now, we will apply this to this question. Now, so these 3 products are given. 3 products are given. 2 or more supplies, huh? Yes or no? 2 or more supplies. What is the first condition for composite supply? All must be taxable. Check, all are taxable? Yes. Naturally bundled or not naturally bundled? Why not naturally bundled? Sir, any shop you go and ask for chocolate, will they give balloon also? No, no. So it is not naturally bundled. Naturally means one cannot be supplied without the other. AC and installation, naturally bundled. TV and remote, naturally bundled. Are you getting this? And not naturally bundled means it can be supplied separately also and as a combo also. Example, popcorn and coke, not naturally bundled. Separately also you can buy popcorn and coke na. And even battery and inverter, naturally bundled or not naturally bundled? Not naturally bundled, because you can buy the battery alone separately, you can buy the inverter alone separately. Sir, but inverter will not work without battery. That is irrelevant. How you can buy? Whenever you are buying inverter, you have to buy battery also. Whenever you buy battery, you have to buy inverter also. No. So that's the reason why it is not naturally bundled. Are you understanding this? In this case, it is not naturally bundled because they can sell it separately also. Therefore, it is not a composite supply. Agreed. And to become mixed supply, what is the condition? Single price. Is it for a single price? Yes. 20,000 packages at a price of 30 rupees. Single price. So it will come under mixed supply. When it is a mixed supply, what we need to do? We need to take the highest rate. Between these three, what is the highest rate? 18%. So therefore, this 6 lakhs will be taxable at 18%. Is it clear? So that 6 lakhs will be taxable at 18%. Just keep that in mind, that this 6 lakhs will be taxable at the rate of 18%. Now we need to know whether it is intrastate supply or interstate supply. First rate we determine. Now whether it is intrastate or interstate. Where is the supplier located? See the question. Visible to everyone? Question visible, no? So where is the supplier located? Delhi. And usually supply involves movement of goods. What will be taken as the place of supply? Today only we discuss. Supply involves movement of goods. What will be taken as the place of supply? Ending point. What is the ending point? Punjab. Intrava, intera? Inter. What is the difference between intrastate and interstate? If location of supplier and place of supply in the same state, then it is intra. If location of supplier and place of supply is in two different states or two different union territories, a state and a union territory, then it will be coming under inter. So it is interstate and chargeable to IGST, which means it should come in IGST column. Okay, be careful whenever you get the rates like this, CGST, SGST, IGST like that. Even answer also you need to prepare separately, CGST, SGST and IGST. Okay, you understood this first transaction? Now second transaction. 10 generators hired out to Moraji Banquet Halls, Chandigarh, including cost of transporting the generators, 1000 for each generator from Jaskarans warehouse to Moraji Banquet Halls. There are two transactions. One is hiring of generator. That is one. Second transaction, transportation of generator. See the below rate. Renting of generator is 18%. But transportation of generator, they have given the transportation of generator from Jaskaran warehouse to customer premises is arranged by Jaskaran through a goods transport agency who pay tax at the rate of 12%. 18% and 12%. Both are taxable. What are the three conditions for composite supply? All are taxable. Satisfied? Now tell me whether it is naturally bundled or not naturally bundled. Not naturally bundled. Hiring of generator and transportation of generator is naturally bundled or not naturally bundled? Not naturally bundled. So this is generator. This is generator. Without generator, how will I transport generator? You understood what I am telling? This generator pa, this vehicle pa, generator I have to keep and transport. Without generator, how I can transport generator? Are you understanding? Naturally bundled or not naturally bundled? Are you getting this? Okay. So therefore these two cannot be independently provided. How I can give generator? Catch. Like that can I give? No, I have to transport. So therefore renting of generator and transportation of generator is naturally bundled. One cannot be supplied without the other in the ordinary course of business. Then second condition also satisfied. Actually this is the place where in exam you will get confusion. You have to spend some time there, analyze, and lot of times the knowledge of the business you should be having, general knowledge. That alone we don't have, sir, what to do? So this usually when you take generator, chairs, etc. on rent, this pandal, shamiana, they will only bring it, they will only deliver, install, again they will remove and they will take it to their place, correct? Because it is their asset, they need to protect their asset. So in the ordinary course of business, the one who is giving the generator on hire, he will only bring the generator, because generator cannot be transported normally. You would have seen lot of shops, in one vehicle they will keep a generator. Have you observed that? that concept, okay? Because generator is so weight, we cannot call Bahubali to carry the generator and come to our place, okay? So transportation they only will do, so it will come under naturally bundle. And what is the principal supply? Generator is the principal supply, that is renting of generator is the principal supply. Principal supply means predominant element in the transaction, okay? So all three conditions satisfied, means it will become composite supply. When it is composite supply, what is the rate that we need to take? Rate of principal supply. What is the rate of principal supply? Service of renting of generator, what rate? 18%. So therefore this is also taxable at the rate of 18%. Now renting of generator means it's a service, correct? For services, what will be taken as the place of supply? For renting of goods, we don't have any specific provision, general provision will be applicable. Sir, how to know whether it is general provision, specific provision, what is the place of supply, etc. I gave one chart for place of supply in case of services. You can see that chart, which is in page number 96, 97, 98. Page number 96, page number 97, 98 and 99. In 4 pages, I have given the summary related to place of supply, you can see. Summary related to place of supply there. What is the service that right now we are discussing? Renting of generator. Renting of generator means performance based service in relation to goods. See here, performance based service in relation to goods. So section 12. Why section 12? If both supplier and recipient are located in India, then it is section 12. What should be taken as the place of supply? General provisions. What is the general provisions? Location of recipient, B2B location of recipient, B2C location of recipient in the records of supplier, otherwise location of supplier. Previous page you can see general provisions. Section 12 subsection 2 general provisions, B2B location of recipient, B2C location of recipient available in records, then location of recipient, otherwise location of supplier, okay? Now coming back to this question, you tell me what is the location of recipient? Chandigarh, pa, clearly it is there, Chandigarh. What is the location of supplier? Delhi. Intra or inter? Inter. So therefore with GST, IGST. Next, third transaction. Understood now? These two transactions. Look into third transaction. 500 packages each consisting of 1 chocolate and 1 fruit juice bottle given as free gift to Delhi customers on the occasion of Diwali. Cost of each package is 12, but the open market value of such package of goods and of like kind and quality is not available. ITC has not been taken on the items contained in the package. Now you open your book. In this, for supply, whether this activity is supply or not a supply, we need to check. For that I gave one table. What are the activities which are treated as supply? Supply includes, like that one table is there. Page number 8. Page number 8, summary of section 7 subsection 1. These are the 4 activities which are included in the meaning of supply, okay? Now I want you to interpret this transaction. Third point, you read the question once again. 500 packages each consisting of 1 chocolate, 1 fruit juice bottle given as free gift to Delhi customers on the occasion of Diwali. Is it for consideration or without consideration? Whenever it is without consideration, you need to refer 7.1c. Whenever there is no C, see 7.1c, okay? So see there, 7.1c. Can you find that 7.1c? 7.1c, there are 4 activities which will be coming under supply as per 7.1c. What are the 4 activities? D, R, I, P. What is a D, R, I, P? See the previous page. See the previous to previous page, 7.1c. What are the 4 activities? Previous to previous page, one chart is there, na, big chart. In that chart you see D for what? Disposal of business asset on which ITC has been availed. Now look into this question. Is it business asset? Not business asset. Chocolate, fruit juice bottle is not their business asset. Then what it is? Adu okay pa, is it their asset or not? No, it is not their asset, their liability. Where will you keep this chocolate fruit juice bottle? You are having a shop. In your shop you have chocolate, fruit juice bottle. Where will you classify in financial accounts? Inventory. Inventory will come in which place? Napa. Asset only na. Your inventory is your asset. Correct. You came directly to CMA final from some foundation or inter you studied na. So current asset or fixed asset, both are asset. So it is your asset. Are you disposing of? Gift you are giving for consideration or without consideration? Without consideration. So what does it says? Disposal of business asset. Yes, business asset disposed of, on which ITC has been availed. Check whether ITC has been availed. No, input tax credit has not been taken on the items contained in the package, which means that point will not come. Disposal of business asset point will not come. Then second, R. What is R? Related party transactions, including transaction between distinct person. Related party transactions, so whether customer is related. Customer is related, appa? No, customer is not related and all. So therefore that related party transaction will not come. Then import of service by a person from related person. Is it import of service? No. Then principal agent transaction. Is it principal agent transaction? No. Consequently, not a supply. Is it clear? So what is the need of learning supply chapter? This is the need of learning supply chapter. They will give a transaction. When they give a transaction, we will be thinking about composite supply, mixed supply, etc. and all. First of all, it is not a supply. And you will write in the exam, chocolate, fruit juice bottle, chocolate is 18%, fruit juice bottle 12%, not naturally bundled, and it is for a single price of 12 rupees. Therefore, it will come under mixed supply, highest rate. You will be going in some direction. First of all, it is not a supply. That's why always you need to check the base. Okay. See, in exam, the questions will be like, horror movies and all, some suspense thriller movies. In thriller movies, the director will be making us to focus on one character. This character will do the murderer, this character will do the murderer, like that and all, it will focus. On a climax, it will be revealed that one character whom you will think as buffoon, he will only be the villain. You would have seen many movies like that. Be careful. All the questions in exam are like thriller movies only. So they will take you in a different direction, but actually that may not be the answer. Got it? So don't forget the basics. Any question or any transaction that you see in GST, follow this checklist. First you need to check whether it is a supply or not. If it is not a supply, just write not a supply and leave it. If it is supply, then move on to whether it is taxable or exempted. Okay. And if it is exempted, write that it is exempted and leave it. If it is taxable, write taxable, and then the third aspect you need to check is whether it is FCM or RCM. If it is FCM, who will pay GST? Supplier. If it is RCM, who will pay GST? Recipient. Also finally check registration. Even though supplier pay GST, but what if supplier is unregistered? GST not payable. Okay. Next. Look into fourth point. You understood the third point? Fourth point. Catering services provided free of cost for elder son's business inaugural function in Delhi. Cost of providing said service is rupees 55,000, but the open market value of such service and service of like and quality is not available. Again, is it supply or not a supply? Why? Free of cost means you need to check 7.1c. In 7.1c, what are the four activities? D, R, I, P. Is it disposal of business asset? Catering services provided free of cost for elder son's business inaugural function. How service will become business asset? So business asset point will not come. R, related party transaction. Yes. Why related party transaction will come? Sir's son is related, family. So family will come under related. Who are all will come in family? spouse and children, whether or not dependent. Spouse and children always will be treated as family, whether or not dependent. Brothers, sisters, parents, grandparents will be treated as family if they are wholly and mainly dependent on that person. Is it clear? So, in this case, son is given, enough, always treated as related. So, it is a related party transaction. In case of related party transaction, even though there is no consideration, it will become supply under 7(1)(c). Okay. Now, carefully listen. It will become supply under 7(1)(c). And today only I told you, morning, that whenever there is a related party transaction, we need to determine the value as per Rule 28. As per Rule 28, what we need to see? First we need to see, I will tell you where this information is in. So, I have given a summary related to valuation rules. Which you can see in page number 131. 131. See here. In case of related party transaction, first we need to see what? Open market value. If open market value not available, like, kind and quality. If like, kind and quality also not available, cost plus 10%. Now, in this question you see, cost of providing service is 55,000, but the open market value and service of like, kind and quality not available. OMV not available, LKQ not available. So, we need to go for cost plus 10%. What is cost? 55,000. 55,000 plus 10%. How much? 60,500. Okay. And catering services. What is the rate of GST given for catering services? 18%. Intra or inter? Intra. Why intra? Location of supplier Delhi and place of supply. It's a performance based. Catering is a performance based service. Location of performance will be taken as the place of supply. What is the location of performance? Delhi. Therefore, it will come under intra-state supply. Is it clear? Next. You are required to determine the GST liability, CGST, SGST and or IGST as a case may be of just current for the month of January with the help of following additional information furnished by him for the said period. Point number 1. Penalty of rupees 10,000 was collected from Sukija gift shop for payment received with a delay of 10 days. What is this penalty? Treatment. Interest, late fee or penalty for delay in receipt of consideration will be included in the value and chargeable to GST. But this interest in the absence of information is assumed to be inclusive of GST. So, this 10,000 rupees should be added to this 6 lakhs. Why? Because Sukija gift shop only na. So, 6 lakhs we need to add this 10,000, but be careful whether they have given this 10,000 as excluding in GST, whether they gave this 10,000 excluding GST, no, which means usually interest is assumed to be inclusive of GST. What is the rate of GST for this interest 10,000? Actually this 10,000 is related to the 6 lakhs na. This 6 lakhs is taxable at what rate? 18%. Means this 10,000 also taxable at 18%. 10,000 into 18 by 118. How much? Do the calculation and tell me. 10,000 into 18 by 118. 1,525 will be taken as the GST liability. Okay. Next. So, interest has two treatment. Interest, late fee or penalty has two treatments. First, interest on loans, advances, deposits is exempted. Interest, late fee or penalty on account of delay in receipt of consideration. This is on account of delay in receipt of consideration. It will be included in the value of supply. What is the value of supply? 6 lakhs. To that 6 lakhs we need to add 10,000. But this 6 lakhs is excluding GST. But this 10,000 rupees should be assumed as inclusive of GST. Generally all amounts should be exclusive of GST. Only interest in the absence of information is assumed to be inclusive of GST. Then Now we need to do the computation, see the answer. First transaction 6 lakhs, correct? On that 6 lakhs, 18% is how much? 6 lakhs into 18%. 1,08,000 plus this 1,525. 1,09,526 IGST. Okay, 525, 526. Can you do this calculation? 10,000 into 18 by 118. What is the exact number that you will get? 10,000 into 18 by 118. Point? Then rounded off to nearest to 1 rupee. So 5, correct. Okay. So 1,09,525. Next, second one also IGST liability, 18%, 2,50,000 into 18%. Next one not a supply. So we need to just write it as nil. And then next last one, catering services. How much is the value? You only said 60,500. On that 60,500, it's intrastate supply, means CGST, SGST. What is the rate of GST? 9% and 9%. So 60,500 into 9%, 60,000 into 60,500 into 9%, 5,445. So this is the total GST liability. Is it clear? So like this, you need to prepare a table, and whatever explanations that I gave, either you can write inside the table itself, or you can write like notes also separately. But I recommend you to write the notes inside the table itself, then and there, because you don't have to write too much information. So just in this paragraph itself, first paragraph itself, supply of 20,000 packages to Shukija Gift Shop Punjab hyphen, it is a mixed supply because it is not naturally bundled and the highest rate is 18%, therefore it is entire supply is taxable at 18%. Just in simple lines itself you try to complete it, okay. Then I gave the detailed explanation there, but in exam you don't have to write this much information. That's what I mean to say. You understood the first question? Clear? First question is on the concept of composite supply and mixed supply, and even supply is also covered there, okay. And I have connected that to place of supply. Question number 2. GR Limited of Germany supplies luxurious car worth rupees 1 crore to IND Limited of India before the car reached Indian port, but after crossing the territorial waters of India, IND Limited sells it to T1 Limited by way of transfer of documents. What is this sale known as? High seas. Sale on high seas. Now, who will be clearing? IND Limited, IND Limited or T1 Limited? T1 Limited, because whenever IND Limited transfer the document of title, now who will be called as importer for customs purpose? T1 Limited. So they will only file the bill of entry and they will clear the goods from the customs, okay. So T1 Limited clears the said car for warehousing. So what T1 Limited did? They cleared the car by filing inbound bill of entry. Why inbound bill of entry? Warehousing. So in case of warehoused goods, whenever we deposit the goods in the warehouse, inbound bill of entry. Whenever we take the goods from the warehouse, ex-bond bill of entry, okay. So they deposited the goods in warehouse and store the said goods in the customs bonded warehouse. Then T1 Limited sells the said car from the warehouse to T2 Limited. Now who will pay the customs duty? T2 Limited, because they are only clearing the goods from the customs by filing ex-bond bill of entry. So T2 Limited, and T2 Limited clears the said car from the customs bonded warehouse. Answer the following with brief reasons. Is GST leviable on import of goods from GR Limited by IND Limited? Applicable or not applicable? Not applicable. Why GST is not applicable? First of all, they are not clearing. They transfer the documents of title to T1 Limited. Due to that reason, they are not required to pay any customs duty or IGST. Is it clear? Again, when they transfer the document of title to that also, it is sale of warehoused goods, sale of goods on high seas basis, that is also excluded from supply. Is it clear? So see this. GST on import of goods is levied at the time when customs duty is levied on the said goods under Customs Act, that is on importation. Importation gets completed when goods become part of mass of the goods within the country. Thus GST not leviable on import of goods from GR Limited by IND Limited, since the import of goods is not complete. Second, is GST leviable on supply of goods by IND Limited to T1 Limited? What is your answer? No, why? Sale on high seas. Sale on high seas is excluded from supply. Excluded from supply. Okay. Consequently, GST not leviable. GST not leviable on supply of goods by IND to T1 as supply of goods by the consignee to any person by endorsement of document of title after the goods have been dispatched but before clearance for home consumption is treated neither as supply of goods nor as supply of service. So, it is not a supply. Then third one, is GST leviable on supply of goods by T1 limited to T2 limited? What T1 limited did? Transfer the warehouse receipt, correct? That also we have one exclusion. What is that? Warehoused goods under customs sold. Spelled slow, the W, warehoused goods under customs sold. So, GST not leviable on supply of goods by T1 limited to T2 limited, since supply of warehoused goods to any person before clearance for home consumption is treated neither as supply of goods nor as supply of services. Then next one, last, is GST leviable on clearance of goods by T2 limited from the customs bonded warehouse? Yes, in the entire transaction, who is really called as importer? T2 limited. They are only going to file the ex-bond bill of entry and pay the customs duty along with GST. Which GST? IGST. So yes, GST is leviable on clearance of goods by T2 limited from the customs bonded warehouse, as customs duty is levied on warehoused goods at the time of clearance thereof from the warehouse, and as mentioned in point number 1, GST on import of goods is levied at the time when customs duty is levied thereon. So those who are clearing the goods from the customs for their home consumption, they are only required to pay the customs duty. Clear? So this question is actually connecting GST and customs. 2 points, okay, mainly GST, that exclusion from supply, sale on high seas and sale of warehoused goods. Next. You understood these 2 questions? Any doubts in this? Now, question number 3. X Limited is located in Ludhiana. It is GST registered with aggregate turnover of 20 crores. Means definitely they are registered. It is in the business of manufacture of cast glass. It has received the following services from different persons during December 2021. Okay. So they have given some transactions. What is it we need to determine? Discuss the applicability of reverse charge to the above transaction. So we need to check whether it is FCM or RCM. Now, what are the list of services which are covered under RCM? List of goods under RCM already we learned today. What are the list of services which are covered under RCM? Remember, Sir, CG, got, salads. So first you need to remember what are the list of services which are covered under RCM. So you can see that I have given as one summary table. You can check the book. This is in page number 32. Page number 32. List of services which are covered under RCM, that is given in notification number 13/2017. I told you to remember a mnemonic: Sir, CG, got, salads. S for security lending as per SEBI by lender of securities to borrower of securities. I am a lender of securities, you are borrower of securities, I am lending the securities to you. In that case, you need to pay me lending fee. On that lending fee, I will not pay GST, you will pay GST. Then I, import of services, recipient will pay GST. R for renting of motor vehicles. Another R for renting of residential property. So SIRR, S for security lending, I, import of service, RR, renting of motor vehicles, renting of residential property, that is immobile property. Okay. Then next, C for copyright services, and G for GTA services, goods transport agent service. See, these are all the services which are there in RCM. First of all, if the question is not about this service, you don't have to break your head, it will be always FCM. You got it? Sir, C, G. Again, yes, security lending, I, import of service, R, renting of motor vehicles, R, renting of immobile property, then C, copyright services, G, GTA services, then GOT, G for government services to business entities, O for overseeing committee. Overseeing committee is appointed by RBI for the purpose of restructuring the non-performing assets. RBI will pay GST under RCM. Okay. Then T, TDR, FSI, long-term lease. TDR is transferable development rights, floor space index, and long-term lease of land. What is considered as long-term lease of land? Lease for greater than or equals to 30 years. That is known as long-term lease of land. Sir, CG got salads in that, yes. That is sponsorship services, A for agent services, then L for legal services by individual advocate or firm of advocate, then A for arbitrator services, then D for director service, and finally S for security agency services. Now, check the question. First one is service by Department of Post by way of express parcel post. Department of Post means government. Government providing services to business entities covered under RCM. But we have some exceptions. So go to that place. Government services to business entities. In that government services to business entities, so only other services to business entities is covered under RCM, not Department of Post. Okay. So in case of renting of immobile property to an unregistered business entity, in case of supply of goods or services by Indian Railways, you write down some more points also. Department of Post, Department of Post, airport or port services, airport or port services, and number 5, transportation of goods or passengers. So these are the activities, these are the 5 activities on which FCM only will come, RCM will not come. Okay. So Department of Post, even though it is service provided by government, but it will not come under RCM, it will be FCM only. So there are 5 activities which will come under FCM even though provided by government. What are they? Number 1, renting of immobile property to whom? Unregistered person, unregistered business entity. Then Indian Railways, Department of Post, airport or port services, transportation of goods or passengers. Okay. Next. So therefore it is FCM or RCM? Department of Post by way of express parcel post, FCM, it will not come under RCM. Then for transportation of goods, X Limited pays 1 lakh to Indian Railways. Again, Indian Railways is government. Generally government to business entity will come under RCM, but we have exception. So Indian Railways will always be, see there, in case of supply of goods or services by Indian Railways, it will be FCM. Then next, X Limited GST registered has taken commercial property on rent from Punjab government, for which company pays GST, company pay rent of 2 lakhs. Again, it is services provided by government to business entity, correct? Ayya, Punjab government means government to business entity. Business entity registered or unregistered? So FCM or RCM? RCM, very good, because if that X Limited is unregistered, it will come in the first point in case of renting of immobile property to an unregistered business entity. Is it clear? Next, X Limited has taken security services for factory complex from Mumbai government, for which payment of 50,000 is made. Again, government to business entity. Is it covered in the list of 5 points? So RCM, very good. Those 5 cases only FCM, otherwise generally government service to business entity will be RCM. Then X Limited has taken security services for office from Task Force Security Limited, a private sector company, for which payment of 95,000 is made. Is it services provided by government? No. Security agency service, like that also one point is there. Just turn the page, last point, security agency service. security agency service. Sir CG got salads. Last point, security agency service. For security agency services, what is the condition for RCM? See the condition for RCM. Supplier should be other than body corporate. Other than body corporate means, who is body corporate? Private limited company, public limited company, or body under an act of parliament will come under body corporate. Who is other than body corporate? Individual, HUF, firm will come under other than body corporate. So see the first condition. First condition is that supplier should be other than body corporate and recipient should be registered but not opting for composition scheme or not registered only for deducting TDS. Now, who is the supplier in this case? Task Force Security Limited company, correct? Supplier is body corporate. For RCM, supplier should be other than body corporate. Here a supplier is body corporate, it will come under FCM. Okay. So first one is FCM, second one is FCM. First one RCM not applicable, second one is FCM. Third one and fourth one will be RCM, and last case FCM. RCM is not applicable. RCM not applicable means FCM only. Okay. Understood this third question also? Got the clarity? Next. Question number 4. Sarva Sugam Charitable Trust, a trust registered under section 12AB of Income Tax Act, provides the following information relating to supply of its services for the month of August. Usually a trust, either a charitable trust or a religious trust, which owns the buildings that will be given on rent, will be exempted provided they are giving it. So first there should be a trust, and that trust should be a religious trust and precincts of a religious place meant for general public. First it should be a precincts of religious place meant for general public. What is the religious place meant for general public? Religious place meant for general public. What is that place? Temple. Only temple? Mosque. Only mosque? Church. Only church? Gurudwar. Correct? There are many places, religious places, because India is rich in lot of religions, lot of faiths people are having. So everything is a religious place, correct? So that particular religious place, precincts means surroundings, will be given on rent by a trust, okay, will be exempted. You tell me for what purpose they will be giving it on rent? Hall, marriage hall, okay, not only marriage, hall. You do marriage, you do reception, or you do engagement, or you do name keeping ceremony, anything. Not only marriage, but all functions you can do, religious functions, and they will be giving their hall on rent. If the charges per day is less than 10,000, less than 10,000 means 9,999 per day, then it will be exempted. Next, for what other purpose they will give? Shops. For shops also, less than 10,000 rupees per month, then it is exempted, that is 9,999 per month, then it will be exempted. Then what else? What else? Temple. Other religious place. Religious place and all they will not give for exhibition and all, too much it is. Accommodation pa. What we will do? We'll go and sleep somewhere on the road. We take a room, no. Have you been to Tirumala? You take a room and you will stay, na. Almost many religious places, so they will be providing the shelter. For that you need to pay accommodation. That is also exempted if it is less than 1,000 rupees per day. Means 999 rupees per day. 3 exemptions. First, what is the exemption which I told you? There is a religious place meant for general public, that is registered as a trust, and its precincts is given on rent. If it is for accommodation, less than 1,000 rupees per day, exempted. If it is for hall, less than 10,000 rupees per day, exempted. If it is for shops, less than 10,000 rupees per month, exempted. Okay, I will show you this exemption which is in your book. Just go to page number 68. Page number 68. So, renting of the precincts of religious place meant for general public registered as a trust accommodation less than 1,000 rupees per day exempted. What if it is exactly equal to or greater than 1,000? Entirely taxable. Same way hall, per day less than 10,000 exempted. If it is greater than or equals to 10,000 per day, entirely taxable. For shop, less than 10,000 per month, it will be exempted. Greater than or equals to 10,000 per month, entirely taxable. Now, we will apply these points. Renting of residential dwelling for use as residence to an unregistered person. What is your answer for this 18 lakhs? Exempt or taxable? Exempt or taxable? One stand you take. Whether it is correct or not, we will see later. Exempted or taxable? Exempted. Why exempted? What made you to tell exempted? Renting of residential property for residential purpose to an unregistered person. Today we discussed one exemption. Do you remember? I have a residential property. Residential dwelling means what? Residential property. For what purpose I am giving on rent? Residential purpose. To whom I am giving on rent? Unregistered person. Not only to trust, to every person it will be exempted. So this 18 lakhs will be fully exempted. Next, renting of rooms for pilgrims. Charges per day 1,200 rupees. Exempted or taxable? Why? 1,000 or more, it will be taxable. Renting of room for devotees, charges per day 750. Why? Therefore, it is exempted. Sir, pilgrim, devotee, is it relevant, sir? That is not relevant. Whether they give it to devotee or whether they give it to pilgrim or they give it to one atheist who is not at all believing in God and he is coming for the sake of his parents, that is irrelevant. What we need to see is per day, what is the charges. Okay. Next, renting of Kalyana Mandapam, charges per day 15,000. Why? 10,000 or more, therefore it is taxable. Renting of halls and open space, charges per day 7,500. Exempted. Why? Less than 10,000. Renting of shops for business, charges per month 9,500. Less than 10,000 per month, so exempted. Renting of shops for business, charges per month 12,000. Taxable. Compute the total value of taxable supply. What you should do? This taxable alone you separate. 8 lakhs, 12 lakhs, 20 lakhs plus 7 lakh 50. So 27 lakh 50,000. This is how usually you get question on exemptions. They will give the list of transactions, amounts, whichever is taxable you need to take total, and that will be value of taxable supply. Got it? Next. And before writing this table, in the table itself we have given exemption, why it is exemption. This paragraph, if you have time you write, otherwise not required. This is about the provision, okay. But in the table itself, if you fill the information, that is sufficient, okay. Question number 5. A2X Services Limited, registered under GST, is engaged in providing various services to various educational institutions. Is the services provided by educational institution or to educational institution? To educational institution, okay. And the company provides the information in respect of service provided during the month of April. Related to services provided to educational institution, we have one exemption. So open your book, you can see that in education services, page number 61, page number 61. See here, any service provided by an educational institution to its students, faculty and staff will be exempted. This by or to? By. service provided by education institution to its students, faculty and staff will be exempted. Any service, whether they give food to the students or they provide transportation to the students, extracurricular activities, co-curricular activities, library fees, uniform fees, ID card non-wearing fees, attendance fees, any name, whatever money collected by education institution will be exempted. This is by education institution. When it comes to education institution, services provided to education institution, in that first one, if they provide transportation services, catering services, security or housekeeping services to education institution, means here what happens? Education institution is not providing, education institution is receiving. There is one person who is doing transportation service to education institution, or there is a person who is providing catering service, or there is a person who is providing security or housekeeping service, but the security or housekeeping should be within premises. These three, to which education institution is exempted? Only category 1. What is category 1 education institution? Up to 12th standard or equivalent. Why equivalent? In Tamil Nadu, 12th is part of school, but in Andhra Pradesh, Telangana, Karnataka, 12th is not part of school. 11th and 12th is part of a separate board. They call it as intermediate education or PUC, pre-university college, like that. That's the reason why they use the word equivalent. Whether it is called as school or not called as school, up to 12th standard will come under category 1. Is it clear? Category 2, that's the second point I told you. What is it? Education as a part of curriculum for obtaining qualification. UG, PG, professional, that will come. And finally, approved vocational education institution. Now, this first category institution, only these three services are exempted. What are the three services? Transportation, catering, security and housekeeping. Fourth point you see, admission to or conduct of examination is exempted for all three category institutions. Then supply of online educational journals. Admission to means what? Bringing admission to the institution. And examination, conduct of examination. What is conduct of examination? Setting the question paper, giving my premises on rent for conducting the exams, etc. That is conduct of examination. All three category institutions it is exempted. Last point, online educational journals and periodicals. You tell me for which institution online educational journals and periodicals will be required. School children will read journals, vocational education will read journals, who will read? Only category 2. So for them only it is exempted. Is it clear? For category 1 and 3 not exempted, taxable, only for category 2. So you have to remember in 3 simple points. Any service to education institution. First, transportation, catering, security and housekeeping within premises to category 1 institution is exempted. Then admission to or conduct of examination, all three category institutions exempted. Online educational journals and periodicals, only category 2 institution will be exempted. Now, you apply this and you are going to answer me. Okay, first point, transportation of students and staff of Lowell, a deemed university. Nice name, no? So, what is your answer? Taxable or exempted? Why? Deemed university means it will come under category 2, therefore it will be taxable. Next, catering service provided to rank CBSE school. Catering service to category 1 will be exempted. Security services to win CBSE school for its annual sports day held at Sai Sports Campus Complex owned by Government of India. Exempted or taxable? Taxable, because see there, security and housekeeping services should be in premises, means within premises. But here it is for a sports complex outside, not within the campus of the school. Okay. Next, supply of online periodical science journal to merit CBSE school for its higher secondary students. Online educational journals and periodicals is exempted only for category 2. Here it is school, therefore it will be coming under taxable. Service in relation to placement of students to skill a government recognized vocational training college. Service in relation to Placement of students. Where is it given? See, what we have is 5. First one is what? Transportation. Is it transportation? Number 2 is catering. Is it catering? Number 3 is housekeeping and security. Is it that? Is it admission to or conduct of examination? Is it online educational journals and periodicals? Means other activity. Other activity we don't have any exemption. Whatever exemption is only for 5 points. Other activities will be. So accordingly it will be taxable. So out of this only that second transaction alone is exempted and remaining and all will become taxable. Okay, taxable, and here also it is taxable, here also it will be taxable. Is it clear? Here they have not given the amounts. That's why we are just writing taxable exempted. If they give the amounts, we will put it like a table. Whatever is taxable, we will do the total and arrive at the value of taxable supply. Okay. So this one is related to education services. Question number 5. Now we are moving on to question number 6. Before that, there is one query to one friend in online related to this second question. Sir, T2 Limited is paying customs duty, correct? Because they file the ex-bond bill of entry, pay the customs duty and clear the goods. Along with customs duty, they pay IGST. Can that IGST be taken as credit? On import, we pay customs duty and IGST. Can the IGST component be taken as credit? Yes. IGST can be taken as credit. And what they can do with that IGST credit? They can set off against any GST liability. They can set off against CGST, SGST, UTGST, IGST, any liability they can set off. Okay. Next. Look into this question number 6. In the following cases, based on the information given and the query, give your comments on the taxability under GST and the rate of GST applicable if any. Renting of vacant land to a stud farm for rupees 1,50,000. Is it supply of service? Will GST be leviable? So what is your answer? Renting of vacant land to a stud farm. First of all, we need to understand, for renting of land, do we have any exemptions? Okay. So we have only 2 exemptions for renting of land. For renting of land, we have only 2 exemptions. First exemption is that I have a land and that I am giving on lease. So who is me? Government. Government giving land on lease to government authority or government entity, that is exempted. Whatever may be the lease, long term lease or short term lease, etc., and whatever may be the type of land and whatever may be the consideration, everything will be exempted. Okay, this is the first exemption. For land we have only 2 exemption, carefully listen. For immovable property, already I told you exemption, residential property, commercial property. For land we have 2 exemptions. So let me check whether I have given that. I have given. Page number 67 you can see. Page number 67. So there are only 2 exemptions for renting of land. What are the 2 exemptions? Number 1, upfront charges and annual lease rentals with respect to lease of land. By whom? Government. To whom? Government authority or government entity is exempted. Will it come under that category? No. This is a vacant land to a stud farm, not by government. Okay. Next. Second one, upfront charges including preferential location charges with respect to long term lease. What is long term lease? Greater than or equals to 30 years of industrial plots or plots for development of infrastructure for finance business. By whom? State government Industrial Development Corporation. You would have heard of SIDCO. Have you heard? SIDCO. State government Industrial Development Corporation. What type of land they are giving? Industrial land. For how many years? Greater than 30 years. And what is exempted? Only upfront charges is exempted. Is it covered under that point? No. So therefore under land we don't have any exemption. But we have an exemption, one more point. Any service in relation to agriculture or agricultural produce is exempted. Now will it come under that point? Just check. Go back, see the first transaction, agriculture related services, page number 53. Page number 53. See the first point. Any service in relation to agriculture or agricultural produce is exempted. What is the meaning of agriculture? Agriculture means cultivation of plants and rearing of all life forms of animals except the rearing of horses. Stud farm means horse farm. Got it? Generally, if I have a land which I am giving on rent for agriculture, the money received will be exempted. But agriculture excludes rearing of horses. So stud farm means horse farm. So what is your answer? Is it taxable or exempted? Taxable. You got the clarity how to interpret? Okay. Next, second one. A contract awarded by Kolkata Municipal Corporation for repair of a particular road to Messrs. B Limited with terms and conditions that entire work should be completed within 30 days. However, there is a delay of 10 days to complete the work. KMC charged liquidated damages of 1,20,000 and the same recovered from Messrs. B Limited. Applicable rate of GST 9%, CGST, SGST 9%. Who is liable to pay GST on what amount and total tax liability? Here government, municipal corporation, Kolkata Municipal Corporation means government. Remember, government collecting liquidated damages is exempted. Consideration for tolerating an act collected by government is exempted. Where is it given, sir? Government services it is given. So go to that RCM. In RCM we saw government services point. Government services to business entities, page number 33. Page 33. In that you see that point number 8 in the exemptions. Consideration for tolerating an act is exempted. So whenever government gives you a contract and you complete it late, for which you have to pay some damages, that money collected by government will be exempted. So this particular transaction is exempted and there is no tax liability. This is exempted. Next, third one. Messrs. X Limited paid penalty under section 49 of CGST Act 2 lakhs to the department in the month of October. Is it taxable under GST? Ayyo, on penalties and all there won't be any GST. Penalty under any law, fines and penalties under any law, there won't be any GST. Remember this. Traffic fine, no GST. You got it? Then Companies Act, some penalties will be there. GST Act penalties will be there. Income Tax Act penalties will be there. All these penalties, there won't be any GST on that. Okay. So again, there is no GST. First of all, it is not a supply. Not a supply. Such payment is not a supply of service. Fines and penalty chargeable by government or local authority is not leviable to any GST. Next. Messrs. M & Co, a sole proprietor, is in the business of selling furniture. Its owner took a set of furniture to furnish his house permanently. Will the transaction be supply in terms of GST Act? I have business. In that business I have a furniture. That furniture I took from my business for my house. Will it become supply or not a supply? What is your answer? Is it disposal of business asset? From business point of view, see, is it disposal of business asset? Yes. On which ITC should be availed. If ITC is availed, then only it will become supply. ITC on furniture, not availed. So will it become supply or not a supply? Not a supply. That point you remember now, disposal of business asset on which ITC availed. Yes, it is disposal of business asset only, but ITC is not availed. Consequently, it is not a supply. So transfer of furniture by owner without consideration is not a supply because ITC is not availed. Got it? Sir, but sir, owner and business is same only, na sir? No. We have business entity concept in accounting. You know that? What is that business entity concept says? Business is different from the owner. That's the reason why when owner deposits capital, we pass a journal entry. Correct? Am I right? To capital account like that we create. And whenever the owner withdraws money, drawings like that we create. Correct? So even though the owner is running the business, but for accounting always we will treat owner and business as different persons. Okay. Next. Look into question number 7. There is one query. Fifth question, fifth point. Fifth question, fifth point. Okay. Won't come under service to prospective student category? No. Definitely no. Because it is not service provided to student. It is not service provided to student. It is service provided to college. Read carefully. Services, I am providing service. What service? Placement service. Okay. To whom I am providing? To a college. So will it come under service provided by educational institution or to educational institution? To educational institution. Okay. Next. Question number 7. This is related to banking sector. Romeo Small Finance Bank Limited is engaged in providing financial related services and of various types of loan facilities to its constituents, furnishes the following information relating to various service provided and the gross amount received during the month of December. Now listen, for banking we have certain exemptions for banking sector. What is the first exemption for banking sector? Just now I told you, interest on loans, advances, deposits is exempted. What about other consideration? Processing fee, documentation charges, etc. and all will be taxable. Now read the first point. Commission received for debt collection service, taxable. We don't have any exemption with respect to it. Discount earned on bills discounted. Why? Interest or discount on loans, advances, deposits is exempt. Penal interest recovered from the customer for delay in payment of loan. Now listen, wait. If the loan interest is exempted, the penal interest is also exempted. If the loan interest is taxable, then penal interest is also taxable. What is penal interest? If you are not repaying a EMI, they will be collecting some interest, that is called as penal interest. Generally interest on loan is exempted. Correct? Generally interest on loan is exempted. So this penal interest is also exempted. Okay. Next. Commission received for service rendered to government for collection of taxes. We don't have any exemption with respect to that, therefore it will be taxable. Interest earned on reverse repo transaction, interest, therefore exempted. Then service to merchants accepting credit card, debit card payments using point of sale machine of bank. In 30% cases the amount per transaction was up to 1800, while in other cases the amount was exceeding 2000. So we have one exemption here, that is processing fees. Processing fees on card transactions is exempted if the swipe amount does not exceed 2000. So in 30% of the cases the amount per transaction was up to 1800, means on that processing fee GST will be exempted, whereas other cases the amount was exceeding 2000, on that processing fee GST is taxable. So this 20 lakhs, 30% will be exempted. What is 30% of 20 lakhs? 6 lakhs is exempted. What is the remaining portion? 14 lakhs. That 14 lakhs alone will be taxable. Got it? Are you getting this? Next. So this 14 lakhs will be taxable. Remaining is exempted. So what is the value of taxable supply? 10 plus 5 plus 14. 10 plus 5 plus 14, 29 lakhs. On the 29 lakhs, the rate of GST is 18%. So 5 lakh 22,000. Got it? All the services related to banking sector I have given in the exemptions for banking. you can see quickly, we can complete the discussion. Page number 54. Page number 54. So these are the various exemptions for banking sector. First one I told you, transaction in money. If the transaction in money is for a separate consideration, and if the consideration is represented by way of interest or discount on loans, advances, deposits, then it will be exempted. What if it is credit card interest? That will be taxable. Generally, interest on loans, advances, deposits will be exempted, but credit card interest will be taxable. What is credit card interest? When you use your credit card and convert into EMIs, you pay the interest now. On that interest, there will be tax. Any other consideration? What is any other consideration means? Documentation charges, commission, demand draft charges, or check bounce charges, anything, okay? Any other consideration including interest in case of credit cards will be taxable. What if transaction in money is without consideration? It is neither goods nor services. Next point, there is a bank which is providing services to basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana. Under PM JDY scheme, there will be some nil balance accounts. To that nil balance account holders, if bank provides any service, that service will be exempted. Then foreign exchange transaction, between whom? Between banks is exempted. Between forex dealers is exempted. Between bank and forex dealer is also exempted. Then when it will be taxable? Between bank or forex dealer and the customer. Then only it will be taxable. This is the point which I was referring to. Service by an acquiring bank. There is an acquiring bank to any person in relation to settlement of an amount up to 2,000 in a single transaction. Basically, what acquiring banks will do the processing. For example, you use your debit card, credit card and swipe the money. So they will, Paytm is an acquiring bank and lot of acquiring banks are there. What they do, they take money from your account and credit in the vendor account. For doing this, they will collect 1.5% or 2% as the processing fee. On that processing fee, GST is payable or GST is exempted. GST is exempted, provided the transaction amount does not exceed 2,000. So that is GST on processing charges for a transaction up to 2,000 rupees is exempted. Then next one, there is a business facilitator or a business correspondent who are like agents of the bank. Business facilitator and business correspondents are like agents of the bank, and if they are appointed in rural area, the commission earned by them will be exempted. What if they are appointed in urban area? Then the commission will be taxable. So not only business facilitator, business correspondent, even they will have sub-agents. Agent of business facilitator and correspondent, that is also exempted. So 4 people you should remember. Who are the 4 people? Business facilitator, agent of business facilitator, business correspondent, agent of business correspondent. Where are they working? If they are appointed in rural area, for which the commission earned by them will be exempted. Okay. Then next one, there is an intermediary. 6th point, there is an intermediary of financial service located in a multi-service SEZ. There is only one multi-service SEZ in India, that is Gift City, Gujarat. Gujarat International Fintech City is a multi-service SEZ. In that multi-service SEZ, there is one intermediary who is providing services to their customers outside India. Okay. Then whatever money received by them will be exempted. Won't it become export of services? No. Why it will not become export of service? Already I told you, in case of intermediary services, the place of supply will be location of supplier. In order to become export of service, the place of supply should be outside India. But in this case, the place of supply is India. That's why it will not become export of service, but it is exempted. So these are the various exemptions for banking sector. And based on that, this type of question will be coined. Okay. Next, look into question number 8. This is mix. So far, whatever questions we saw was like sector wise. Banking sector, one question, and then renting, one question, like that they will give. Sometimes what they do, they will mix multiple sectors and they will give a common question that covers multiple transactions. Okay. So see this. Measures A to Z, a proprietary firm registered under GST is engaged in providing various services under one roof. The firm provides the following information pertaining to supplies made or input services availed by it during the month of March 2022. Amount collected for loading, unloading, packing and warehouse of potato chips. What is your answer? So amount collected for loading, unloading, packing and warehousing of potato will be potato chips. Taxable or exempted? Taxable. Why it is taxable? First of all, it is not agricultural produce. Generally, any service in relation to agriculture or agricultural produce is exempted. But first of all, potato chips are processed, it will not come under agricultural produce. So you can see the meaning of agriculture and agricultural produce. I have given this now, just read it once. The meaning of agricultural produce, page number 54. Okay. So what is the meaning of agricultural produce? Agricultural produce means any produce out of agriculture on which either no further processing is done or such processing is usually done by a cultivator or producer which does not alter its essential characteristics but makes it marketable for primary market. Then only it will be called as agricultural produce. Means the primary produce out of agriculture. From agriculture we get something, the primary produce out of agriculture. For example, tender coconut is an agricultural produce and some processing is done. So we peel off the layer and inside we have coconut, that is also agricultural produce, and we sun dry and remove the shell, we get copra, that is also agricultural produce, because it does not change the essential characteristics. But potato chips is processed, that will not come under agricultural produce. So generally any service in relation to agriculture or agricultural produce is exempted, but this potato chips is not agricultural produce, due to that reason it will be taxable. Then next, fee paid for yoga camp conducted by a charitable trust registered under section 12AB of Income Tax Act 1961 for employees of the firm. What is your answer? Exempted. So why it is exempted? There are certain exemptions with respect to charitable trust. In that one point says, if there is a charitable trust providing some list of charitable activities, it is exempted. What is that charitable activity? So number one, first charitable activity is public health. So any health related activities if they provide, that is exempted. Number two, advancement of religion, spirituality, yoga. Okay, under that yoga it will come. There is a charitable trust which is providing yoga camp, therefore it is exempted. You can see that information in charitable activities. So it is there in page number, where is it? 59. Page number 59 you can see. Services by an entity registered under section 12AA of Income Tax Act by way of specified charitable activities. What are the specified charitable activities? I told you, first point, public health. Second point, advancement of religion or spirituality or yoga. Number three, educational programs to orphans or physically, mentally traumatized persons or prisoners or persons over 65 years. But where the persons over 65 years should be? In rural area. Then last one, environmental preservation. And why this particular transaction is exempted? It will come under advancement of yoga. Read the question again. Fee paid for yoga camp conducted by a charitable trust registered under section 12AB of Income Tax Act for employees of the firm. Okay, next. Third point, interest received on fixed deposits with Apna Bank by the firm. What is your answer? Interest on loans, advances, deposits will be exempted. Then professional services provided to foreign diplomatic mission located in India. Actually, foreign diplomatic mission, there is an exemption, but it is not services provided to foreign diplomatic mission, service provided by foreign diplomatic mission. Same page above, page number 59, there is one, services by specified organizations. In that services by specified organization, you can see foreign diplomatic mission. So it is confusing. They gave service provided to foreign diplomatic mission, but only service provided by foreign diplomatic mission is exempted. This is service provided to foreign diplomatic mission. So generally service provided to foreign diplomatic mission will be taxable. Recovery agent service provided to ABC Finance Limited and NBFC located in Delhi. This is also taxable. For recovery agent, we don't have any exemption. So it will be taxable. Because they are asking, determine the GST liability of measures A to Z for the month of March 2022. First we are writing taxable and exempted. If it is exempted, there is no question of payment of GST. If it is taxable only, I told you first you need to check supply. What is the next thing that you need to see? Is it taxable or exempted? Then you need to see whether it is FCM or RCM. First we are talking about taxability, then we will see about FCM, RCM. Next, security services provided to XYZ Limited. So do we have any exemption for this? No, it will be taxable. For security service we saw one exemption only. What is that? Security and housekeeping service within the premises to category 1 education institution. Then receipts from running an education institution, a senior secondary school, for services provided to its students, including receipts for providing residential dwelling. I told you, any service provided by education institution to its students, faculty and staff will be exempted. So accordingly, even boarding, that is hostel facility provided by education institution, is also exempted. So this 35 lakhs is fully exempted. Then supply value including cost of fuel for provision of renting of motor vehicle service to NPS Limited. Renting of motor vehicle, we don't have any exemption here particularly. We have some exemptions, but that is not applicable here. So therefore it will be taxable. Okay. Now, so here see this. Wherever it is taxable, now you need to check whether it is FCM or RCM. Okay. So look into this. Amount collected for loading, unloading, that is taxable na. What are the list of services covered under RCM? Sir, CG, got salad. Is it covered under that? No. So therefore it will be FCM. By an exam also you understood now what you need to do. First you need to check whether it is taxable or exempted. And thereafter you need to check whether it is FCM or RCM. Okay. Now, what is the next one taxable? Professional services provided to foreign diplomatic mission located in India. Do we have anywhere in RCM this? Sir, CG, got salads? No. So, good, FCM. Next, recovery agent service provided to ABC Finance Limited and NBFC located in Delhi. FCM or RCM? We have list of service under RCM na. In that I told you agent services. Go to your book and see the agent services. See the agent services. In that agent, can you find recovery agent? Page number 34. Okay. So recovery agent to bank or NBFC. So here you can see recovery agent is covered under RCM, recovery agent service. So recovery agent to bank or NBFC is covered under RCM. Means who will pay GST on that? Recipient will pay. A to Z will not pay. Is it clear? Next. Security services. For security service I told you what is the condition. Supplier should be other than body corporate. Here who is the supplier? Proprietary firm. So other than body corporate. Recipient should be registered but not opting for composition scheme and not registered only for deducting TDS. In this case, recipient is registered person. So therefore it will come under RCM. Then last, renting of motor vehicle. For renting of motor vehicle also we have RCM. See there, renting of motor vehicle. Page number 32. Renting of motor vehicle is also in RCM. What are the three conditions for RCM? See the first condition. First condition is what? Supplier should be other than body corporate. Correct? Supplier is other than body corporate. Proprietary firm. Correct? Recipient should be body corporate. So check who is the recipient. NPS Limited. Body corporate. Then rate of GST should be 5%. So for renting of motor vehicle given below, rate of GST 5%. So it is also covered under RCM. Now in the hands of A to Z, what will be the value of taxable supply? In the hands of A to Z. See, when the question is determine the value of taxable supply, full stop. You have to just take taxable, total it and write. When they give the question, so far if you see previous question and all, compute the value of taxable supply, like that only they gave. They did not check, compute the value of taxable supply in the hands of the bank, compute the value of taxable supply in the hands of the supplier, like that they did not ask. Are you getting this? But in this question, they are asking compute the value of taxable supply in the hands of A to Z. So means supplier point of view. So whatever is RCM, don't add it to supplier liability. Is it clear? So which and all should be taken to supplier liability? 15,000, then 50,000. That's it, na? 50 and 15, only 1 and 2. All other cases it will be RCM. So therefore it will be not added to the A to Z liability. Got it? Now this is the place where you do the mistake. What you do, this taxable and all is there, na? That also you will put it in the column, because of which you will lose marks. Got it? Read the question carefully, then you will know what to answer. Okay? Clear here this question? Any doubt in this? Okay. Look into question number 9. So one student has messaged that I am degrading CMA and promoting CA, etc. and all. Nothing of that sort. I don't have any such feeling. Okay. First of all, it is like I am not a person to argue about CA or about CMA, because I don't take any side. If I take the side, then I should do only CMA in my life. I have done both CA as well as CMA, which means I cannot take a stand that CMA course is only best, CA course is only best. First of all, both the courses have its equal importance, and CMA course, if you really wanted to make your finance, core finance as your career, because CMA course is based on 3 pillars: costing, finance and taxation. So therefore people will go for it. Some people who want to go for accounting, taxation and audit, they go for CA. It's about the choice. And difficulty, yes, I do agree. CA course is difficult because more number of people are there and they want to cut down the pass percentage, etc. CMA course, they want more people because CMA course more of jobs only. So they need more people, so they give more pass percentage. Now, why will I take a stand? Why will I tell? But CA Institute also I am scolding. CMA Institute also I am scolding, for your information. And only those students who attend my CA class will know, they know how much I am scolding CA Institute. And CMA Institute also I am scolding. As a teacher I need to scold. Why? Because they are not doing proper justice to the students. Are you getting this? If they do, why will I scold? I am scolding both. I am not scolding the profession. Okay? I am scolding the institute in terms of conducting the examinations, etc. and all. Okay? Fine. So please, just for the sake of putting something, don't put in YouTube and all. I am not of that kind, pa. Then coming back to this question number 9. Swasya Nursing Home, a clinical establishment, offers the following services. So this is related to healthcare services. Okay. So for healthcare services, you can quickly look into the exemptions for healthcare service. You check page number 56. Healthcare services following are exempted. First point, healthcare services provided in a clinical establishment by an authorized medical practitioner or by a paramedics, including ambulance services, will be exempted. So therefore, what is the meaning of healthcare services? Generally healthcare services means pre-treatment. Before treatment, what they do? Diagnosis, X-ray, scanning, test, all these also coming under healthcare. treatment, that is surgery or operation. Then post treatment. What is post treatment? Care, keeping the patient in observation. All this is healthcare. For what purpose? See here, pre-treatment diagnosis, treatment, post treatment for any disease, illness, injury, pregnancy, including transportation in ambulance. They have given two places ambulance. One is transportation as a part of healthcare. Another is separately also they have given ambulance. So if you receive ambulance service, whether the hospital is providing healthcare service or not, but the ambulance service alone will be exempted. You understood? You book an ambulance to go to one hospital, but in that hospital they are telling we will not provide you the treatment because we don't have the facility. You go to a different hospital. Now first hospital ambulance is also exempted even though they are not providing any treatment. Is it clear? Now from first hospital to second hospital, another ambulance you are going, and the second hospital is providing the treatment, that is part of healthcare service, that is also exempted. But remember, only transportation of patient in an ambulance is exempted. What about transportation of dead body in ambulance? Not a supply, excluded from supply, death related, funeral, burial, etc. Okay. What about transportation of passengers in ambulance? Taxable. Ambulance is going, dropping the patient, while returning it has to come empty na. So some 5 passengers they have boarded and they collected 200 rupees from passenger. Taxable or exempted? Taxable. Only transportation of patient is exempted. Okay. Then next, but does not include cosmetic surgery, plastic surgery and hair transplantation. That will not come under healthcare service. Correct or not? How it will come under healthcare? Yeah? It is related to beauty of a person. That is not healthcare services. And other than, suppose if these 3 are carried out to restore the anatomy of body parts affected due to congenital defects, by birth itself there is some issue for which they receive cosmetic surgery services, exempted, or developmental abnormalities, injury or trauma, then also it will be exempted. Next, provided in a clinical establishment, authorized medical practitioner, paramedics including ambulance services. But remember, all services provided by hospital will be exempted except room charges. Room charges is exempted provided the room charges is up to 5,000 rupees per day. If the room charges exceeds 5,000 rupees per day, then entirely it will be taxable. See here. Room charges collected by a clinical establishment for providing healthcare services, ICU charges, CCU charges, ICCU charges or NICU charges, it will be exempted. Any other room charges, if the charges does not exceed 5,000 rupees per day, then it will be exempted. If the charges per day exceeds 5,000 rupees, entirely taxable. But this is only for other room charges. For this ICU charges and all, whatever may be the amount, that will be exempted. Then next one, previously we had cord blood banks as exemption. Now it is removed, which means it will be taxable. Also biomedical waste treatment operator, like that one point was there. Now it is omitted, which means it will be taxable. Next exemption you see, healthcare services in relation to animals or birds is also exempted. Okay, veterinary clinic services. Then if there is a consulting doctor who is providing service to hospital, not directly to the patient, to the hospital. Consulting doctor collect money from hospital, hospital collect money from patient. Hospital collecting money from patient is also exempted, and the hospital making payment to consulting doctor is also exempted. Then whether IVF treatment also will come under healthcare services? Yes, IVF or infertility treatments and all are there. Now that is also healthcare services. And the healthcare service can be in any recognized system of medicine. What are the recognized system of medicine? Allopathy, naturopathy, Siddha, Unani, homeopathy, these are all some recognized system of medicines. Then services by rehab professionals. Who is a rehab professional? The one who is providing care or counseling, okay, related to the mental illness will be coming under rehab professional. They are not called as authorized medical practitioner. They will not do MBBS. They will be doing MSc psychology, okay. And these rehab professionals, if they are working in medical establishments, that medical establishment may be government or trust or private, it will be exempted. If they are working in educational institutions, then also whether it is government, trust or private, it will be exempted. If they are working in rehab centers, if it is government or trust, it is exempted. If it is private, it will be covered under taxable. Then next, there is a hospital which is providing food to inpatients. What is your answer? It will be exempted. And there is a hospital which is providing food to outpatients, visitors or staff. Then it will be taxable. Got it? And who are inpatients? Those who are admitted in the hospital. Who are outpatients? Who come for consulting. Okay. Then hospital is giving its premise on rent to outdoor caterer. Even that is also exempted? No, that is taxable. That's not a healthcare service. Then, so hospital is selling medicines to inpatients. Is it healthcare service? Yes. So exempted. What if they are selling medicines to outpatients? It will be taxable. Outdoor caterer not allowed to supply food to inpatients. Sir, won't the outdoor caterer give food to inpatients? Usually no. But if they are giving food to inpatients, means it is approved by hospital. So therefore it will come under exemption. See this. Outdoor caterer not allowed to supply food to inpatients in hospital. If it is sold to inpatients, it is treated as authorized by hospital and it will come under exemption. These are the various points for healthcare services. Now you need to answer this question. Swasthya Nursing Home Clinical Establishment offers the following services. Number 1, rooms provided to inpatient where the room charges per day is 6,500. What is your answer? Taxable. Why it is taxable? Because it exceeds 5,000. Entirely taxable. Okay. Plastic surgery conducted to repair cleft lip of a newborn baby. Generally, cosmetic surgery, plastic surgery is taxable. But if it is to restore anatomy of body parts affected due to congenital defects means by birth, then it will be coming under exemption. Air ambulance service to transport critically ill patients from distant location to Swasthya Nursing Home. Ambulance service for patient is always exempted. Let it be air ambulance or road ambulance. Air ambulance means what? Helicopters, flights, etc. Okay. Next, supply of food to inpatients as per the advice of the doctor or nutritionist from its restaurant Annapurna Bhavan located in the basement of Swasthya Nursing Home. What is your answer? Exempted. To inpatient. To inpatient. Huh? Even if it is from a outdoor caterer to inpatient, it is approved by hospital. That's why it will come under exemption. Okay. Then the food is prepared by its employees. Here it is not outsourced. Their employees only preparing, means it is hospital only. And nothing is outsourced to any third party vendors. Okay. Next. So it is exempted. Homeopathy medical treatment exempted. Why? Recognized system of medicine. So first one alone is not exempt. Remaining and all will be coming under exempt. There is one more paragraph. Swasthya Nursing Home also operates a cord blood bank which provides service in relation to preservation of stem cells. What is your answer? Taxable. Previously cord blood bank was exempted, but now they have made it as taxable. Okay. Exemption available to cord blood banks is now no longer be exempted, so therefore it will be coming under GST. Now they are asking determine the GST payable. They have not given amounts. That's the reason why we will write separately taxable or exempted like that. Next. This is related to change in rate of tax. In time of supply, there is one section, that is section 14, which talks about change in rate of GST between 3 dates: date of completion, date of invoice or date of payment. Between these 3 dates, if there is a change in rate of GST, how to determine the time of supply? That is given in section 14. We will first read the provision and then we will come back to this. Okay. So please look into that section 14 points. It is in time of supply chapter, page number page number 19. Yes, page number 91 you can see. Time of supply in case of change in rate, and basically when this section 14 will be applicable only in case of services, also in case of supply of goods by a person opting for composition scheme or specified actionable claim. What are the specified actionable claims? HC blog, we discussed now. H for horse racing, C for casinos, B for betting, L for lottery, O for online money gaming, and G for gambling. Okay. Now See this. First we need to check the date of completion when the service is provided. Whether the service is provided before change in rate or after change in rate, we need to see. If the service is provided before change in rate, it is simple, always invoice date or payment date, whichever is earlier. Okay, pa? Between 3 dates, first there is a change in rate. In that you need to see whether the supply is before change in rate or after change in rate. If the supply is before change in rate, then we need to see completion date or payment, invoice date or payment date, whichever is earlier. So date of invoice or date of payment, whichever is earlier. Suppose if the completion is after change in rate, both invoice and payment before change in rate, then whichever is earlier. If one before, one after, whichever is later. Got it? Just 3 points. Completion before change in rate, whichever is earlier. Invoice or payment, whichever is earlier. Completion after change in rate, but both invoice and payment before change in rate, whichever is earlier. One before, one after. Payment before, invoice after, or invoice before, payment after, whichever is later. Now what should be considered as the date of payment? That is crucial. If the payment is credited within 4 working days from the change in rate, then we need to take, so date of entry in the books or date of credit in the bank account, whichever is earlier. If the payment is not credited in the bank account within 4 working days from the change in rate, the date on which the payment is actually credited in the bank account only should be taken. Please look for this information in the question, because this is where we usually make a mistake. Say this. Date of payment for section 14 is date of entry in the books or date of credit in bank account, whichever is earlier, when if the payment is credited within 4 working days from change in rate, or date of credit in bank account if the payment is credited after 4 working days from the change in rate. Is it clear? Now applying this, keep this page, we are going to solve this question. Carefully see this. Mr. Mahendra Sharma, an interior decorator registered at Ahmedabad, Gujarat, provided service to one of his clients, XYZ Company Limited. Interior decorator service. Registered at Pune, Maharashtra. The provision of service is complete on 10/8. Date of completion 10/8. Okay. Date of completion 10/8. Now, you just take your notebook somewhere rough page. You write down this information. DOC 10/8. DOC 10/8. Date of completion 10/8. Okay. Next. Date of completion is 10/8. And payment was entered in the books of Mr. Mahendra Sharma on 11/8. Wait, don't conclude, because if the payment is credited within 4 working days, then only entry date or credit date, whichever is earlier, will be taken. Now continue further. With effect from 16/8, the rate increased from 5% to 12%. So write down next one. Change in rate. First one you have written date of completion. What is the date of completion? 10/8. Next, change in rate. What is the change in rate? 16/8. 16/8. Supply before change in rate, after change in rate? 10/8. Before 16/8, after 16/8? Before 16/8. 10 will come before only, no? I will leave you here. Don't worry. After this question, I will leave you. But 10 will come before 16 only, na? Correct. So supply is before change in rate. When supply is before change in rate, what is the provision? Invoice date or payment date, whichever is earlier. 1 point. Okay. So for that reason only we need to know when the supply happened, whether the supply is before change in rate or after change in rate. Accordingly, the time of supply will change. Now, however, the payment for the service received was credited in the bank account on 17/8. Whether the payment got credited within 4 working days from the change in rate. What is the change in rate? 16/8. When the payment got credited? Within 4 working days. Next day itself the payment got credited. Correct? So what should be taken as the date of payment? Entry date or credit date, whichever is earlier. Write down DOP. Write down DOP. What is DOP? Entry date. What is the entry date? 11/8. 11/8, right, 11/8 or 17/8, whichever is earlier, that is 11/8. You got date of payment. What is the next thing that you need to know? Invoice. Invoice for the same was raised on 23/8. Write down DY 23/8. DY 23/8. You got all the dates. First one, date of completion. You need 4 dates. Date of completion, change in rate, date of payment, date of invoice. You got all this data. Correct? Now, whether the completion is before change in rate or after change in rate? Before change in rate. When the completion is before change in rate, we need to take invoice date or payment date, whichever is earlier. What is invoice date? 23/8. What is payment date? 11/8. Whichever is earlier? 11/8. So therefore, time of supply, write down, time of supply is 11/8 or 23/8, whichever is earlier. 11/8 or 23/8, whichever is earlier, that is 11/8. As on 11/8, old rate or new rate? Old rate. What is the old rate? 5%. That is 5%. You understood the answer? Clear? See here. So the time of supply will be 11/8 and the rate will be 5%. Mr. Mahendra Sharma claimed that he is liable to pay IGST 5%, but department took the view that he is liable to pay at 12%. Is department correct or Mahendra Sharma correct? Mahendra Sharma is only correct. Understood up to this? Now another part. Say this. Would your answer undergo any change in the above case if the payment was credited to the bank account on 14/8 instead of 17/8? Will it change? Change in rate when payment got credited within 4 working days. Yes, even before change in rate itself payment got credited. Correct or not? So our answer will not change. Our answer will remain the same, because again what will be taken as the date of payment? 11/8 or 14/8, whichever is earlier will be 11/8. Means entire story will be same. You got it? So answer will not change. If the payment is credited to bank account 14/8, so consequently with the other things remaining the same, the time of supply and applicable rate of tax will remain the same. So we completed in Mighty 50 10 questions. So the remaining 40 questions we will see later. And here related to change in rate I gave one question. This you try at your end. Okay, this question number 18 is one question on change in rate. This also you try at your end. Okay. So one student is asking me, please tell important theory questions. Definitely I will do that, don't worry. I will tell what are the theory questions, you prepare based on that. Don't ask me to discuss the theory questions. I will give you the list of important theory questions, you prepare based on that. Okay, I will do that. I will consider that and I will do. So because I have to check your papers once and see what are all the areas, possible areas which they will be asking. So based on that I will give you the list. I will put it in my Telegram channel itself so that you will be able to see that. Okay, and you can join the Telegram channel, and there is IDT queries group like that. You can join that group and you can post your query and I will reply. So till the exams, your exams, I will be there. So whatever queries that you have, you can post it in that. Okay. Now that I am relatively free, completely free, because CA exams got over, and so CA new batch I am commencing in June first week only. Anyhow your exams will be that time only, so I am available. Don't worry, whatever doubts you have you can post it. Okay. But make use of this time effectively. Don't waste your time as you are writing CMA final exam. I can give you one insider information that they need lot of CMAs, because job market for CMAs is so good is what I heard of. So because of which the pass percentage will be decent. If you put little bit effort, you can come out. But future, I don't know. They will definitely cut down. Today, as there is a need of lot of people, they release. but definitely this may not continue in future and they will stop. So due to that reason, you should not get stuck. Put the effort, maximum what you can, and definitely will be able to clear. Okay. And my advice is that rather than writing, like single group, if possible, write both groups, because very less number of students will write both groups. There is a chance of getting the rank for a normal fresher versus rank. So the salary will be close to 6 lakhs difference is there. If you are a ranker, your salary package will be somewhere in 18 lakhs. And if you are non-ranker but cleared in first attempt, so your package will be 12 lakhs to 14 lakhs like that. So the difference makes, because from there only your career will grow. You understood what I am telling? Try. If you are writing for June and if you have already decided, you can't do anything. Suppose if you are planning for December, try to write both the groups, because less number of students will write and there is high chance of getting rank. Unlike CA final exams, in CA final exams everyone invariably write both the groups, so competition is high. But CMA final, usually lot of people will go for job. The moment they complete CMA intermediate, they go for job. Because they are going for job, they will not be writing both the groups. Very less number of students only will write both the groups. So if you write and if you get a decent score, that is average 60 marks, you will be somewhere in 1 to 50. This fact I really saw in the last attempt. Last attempt, around 14 students of ours got ranks between 1 to 50. And I suggested them the same. I asked them, and they were not actually, that much studying, etc. and all. I need to tell you that also. So I told them, see, plan it and write both the groups. They skipped one attempt and they wrote in the last attempt both groups and they got ranks. Now they are very much happy because lot of PSUs are recruiting CMAs. So recently also in campus placement, if you see SAIL, that Steel Authority of India, then BEML, like these companies and all are recruiting and decent pay they are giving. So like on an average they are giving 18 lakhs, 16 lakhs package and all. Of course, some people in social media will tell, so everything is cheating, etc. and all. See, I don't know all those things. First thing I need to tell you, whatever CMA institute releases is only what we need to trust. If they themselves are cheating, then why will they cheat? I don't know. Why will they cheat? Will institute cheat and all by giving fake information? So they will have ethics, no? I don't think so they will do that. If they do, I don't know. But based on whatever data they have released, so decent. And personally, I have seen my student who is a ranker in both CA as well as CMA. He went to CA campus placement. He not got selected in CA campus placement. But in CMA, he got selected for 19 lakhs package. You understood? Because this PSUs, manufacturing companies, are not going for CA placement. They are coming for CMA placement. So ranker means definitely there is a chance of getting job. Why are you studying actually? For job only, na? Or just to pass the time you are studying? No. Career is important. That's why I am telling you. Okay. If you are writing for June, decided that one group you are writing, you write whatever is your plan. But if at all there is a scope that you are planning anyhow in December, write both the groups. Okay, that's my personal suggestion. Fine. Thank you. We'll meet tomorrow, same time, 9 o'clock, 9 to 6. Okay. Thank you.